strong economy and monetary policy that might not yet be sufficiently tight, the risk is that disinflation progress might stall. Sonal, I'm pleased to say, joins us right now. Sonal, I've been looking forward to this conversation all morning, and I had one question I wanted to ask you. Do you think we are sufficiently restrictive off the back of these moves we've seen over the last couple of months?
So, if we're talking about monetary policy, I'd say the evidence practically speaks for itself. Look at where unemployment is. Look at where this economy is. Absolutely, the labor market has begun rebalancing. I accept that. But everyone has just looked at the delta in terms of how much rates have gone up. And I accept they've gone up a lot. But you know something? Inflation should have come down a lot more. And I think we have been conditioned by the extremely abnormal low interest rate environment we've been in since the global financial crisis. Before that, from the 1950s until 2007 or so, this economy did just fine with short-end rates at being around 5%.
Are you saying that the Fed is also implicitly acknowledging that we're not sufficiently restrictive based on the forecasts and all that they put out recently?
Essentially, that is what they're saying, isn't it? They are saying, I have heard a lot of criticism of the Fed's forecast, saying they're unduly optimistic because they haven't revised unemployment that much. They haven't revised growth that much. But essentially, what we are seeing is higher rates. That's another way of saying that the actual underlying natural rate is probably higher. It's a stronger economy. It can bear somewhat higher rates. That's what I would take away from it. I happen to agree with them. So in this particular instance, I'd say I'm very much on board with what the Fed is saying here.
It begs the question, how will you know when we've fully internalized high for longer? How will you know when we are truly sufficiently restrictive?
So I think that you do know, because here's the thing. We will continue to see some pickup in unemployment. I think there's a lot of obsession over 0.1 moves. Again, for the longest time, full employment, unemployment, the Naira in this country is closer to 5%. It's not closer to 3.5 or 4. So there is space for unemployment to go up. That is clear. Now, are we there at that point? It doesn't appear that we're anywhere close to there at this point. If I look at the recent move in treasuries, I think there is some absorption of this idea of higher for longer. I think we've got underlying fundamental reasons in terms of inflation. Inflation actually gets tailwinds right now between wages and oil prices and a host of other factors. And long-end yields actually have headwinds coming from technical factors, from both demand and supply, right? If you look at deficits, if you look at a variety of other factors of lack of demand, all of these factors, I think, are feeding in. But I don't think it's going to be a steady climb, right? The pace of the recent move in long-end rates, I think, to some extent, captures a certain amount of sentiment-driven concern from everything from government shutdown onwards. But I do think the direction is correct. I think long-end yields are likely to move higher, not consistently lower.
What kind of numbers, Sonal, do you think we can tolerate? And when I ask that question, I don't just mean from an economic perspective, I also mean from a markets perspective as well. At some point, as you know, these things can become self-limiting. It drives the demand because it inflicts so much damage elsewhere on the market. What kind of numbers are you thinking about?
I think you could, so again, if I take a step back, Jonathan, and I say, okay, supposing the Fed is talking about, we take at face value the Fed's SEPs, and you end next year with Fed funds between 5 and 5.25. Now, Fed funds would only be at that level if we were not in a recessionary environment. If that is the case, you'd get an upward sloping yield curve, and fair value would tell you you'd need to be closer to 6%. I don't think we'll be there. I think we will be lower than that. Can the market absorb it? Depending on the pace, probably yes. There's a lot of concern on the commercial real estate front. These tend to be, it's still different from the mortgage issues that we saw in 07, 08, which were residential, so spread across the board. Commercial real estate is likely to be localized to those areas which have had the most pain, and thus to regional banks, for example, that have the most exposure. I'm not saying that we won't have stress. We will. The question is the quantity of stress and whether that would be enough to actually get the Fed to change what it believes is the correct course of action right now.
Okay, let me squeeze this in then. So, no favourite idea right now? I assume it's not going along the 10-year. What is it?
No, I think what we are doing is we are looking at value. Look, income is really important. We're seeing that whether it's in investment grade, mortgages, MBS. If you look at the MBS space, there are a variety of areas which MBS will give you lower duration and continue to feed your income. I think that at these levels, fixed income does look attractive, more attractive than it has, certainly for the last 15 years, from that perspective of delivering income. And I think that that's something which, you know, we've been waiting for this, mind you, since the start of this year, and it hasn't happened because people have been short, and it's been good for them, you know, to be in money markets, to be in very short duration assets. But I think we are at the point to start getting into those somewhat intermediate and longer duration pieces of fixed income as well.
Interesting. Sonal, thanks for the update. Let's catch up again soon. Sonal Desai there of Franklin Templeton on this bond market. Coming up, the UAW threatening to expand its strike against Detroit's Big Three.
The reality is there is a real wage pressure problem, and this wage story is a big thing. Everybody hears it all the time. So that helps drive the momentum behind, yeah, I deserve to get paid more.
Team coverage up next.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, you know, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
The reality there is a real wage pressure problem. And even though there's a smaller percentage of the economy is unionized now than back last time we had a significant wage-related issue in the economy, the fact that we have 24-hour-a-day, 7 days a week, 365-day-a-year financial press, and they're looking for things to talk about, and this wage story is a big thing, everybody hears it all the time. So that helps drive the momentum behind, yeah, I deserve to get paid more.
The UAW setting another deadline, threatening to expand its strike against Detroit's Big Three on Friday at noon if negotiations don't see major progress. We've heard this before. Union President Shawn Fain scheduled to make an announcement on Facebook Live tomorrow at 10 a.m. Eastern Time. Sources telling Bloomberg Ford may not be spared this time around, with everything on the table. Team coverage starts right now with Bloomberg's AMH in Washington, David Welch in Detroit. David, are all three on the naughty step going into tomorrow?
Look, if I had to bet, I'd say this will be expanded. But it's a very crucial day tomorrow, because when he set the second deadline on this, where Shawn Fain expanded it, we sort of expected that. And we knew there was progress at Ford, but things were far apart with the other two. This time around, if he feels he needs to add pressure on Ford and put more plants on lockout, that tells you that things are really bogging down. And it'll also give us some better insight where things are with General Motors and Stellantis. Let's suppose he adds plants to Ford. My guess is if he did that, he would strike their parts distribution plants, which he already has on strike at GM and Stellantis. And if he didn't add plants at GM, it says that maybe there's some movement there and with Stellantis as well. So just reading the tea leaves and listening to what he says at tomorrow at 10 o'clock will tell us where things are. But this is very crucial, again, because I figured he was going to continue the strike no matter what last time. Now we've been out longer. He scored a big public relations coup, getting Joe Biden to come to the picket line this week. So, he can really focus on getting down to negotiating, getting down to brass tacks at this point. So big day tomorrow morning.
Let's talk about that PRQ. AMH, at the moment, Biden got the audience he wanted. Did the former president?
Well, the former president went to a non-union factory, actually, and spoke to those workers. But yes, they are working class, blue-collar workers that I think his trip just underscores how important this voting bloc is. A union household or anyone attached to the unions is for the Republican Party. It was also mentioned, Jonathan, in last night's debate. Mike Pence took a swipe at President Biden, saying he shouldn't be at the picket line, he should be at the unemployment line, trying to talk about the consternation that you see underlying a lot of this with union workers. And that's the fact that it's going to take less of them, even if they're used to make an electric vehicle. But we know that UAW leadership does not like the former president, Donald Trump. Shawn Fain has said he's part of this billionaire class. But in a more searing statement, Jonathan, the UAW leader who's negotiating with General Motors, this is what he had to say to the Detroit Free Press. This was his statement from Mike Booth. Let me be blunt. Donald Trump is coming off as a pompous expletive, he couldn't print that word, coming to Michigan to speak at a non-union employer and pretending it has anything to do with our fight at the Big Three is just more verbal diarrhea from the former president.
The latest politics. AMH, thank you. Alongside David Welch, fantastic coverage over the last week or so. New deadline sounds like the old deadline. It's noon Eastern tomorrow with a news conference. Facebook Live tomorrow, expected to take place at 10 a.m. Let's get you some sector price action about 23 minutes into the session. Here's Abby.
Well, John, we're looking at a very small decline for the S&P 500. Not a lot of drama beneath the surface. We have real estate and materials, financials up top, but up less than 1% to the downside. Utilities, it's interesting to see the rate-sensitive sector split, but also down less than 0.5%. However, we are heading to the worst month of the year for the S&P 500. Most sectors are down. Let's check in there because this is very interesting. The worst sector, real estate, then tech. So both of these sectors sensitive to rates in different ways. Real estate and utilities because of the dividends. Tech because of rising rates make valuation less attractive. Again, we're heading to the worst month of the year. Most sectors are down, John.
Abby, thank you. Just about hanging in there on the S&P 500. Just about unchanged. Your trading diary up next.
thought maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Stock's just about positive. Let's get you to the trading diary. The week ahead, the next couple of days, look like this. More Fed speak through the day from Chairman Powell, Cook and Barkin. After the close, earnings, Nike a little bit later on. Friday, we get the Fed's preferred inflation gauge, PCE deflator. Saturday, the government shutdown deadline coming at midnight. And next week, more key data, including September payrolls, which could well be delayed if Congress fails to fund the government. 2 interviews you do not want to miss. Mr. Barkin at the Richmond Fed sitting down with Mike McKee and the former Vice President, Mike Pence, with Anne-Marie and Joe Matthew. All of that coming up later on Bloomberg TV.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new Bankrate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Moment news breaks. No one covers the world like Bloomberg.
On the AI question, what we don't really see is Apple doing a knee-jerk response and moving into the domain of generative AI.
Supporters of President Recep Tayyip Erdogan celebrating late into the night, dancing and singing.
We have a fundamental reassessment of everybody's capacity within OPEC. Should we talk about $95 and $100 oil again? Not for a while.
Bloomberg, your global business authority. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Coming up, we're going to take a look at the auto business. A couple stories here. CarMax reported some numbers. We're going to break that down in the used car market, maybe get the latest on the auto strike. Plus, we're going to talk banking. We've got a couple of bankers from a big Texas bank coming in here. They're going to talk to us about kind of their business, their outlook in the Texas market. Plus, Katie Charleston's going to join us. She's a founder of Katie Charleston Law. She's going to talk to us about the writer's strike in Hollywood, what the agreement really looks like, what it means for AI in the creative business. We'll get the latest there from Hollywood. But first, let's kick everything off here with John Tucker on a Bloomberg Business Flash.
Been fluctuating. Right now, everything's green pretty much on the screen. The focus for investors remains on the bond market, though. The benchmark 10-year yield rose nearly 6 basis points to touch 467. The more rate-sensitive tech stocks, they floundered with the NASDAQ 100. It's been slipping right now back and forth, right now up 23 points. Amazon, Microsoft, and Apple were among some of the laggards. Micron was down 5.5%. They predicted a steeper loss than anticipated in the current quarter. Monica DeCascenzo at JP Morgan Private Bank remains bullish. She says U.S. stocks will be up 14% by the middle of next year.
Well, I think there's still challenges ahead. We have seen a lot of sectors, a lot of companies already move through an earnings recession. And when you apply a similar multiple to where we are now to the forward earnings that we expect, that's how we get there. Now, I don't want to pretend there's no risk here, because there is. And what we've seen in the last few days has been choppy, has been challenging.
Right now, the S&P 500, 11 points higher. That's up 0.3%, 42.86 on the index. The Dow Jones Industrial Average, 84 points higher. That's up 0.25%. NASDAQ 100, 32 points higher right now. That's up 0.2%. Fed speak. Chicago's Austin Goolsbee says policymakers at risk of overshooting on interest rates. He says they might be putting too much emphasis on the idea that steep job losses are needed to quell inflation. It's actually a big day for Fed speak. We're going to get Jerome Powell and some other central bank officials set to speak later today. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, also streaming live on that YouTube thing, so youtube.com and search Bloomberg Radio. Boy, the markets have kind of been, as John was mentioning, kind of all over the place this morning. Now we're decidedly on the green here with the S&P up about 0.3%. Alex Semenova joins us. She covers all the equity markets for us for Bloomberg News. She joins us live here in our Bloomberg studio. Alex, what are you looking at today?
Good morning, guys. Happy Thursday. I'm taking a look at shares of Peloton. They were up about 10%. The best day since the broad market rally in July. That's after they announced a 5-year partnership with Lululemon to tap its online workouts and team up on apparel items.
John, I'm sorry to interrupt, but John, are you a Lululemon wearer, John?
I did go into a Lululemon store. I did buy a pair of one of those pants for like over $100.
They have like the best
This
men's
was for
workout pants ever.
for
your
daughter,
I
my
assume.
daughter.
Yes.
And I said to the sales lady, I'm like, how much? You got to be kidding. And she responded, but they last a long time. I think it was like after a week they were.
That's always the argument, though.
Yes.
If you're working out consistently, though, how long?
Now you can hang them on the Peloton that you don't use.
Exactly. The Peloton used as a clothing rack.
Most expensive clothing rack. Sorry, Alex.
Yeah, so I mean, in that deal, Lululemon will make co-branded clothing that Peloton will sell on its website and retail stores. And then Peloton's fitness content will be offered to users of Lululemon Studio Mirror. That's that $995 digital mirror that lets people work out in front of it. However, Lululemon does actually plan to stop selling it. It is. It's
so
strange.
weird. A friend of mine has it, and he swears by it.
I don't get it.
It was probably a good thing to have during the pandemic when everyone was home, but now everyone's outside working out, taking in-person classes. So, I mean, that's showing up clearly in sales because Lululemon is going to phase it out. This agreement is going to focus more on existing users who already have it rather than new ones. The changes are going to take effect on November 1st, of course. Lululemon and Peloton have taken really different directions since the pandemic. Peloton stock has really struggled to recover from a slump. Everyone going back to in-person fitness classes, whereas Lululemon, people are still buying their clothing items.
Some of us are just doing what we've always done, right, John? We just
doing nothing like me.
All right, what else you got for us, Alex?
I'm also looking at CarMax. Shares were down about 11% last time I checked. That's after second quarter earnings fell from a year ago. CarMax said that the profit drop reflected lower sales. It blamed this on rising prices, interest rates, and tightening lending standards, as well as lower consumer confidence overall. And it's not just CarMax. Used car dealers broadly have been fighting off these external pressures, increased new vehicle inventories, a hawkish Fed that says rates are going to be higher for longer. Interestingly, though, there are some expectations that the used car industry might actually get some relief from the auto worker strikes. With less output of new models, people might turn to secondhand vehicles again. So this is also sending down shares of AutoNation, Sonic, and Carvana.
All right, interesting. Sonic. I know that company.
Not the burger shop.
No.
The car dealer. So
yeah, these guys also own Speedway Motorsports. They own the Charlotte Motor Speedway, Las Vegas Motor Speedway. They're big in NASCAR, and they also own this auto company.
Penske is down as well.
Yep.
Asbury, Lithia, Group 1, all falling. All these car makers, car dealerships are falling.
I just bought new. I bought a new car.
You just walked in and got yourself a brand new
I
Beamer.
walked into the floor, pointed to it, and if this guy gets a commission on it, it's amazing because he did nothing. I literally went in and said, I'll take that.
So, I mean, I'm a little bit worried because prices, you might have actually gotten in at a great time. Because I think prices could really start to take off.
Right.
Anyway, we're going to talk about that with David Welch, and I'm looking forward to talking to the Detroit bureau chief about CarMax in just a few minutes. Let's get to Micron. It's down. This is a DRAM maker, right? It's essentially like a commodities company. So what's going on with Micron?
Yeah, so Micron predicted a steeper loss than anticipated in the current quarter. Their results reflected a continued slump among chip makers broadly. Analysts said that they do see near-term challenges, but a recovery in the longer term. Going to read off some of the commentary. Morgan Stanley said that Micron was extremely disciplined, but they just don't see that Goldilocks scenario playing out for the industry as a whole. While prices are improving, the structural imbalances that lead to peak earnings in the next couple of years are just not there. And of course, tech investors have been jittery. This is kind of weighing on that.
It's interesting. I guess what I'm learning about the chip business, you're either, if you're in a PC or that kind of side, it's just a cyclical business. It's not even, I don't even think it's kind of like tech. It's just kind of a commodity. It happens to be in the tech space. And now, if you're in the AI side of the game or the gaming side, that's where the juice is.
Oh, how much we've learned about chips in the past couple of years.
Exactly. I just thought a chip is a chip is a chip.
You know, just quickly to point out the ECAN function on the Bloomberg terminal, which I love. Have you played with this,
I have not. I'll have to go check it out.
ECAN Go.
Okay.
Highly recommend it. You can look at a number of different economic data points and then analyze them with this tool. Michael McDonough, who I think had a hand in creating this function on the Bloomberg, points out that if you look at the GDP report with the ECAN tool, with ECAN Go, you can see that investment in manufacturing structures contributed 0.4% to U.S. GDP in the second quarter and 0.6% in the first quarter. He says it's likely due in no small part to the Inflation Reduction and the CHIPS Acts. So, yeah, really cool
Break it down.
functionality there.
ECAN.
I'll have to go run it right now. On my
Alex
terminal.
Semenova, thanks so much for joining us. Alex covers all the equities here. Let's get to Mr. David Welch. He's a Bloomberg Detroit bureau chief. David, CarMax, that's what's happening in the used car biz.
Look, used car business has just come down a long way from where it was. And prices continue to soften. They're still kind of like historically at pretty good numbers. But, when the market softens in prices, even if they're going down slowly, dealers, and CarMax is a very big one, they're sort of in this rear guard action, right? They buy inventory or they buy trade-ins from people, and the value could be slipping while they're out there. And look, used car buyers are also, I think, more sensitive to interest rate hikes than other buyers. I mean, the heart of the vehicle market in the U.S. actually is the used market, because that's what most people can afford. So you jack up interest rates, that makes payments higher, and the companies selling them have to discount a bit more to make them affordable. And it's just it's not an awful market historically speaking, but if they're chasing lower prices, you buy inventory at one price and you sell it a bit lower, it makes things tough. And demand's weaker too.
So, I mean, this is, I think, fascinating, because I always wonder if it hurts them to sell cars at lower prices or if it helps them to buy cars at lower prices. But what you're saying is the trajectory is what matters, because as prices go down, used car dealers are in a pickle, since whatever they paid for your car yesterday, it's worth less today.
Right. Remember when used car prices were soaring, a year and a half ago, they were printing money because they'd get a trade-in, say at $20,000, because there were no new vehicles due to the semiconductor shortage. That car, they might be able to sell it a couple weeks later for a couple $1,000s more. Back then I was seeing used cars that were selling for more than a comparably equipped new car because of the scarcity of vehicles. So in that case, they were printing money because, they're buying inventory, and in a matter of weeks, they would appreciate in value on the lot. Now they're in, not quite as rapid, but they're in the same rearguard action. And demand is tougher right now. I mean, new car sales are doing well, but used car sales are a bit softer because of interest rates.
It is true. When I bought my Silverado, I think it was 71 all in, with fees and taxes and everything. And I saw that they were selling a year-old version on the lot. Same color, same spec, ZR2, everything, all the options. And it was going for 79, the used one, as I was picking up my new one for 71 all in, out the door. So I thought that was pretty weird. You talk about the new car market, and I wonder how much longer we're going to see a decent amount of inventory out there, because these strikes until now are only at 3 car making plants and then a bunch of parts makers, right? But is that going to start affecting inventory soon, David? Or and I guess the following question is, do you expect an expansion of the strike?
I do, but look, that could take a few different turns. So right now they're striking only 3 assembly plants, but all of the parts distribution plants for dealer replacement parts at Stellantis and GM. If they're not making enough progress at Ford, they could add those plants at Ford, which they're not striking right now. And, would they add an assembly plant at GM and Stellantis, or maybe all 3? They could. So look, the answer is it depends what they add. If they did something like a bottleneck strike, say a bunch of stamping plants that would result in shutting down assembly plants, then you could see a more widespread shortage of inventory if it lasts 2-3 weeks. Right now, the companies have about, on average, 60-day supply, and even more for their pickup trucks. So, it takes a while to start really hurting inventory, or getting it to dangerously low levels, I should say. But look, if you drop it from 50 to 40, someone's going to go looking for the red one with the tan seats and whatever options, and not find it. So, it can result in some frustration.
My X3 is in Duke Blue with the tan seats. Just so you know.
Sure, your previous BMW was also in Duke Blue.
Exactly right.
Yeah.
So at what level at what point historically, David, do the dealers, do they have influence in these discussions? That, like, if I'm a really big dealer group, can I call up the CEO of GM and exert some influence?
Look, very big dealers do often have access to top executives. Typically, like the president of GM North America, the head of sales and marketing or something. But, I remember one year I was at, I think it was maybe 24 hours at Le Mans or Indy 500, and I saw Rick Wagoner, former CEO of General Motors, sitting down with Carl Sewell, big dealer in Dallas and Louisiana, one of the biggest Cadillac dealers in the country. So yeah, they do get access, but really, what are they going to do? All they can do is say, "Come on, Mary, come on, Jim Farley. I'm running low on pickup trucks here, mid-sized pickups or Broncos or whatever, and smooth this over with the union." And the companies will say, we're trying to get a win-win for everybody, and they go on about their business, right? I mean, there's not much, dealers can call and complain. I would think the most they would do, and I'd say the most useful thing they would do is just keep the companies aware of shortages that they're having or problems that they're having as a result of the strike, so the companies know how prepared or not prepared their retail network is to handle repairs, handle sales, et cetera.
I once was at the Masters in Augusta with Alan Mullally.
Really?
And the guests at his table were Annika Sorestrom and a couple of Ford dealers. So he brought them to Augusta to watch the tournament.
You have to do that, right?
Got to
keep them happy.
Yeah, absolutely. Although I don't think I think Mary and Jim and Carlos, they all want to resolve this strike as soon as possible too, right, David? So it's not like it's not like any extra pressure from dealerships or even the president of the United States is really going to move things along that quickly. How close are we to a resolution? Previous strikes have gone on. The 2019 strike against GM went on for 40 days, right? And we're in day 14 now.
Yeah, this could have a lot. I mean, based on that, this could have a lot of legs because that was a total shutdown of GM for 40 days. This has been 2 weeks of, really, if you grand scheme, very small number of vehicles lost because it's only one assembly plant each. So the union could do things to apply a lot more pressure. I think from the union standpoint, they've got a lot of what they want on the table, big pay raise, at least from Ford, cost of living allowance. But, they were saying there was progress with Ford. Now it looks like things might be slowing down there a bit. They did have a meeting yesterday with GM at 4 p.m. We don't know the results. We'll probably find out tomorrow. So there's action happening at the bargaining tables. I think, the union probably wanted some pretty good PR out of this. And when you get the president of the United States to come to your picket line, that's a PR coup. And it doesn't get any bigger than that. So, now I think they stay out if they don't feel they're getting what they want in the deal. And, we'll see what happens.
All right, David, thanks so much for joining us. That's David Welch coming to us via Zoom from the Power Conference Room at the Detroit Bloomberg News Bureau. We appreciate that. He's a Bloomberg Detroit Bureau Chief here. CarMax, some disappointing numbers here. But again, on the used car business, I would think if this strike goes on for any reasonable period of time, used cars are going to become more valuable. I mean, they're going to be
that's what I would think too, right? But as David said, they've got 60 days supply now, average, and even more for pickup, the all-important pickup trucks. So it's going to take a while to get that inventory, those inventory levels down.
I mean, if I'm a dealership in Dallas, Texas, a Ford dealership, what's my inventory of pickup trucks?
But you're probably angry about the parts shortage.
That's probably right.
You want parts to fix cars. That's where you make your money.
That's right. We're going to have more coming up. This is Bloomberg. Let's get some company news right now, and I'm going to look behind that wall. I'm going to say Lisa Mateo.
Hey, good morning. Finally, some good news for Peloton. Shares are climbing after the fitness company agreed to a deal with Lululemon to share fitness content and team up on apparel. Bloomberg's Katie Greifeld has the details.
As part of this 5-year deal, Peloton's fitness videos will be offered to users of Lululemon's Studios Mirror and its free digital app. And as part of the arrangement, Lululemon will stop producing its own exercise videos next year and will no longer feature third-party content. Now, it's important to note here that Lululemon actually plans to stop selling the Mirror hardware by the end of 2023.
Now, the digital app will also be continued for new users. Peloton shares right now, they are up about 1%. And Nike is expected to open its books after today's close. Bloomberg's Simone Foxman has more on what investors will be looking out for.
Slowing of the American consumer, are they actually slowing down? That's the same question we've had for a long time. China, how is demand holding up there? China is a decently large part of their market, 14% as of last year. And then also, they're still managing some overruns in terms of inventory. They've had some success at bringing that down. Can they continue to show that success?
Now, also of interest, revenue from Nike's back-to-school shopping month of August that will be included. Shares right now, they are down about 0.6%. And GameStop has a new leader. The video game retail chain has appointed the founder of online pet food retailer Chewy as its new CEO. Ryan Cohen was already serving as chairman. Cohen takes on the position immediately and will work without compensation. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
News, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Green on the screen right now. Tech investors have been kind of jittery as markets face a period of elevated interest rates. A lackluster forecast by Micron adding to that pessimism. Yields do remain in the driver's seat for markets. The 10-year was up 3 basis points. It's up here at some of the earlier yield gains that we saw this morning. The yield gap between 2s and 10s, that's fallen below the 50 basis point threshold. Actually, it's a big deal for some perspective. Back in March, you'll remember the curve's inversion hit a 4-decade low of just about 111 basis points. Some of the data that we got today, you had jobless claims this morning. They remain at healthy levels with initial filings coming in somewhat below expectations. And some Fed speak. The Fed Chair, Jerome Powell, holds a town hall meeting with educators. That's going to be later today. Right now, the Dow Jones Industrial Average up 74 points. The S&P 500 up about 10 points. The NASDAQ 100, right now, that is in the green, up 20 points, a rise of 0.1%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
JT, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on that internet thing, right, Matt? The YouTube, that's the internet?
YouTube.
Right? YouTube.com, right?
YouTube.com, and then you search Bloomberg Radio.
That's how the kids do it. Awesome. Let's talk banking. We got a C-suite conversation here. We're talking Texas. We're talking banking. We do that with Rob Holmes, CEO of Texas Capital Bank. Joins us Dan Hoverman? Hoverman. Yeah. Thank you very much, sir. Head of Corporate and Investment Banking, Texas Capital Bank. Guys, talk to us about what is Texas Capital Bank? Who are your customers? How's business?
Well, that's a lot to unpack.
So that's why we want the top guy.
What is Texas Capital Bank? It is the first full-service financial services firm to be headquartered in Texas. Nice. We did a wholesale transformation over the last 2.5 years. Most people overuse the word transformation. There is nothing that hasn't been touched in this bank. We redid the tech stack, the operating org structure, about 25 to 40 new products and services, depending on how you define them. We did segmentation. We founded an investment bank, both wholesale investment banking and also institutional sales and trading. Both are profitable in the first year, which is pretty great. We also have top 5 mortgage warehouse business in the country, which allowed us to build, frankly, the sales and trading floor off the back of that with mortgage trading, TBA, and gestation. So we're a wholesale bank built for businesses, but also private wealth, the people that run and own those businesses. We have national verticals, our corporate bank, industry verticals, so FIG, TMT, energy, diversified,
healthcare,
and healthcare,
government, nonprofit.
So those are the industry verticals that are nationwide. Mortgage warehouses nationwide, sales and trading, obviously, investment banking, obviously, but the core focus and base and scale is Texas, for sure. We're the #1 lender to Texas businesses of any Texas-based bank, which is a pretty big deal.
Nice.
That is a big deal.
That is. It's a big state, man.
It is a large state, and they got a lot going on down there.
They know.
So how important, I mean, the oil price must be extremely important to you, and we're watching today, West Texas Intermediate went up over $95 a barrel. I guess that's good for the Texas economy.
Well, the great thing about Texas economy is how diversified it is. So oil and gas about 9%, and everybody talks about oil and gas and fossil fuels when they talk about Texas, but it's also the #1 and 2 wind and solar provider. We produce more alternative energy than California, so look, oil is a big deal, but it's not as big as it used to be and how people think of Texas. Yeah. So if you look at our ETF, which Dan can talk about, our ETF is comprised of contribution of the subsector to GDP, the market cap. And the 5 largest holdings in that is Tesla, McKesson, Waste Management, Schwab, and Exxon. Now, I can't think of a more diverse economy than that, right?
Exactly.
And the economy, look, the economy is 10% of the economy of the United States.
You can't say ETF without telling me the ticker.
TXS.
TXS.
Texas without the vowels.
TXS.
Texas without the
Pretty
vowels.
cool, right? It's
Hey,
good ticker.
hey, Dan, on the corporate investment banking side, what are your clients saying about their outlook here? I mean, how's business for your clients?
It remains very robust. If you look at the way that folks are kind of participating in the economy, at least from the Texas angle, if there's a recession in the United States, there probably won't be a recession in Texas. So if you look at the performance in the TXS itself, kind of outperforming the Russell Midcap or the S&P, the more Texan you get, the more the stocks outperform. So the outperformance on the index is really driven by kind of how closely tied people are to the Texas economy.
We got to introduce him to Matt Winkler. That's a column right there.
Yes.
Exactly.
Yes.
See, we have our founder of Bloomberg News. He loves going into state by state, looking at the data and saying that, for example, people saying California, San Francisco in trouble. It's not what the data shows. So he'd love to talk to you about that kind of data here. So, I mean, what's the future? What's the next 3 to 5 years for your bank here? Is it continue to grow your share in Texas? What's the kind of your strategy here?
Look, here's the great news. We started 2.5 years ago on a wholesale transformation. There was a lot of risk in doing everything at once. That is done. There was risk in acceptance of the strategy by clients and by employees and talent. Check, check. The entire platform was built. About a month ago was the first time we could say the platform was built, the capabilities were there, and the talent was there top to bottom, both top down and bottom up. And so what's next for us is just going delighting clients, onboarding clients as fast as we are today. We onboarded more clients in the first quarter than any other quarter in the history of the bank, in spite of the first quarter events of regional banks. We onboarded 30% more clients in the second quarter than the first quarter. We are a top 10 agent for leading bank syndications in the country for the first 6 months. So it's just, we've done everything. Most of the people on this platform, that are leaders, have come from much more complex jobs and much more larger companies. And we've all done it 1,000 times. We haven't done it with this jersey on. So we got to do it with this jersey on and just build what we have. And we're really, really, really excited about doing that. And the client response has been overwhelming.
Hey, Dan, when you go into pitch business on a piece of corporate banking, investment banking business, how often are you competing against some of our neighbors here in New York City? Who's your competitor really day to day?
Yeah, there's really only two types of competitors when you think about it. So we're either competing against other Texas banks, and the sales point there is that we're full service and nobody else that's headquartered in Texas is. And so at some point, unless you bank with us, you're going to outgrow your relationship. If you want to have a relationship where you never need to go move your accounts, you never need to make a new friendship with an RM, frankly, it's going to be tough to find folks that are more maniacally focused on delivering great client experience, then you should bank with us. Or we're competing with one of the banks that are in New York, and at some point, our job really is just to make them fungible. We work well with every New York bank. A lot of us have a history of working.
You work with all the New York banks? Even those that have a say in social issues?
If the clients
haven't you banned them from Texas?
We're all about client.
We had your
outcome,
governor
right?
in here yesterday.
So
yeah,
he's with us this week.
Oh,
yeah.
There we go. That's why he was here yesterday. Okay.
Yeah,
He's going to ring the bell with us today.
Oh, excellent. Okay,
Yeah,
very good.
Have
very
dinner
good.
with him tonight. So what I would say is, it is highly unusual for a person running a business or that owns a business that wants to defer the decision making about his or her business to San Francisco, New York, or Charlotte. So if they can get the same products and services and be locally covered, that's their preference. And we have a high amount of confidence we can do that.
But what's recruiting talent like? I mean, obviously, it's a very hot place to move, right?
So,
Everybody wants to be. We hear about Austin all the time. I love Dallas.
like
Paul
San Antonio.
loves San Antonio.
Sure. So recruiting talent.
Got some good schools in Texas.
Okay, so Texas is the only state in the country with 11 Tier 1 universities. We have started a junior program, first junior program ever at this bank, like everything else first at this bank. The first year we had 60 spots. We had 800 applications. Second year, 60 spots, 2,000 applications. Third year, 60 spots, about 2,800. So junior, great. Senior, let's just put it this way. I've had more than 2 or 3 CEOs in New York call me and ask me how the hell I hired that person. And so I would say we were able to hire, it's not easy, but people want to be a part of a build. They want to make a difference, and they love living in Texas.
What's the biggest challenge you guys face right now?
The biggest challenge is, you know what, just what I said earlier. We've got to execute perfectly. Like when we led the largest agented debt deal in the country 2 weeks ago for a Texas-based oil and gas company. Now think about that. The largest sole-led deal in the country, Texas Capital did.
A loan
It was a capital markets deal.
Okay.
We don't own any of it.
Okay.
It was globally distributed with the best investors in the world. And we did it great, but it was our first time. I mean, if you go talk to the CEO and the board, the client, they love it. And by the way, a money center bank pitched a different structure and spit the bit. So, which causes harm to that client. So they gave them the wrong advice and they failed. 2 months later, we got it done.
All right, good stuff. I'm glad you guys spared the time to come in and see us. Really appreciate that.
Thank you.
We always like talking to some of those folks out there getting it done on the ground. Rob Holmes, CEO of Texas Capital Bank, as well as Dave Hoverman, head of corporate and investment banking. Texas Capital Bank, based in the Big D. Appreciate you guys spending
And their
some time
ETF
Oh yeah,
is TXS, right?
TXS.
TXS. Texas
pretty fascinating ETF. Looking through it here.
All right, right now let's head down to Washington D.C. World and National News with. I'm going to go with Amy Mars.
All right, that's the one you want to go with, Paul. With the government shutdown looking more and more likely, lawmakers are pointing fingers of blame. Bloomberg's Nancy Lyons brings us the very latest.
I'd offer to you that there's a few members on the Republican side in the House that probably get a lot more media attention, but I would note that as we actually look at the appropriations bills moving forward, the Senate is maybe further behind than the House. Neither are doing a good job. The underlying system here in which we're working on spending completely broken.
House Majority Leader Steve Scalise says it's the Democrats who are to blame for spending proposals that add to the debt.
They want to track another $2 trillion in debt that's going to be sent to our grandchildren.
Democratic Congressman Seth Moulton tells Bloomberg Sound On House Speaker Kevin McCarthy is more concerned with power than avoiding a shutdown.
He's not going to do the right thing for the country. He's going to do the right thing for himself.
Moulton says House Republicans are reneging on a spending agreement that was reached during the debt ceiling debate. In Washington, Nancy Lyons, Bloomberg Radio.
And now we know the Office of Management and Budget says the White House initiated a shutdown planning call with agency leaders on Friday. Those leaders are now talking with federal employees about how they're going to handle the furloughs for this weekend. There's a lot more crosstalk and infighting at last night's Republican debate, but with the 7 candidates competing for second against the absent frontrunner, Donald Trump, we asked AGF Chief U.S. Policy Analyst Greg Valliere what he thinks the contenders are really going to be running for. And we'll get back to that in just a moment. Greg Valliere with AGF says former Vice President Mike Pence, he expects him to likely drop out of the race before Thanksgiving. He was on Bloomberg Surveillance. You can catch our full conversation with Greg on the Surveillance podcast. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and you're listening to Bloomberg.
Events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major indexes bouncing between gains and losses. We're looking down the throat of the worst month for stocks this year. 5.1% drop month to date for the S&P 500. That follows a 1.7% drop in August. That ended 5 straight months of gains. The rising treasury yields, they continue to heave a lot of pressure on stocks, especially technology. 10-year yield, that is up 5 basis points. Surging energy costs in the form of crude oil, that's helped propel bond yields higher, recently stoking the fears of reacceleration in the rate of inflation. Meantime, Freddie Late at Latitude Investment Management says the U.S. unlikely to avoid a recession.
If we avoided a recession, if somehow this is a soft landing, oil's going through the roof, and that's going to trigger higher rates and then a recession. So you're sort of damned if you do, damned if you don't. And so I think if it doesn't come right now, when excess savings run out and the student loans and all the rest of it, it'll come quite soon.
And Fed speak today, we're going to hear from Jerome Powell. That's later in the day. S&P 500 right now, 2 points higher. The Dow Jones Industrial Average, 12 points higher right now. And the tech-heavy NASDAQ 100 right now, that is down 12 points. Again, the 10-year yield, 4 basis points higher, 465. The 2 down 3 at 51. And the difference between the two, negative 45 basis points right now. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We've been talking a lot about the ongoing strike in the auto business, but in the Hollywood business, they actually kind of came to an agreement here and stopped that strike by the writers. One of the big issues there is AI. Is AI going to put some of these writers out of business? That was a really, really big concern, but they got some concessions there. Let's see where we can break that down a little bit. Katie Charleston, founder of Katie Charleston Law, joins us via Zoom. Katie, talk to us about kind of AI and what were the bones of contention amongst the Hollywood writers, and what did they ultimately agree to?
Absolutely, yes. Thank you for having me. So artificial intelligence is all the rage right now, and I think the actors and the writers that have been on strike were both worried about AI sort of infringing on their credits and compensation as the professions they are in their industry. And so they were concerned about the AI taking over potential credits in shows, AI being used for writing the programs, and really their potential loss for a job. And so this has been an ongoing dispute throughout the 148-day strike. And it looks like they've struck a deal, which really comes down to artificial intelligence can be used as a tool, but it cannot be used to create the content, and it will not replace these writers, which is something that they were really going for.
Just a red headline crossing the Bloomberg terminal I want to get to you. UAW targets 30% pay rise in contract talks with U.S. automakers. We'll have more reporting on that. But, Matt, that seems like a decline from the initial 36% they were initially asking for. So maybe kind of moving more towards something in the middle here.
Right. Well, I mean, that's how negotiations work.
That's how they work.
They started out asking for 46%.
Oh, boy.
And they came down to 36% with a couple of stops on the way there. As far as I can remember, the automakers came out first with a 9% offer, and then 20 and 21.
So now the bid ask is 21.30.
Yeah.
So maybe we get something in
exactly.
Okay.
So we'll continue to follow that strike as we talk about, wrapping up this writer strike. I actually just put into Chat GPT, please write me some questions about the Hollywood writers and entertainment industry in the face of technological developments with AI.
And what'd you get?
Well, Chat GPT wants to know, how is artificial intelligence currently being used in the entertainment industry? And what cost-saving or revenue-enhancing opportunities does it present?
Wow.
Pretty good question. Yeah. Are they using it already?
Katie, so this agreement that we have with the writers and the studios, do you think that's going to be
a little bit of a template.
Wait, you didn't like my question?
Oh, I don't know. Go for it.
I mean, Katie, did you not like that? Are they using it already?
I wasn't sure it was directed at me. Yes, AI has been being used in pretty much every industry today. I mean, they're using it to develop content, both in imagery and scripts. And that is one of the things that has brought this strike to the forefront, I believe. So yes, it's being used today. And one of the things that's been part of this whole negotiation is how much will it be used? And will these companies be able to force the use of scripts created by artificial intelligence rather than actual people? And so I think that was a crucial part of this agreement they reached last night.
Well, and how will we know? I mean, if me and Paul, get contracted to write a remake of Remington Steele, for example,
classic.
Do we have to tell someone if we're using ChatGPT to help us, create copy? Does OpenAI get a cut of the profits?
Not as of today. And so, artificial intelligence, content created by artificial intelligence, it is not being seen as something that is registerable by copyright, for example. So the U.S. Copyright Office has rejected attempts at AI but in owning this type of material, saying it has to be conducted by a human author. And so I don't think that AI is getting any kind of cut, but you make a good example, and maybe we'll see in the future that these companies are seeking a cut for these types of works. But not yet, not as of today. And as far as whether you would have to disclose that, I mean, if you're under this agreement that's been proposed in this guild negotiation, then yes. So part of this agreement is that if a production company is requiring a writer to use something that was created by artificial intelligence, it has to be disclosed to the writer, but it cannot be forced. So a writer cannot be forced to use artificial intelligence today.
I wonder if OpenAI keeps a log of all of the answers it gives and then can run those up against dialogue in all of the movies and television shows created, because they could double check, is somebody using our gear? Paul, what do you think?
That's very possible. I mean, I don't know where this could go. I know for the actors are still, Katie, the actors are still on strike, and I know they're concerned about some of this stuff too. We've seen some reporting that AI has, they've been infused to different parts of the industry, including Harrison Ford being de-aged in the latest Indiana Jones movie. So, I mean, this is an issue of kind of retaining ownership of their likeness, I guess, going forward. So the actors have some issues as well.
Absolutely. I mean, there's a fear of them being replaced altogether, right? I mean, it goes beyond just Harrison Ford being de-aged to the maybe replacement of Harrison Ford by a completely artificial intelligence generated system, right? I mean, that's out there now. We know these deep fakes and these potentials for this artificial intelligence system to basically recreate or duplicate somebody. And we've heard that Keira Knightley herself is trying to copyright her own face to prevent such things. So it's definitely a fear among the actors.
And I guess right now, only a human can be credited as a writer. Is that still the case?
That is the case for copyright, yes. I mean, there was a case just recently that was an issue where a piece of art was created using artificial intelligence. The person that used the artificial intelligence attempted to copyright the art, and the Copyright Office said, no, that was not created by a human person. We're not accepting that. Well, that went to the federal courts, and the federal courts agreed. For it to be eligible for copyright under the U.S. Constitution, it has to be created by a human, and artificial intelligence has not yet gotten there.
Weird. That's so weird, because you could say, I mean, obviously, a human used artificial intelligence to create that. If you use a paintbrush to create something, you're still creating it, right?
Yep. I don't know how this is all going to play out, but we'll keep it chatting with Katie Charleston because she's staying on top of this from a legal perspective. Katie Charleston, founder of Katie Charleston Law. So that is really interesting. So again, we got the writers taken care of, and that's good news. And I think we're going to have the late night shows come back Monday, starting Monday. Jimmy Fallon, Jimmy Kimmel, all that kind of stuff. They'll come back, and presumably the writers will be back in the room creating content, writing TV shows and movies. Now we're going to get the actors back. That's the next thing. This is Bloomberg.
Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Apple iPhone users, they're complaining its latest device is too hot to handle. Literally, users have been reaching out to technical support about the iPhone 15 Pro and the Pro Max becoming too hot during use or when charging. Bloomberg's Mark Gurman offers his explanation.
It could be compounded or caused by the iPhone setup process. When users get a new phone, re-downloading all of their apps, their data, their photos, that can be a long and processor-intensive procedure. So it's possible that is either compounding the issue or creating it. It's also possible it's triggered by certain apps with bad code in the background, Instagram, Uber, you name it.
Apple shares down a fraction. Micron is predicting a steeper than expected loss in the current quarter, a sign that the industry-wide slump is still weighing on the largest U.S. chip maker. More from Bloomberg's Ed Ludlow.
What it's projecting is a loss of $1.14 per share in the fiscal first quarter. That's the quarter ending November. Analysts had seen a loss of 96 cents, so slightly deeper. The bright spot, or the other part of that mixed outlook, is that sales will actually be better than expected in that November quarter. $4.2 to $4.6 billion. The street was looking at something like $4.21 billion.
Micron right now down about 3%. And Disney Plus has become the new broadcast home for the Rock and Roll Hall of Fame show. The 38th annual ceremony will be held November 3rd at Barclays Center in Brooklyn. Now, the show was previously seen on Warner Brothers Discovery's HBO. In case you're wondering, inductees include Sheryl Crow, Missy Elliott, George Michael, Willie Nelson, and the Spinners. Disney shares right now are higher. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Brokers studio. Looking at these markets, a little bit of green on the screen. It doesn't feel like a lot of conviction out there. The S&P up 1/3 of 1%, NASDAQ up about 1/4%. We've been keeping our eyes on the bond market. Yields up higher yet again on the 10-year Treasury, up 4 basis points, 4.64%. On the 2-year, yields down 3 basis points. So that disinversion of the yield curve, I called that out for Professor Cam Harvey at Duke. The 2-year Treasury is 5.1%. We'll keep an eye on that. Gold, WTI crude oil pulling back on a rare pullback. It's off a little over 1%, $92.60 a barrel for WTI crude oil. So we'll keep an eye on that as well. Right now, let's head down to Washington, D.C. Amy Morris has got world and national news for us.
All right, thank you, Paul. 3 days till a government shutdown, looking much less likely that a last-minute deal is going to get through. Speaker Kevin McCarthy pushing for President Biden to negotiate on tighter border security. Hardline conservatives are also holding firm against new aid for Ukraine. Republican Congressman Brian Stile of Wisconsin says there are more hurdles ahead, too.
I'd offer to you that there's a few members on the Republican side in the House that probably get a lot more media attention, but I would note that as we actually look at the appropriations bills moving forward, the Senate is maybe further behind than the House. Neither are doing a good job. The underlying system here in which we're working on spending completely broken.
Congressman Brian Stile on Bloomberg Surveillance. You can catch that full conversation on the Surveillance podcast. Striking actors in Hollywood studios are ready to resume contract negotiations. Bloomberg's Steve Rappaport with that story.
Both parties say they'll get back to the bargaining table on Monday, with several executives from the studios expected to attend. The union, representing about 160,000 performers, is seeking pay increases for base salary and residuals from streaming services. Members also want protection against the unauthorized use of their likenesses by artificial intelligence. Simultaneous strikes by actors and writers paralyzed the industry, halting hundreds of film and TV projects. Writers reached a new labor agreement with the studios this week. Steve Rappaport, Bloomberg Radio.
Veteran actor Michael Gambon, known for his role as Hogwarts headmaster Dumbledore in Harry Potter films, has died. His family says he died after a bout of pneumonia. He had a career that lasted for 5 decades. Remember, he took on the role of Dumbledore after Richard Harris died in 2002. Michael Gambon was 82 years old. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Matt and Paul.
All right, Amy Morris, thank you so much. We appreciate that. One of the most read stories on the Bloomberg terminal today is a big one in my mind. All pandas in American zoos are being taken back by China. Giant pandas are everywhere at Washington, D.C.'s National Zoo. 3 live in the zoo's $50 million Asia Trail. T-shirts, trucker hats, and refrigerator magnets bear their image. A 24-hour panda cam broadcasts the trio's every move. Even the QR code to reserve zoo tickets features a panda silhouette.
Dude, the panda cam actually stopped working in the shutdown like 10 years ago, the government shutdown we had 10 years ago.
Shut down the panda cam?
The government shutdown stopped the panda cam from operating at the Smithsonian National Zoo. Remember that? And that's why we wanted to get the government back up and running, so we could see the pandas.
There is a panda, a rare red panda, at the Central Park Zoo, just blocks away from us.
Dude, we're talking about giant pandas, okay?
But
have you ever heard of panda diplomacy? Like 50.
Matt this morning was absolutely outraged. They're taking our pandas.
Well, Chairman Mao kicked this off with President Nixon back in the day, right? He sent 2 giant pandas as part of like a peace offering. And since then, apparently 3 pandas have been born. Giant pandas I'm talking about, not your little red ones.
They're U.S. citizens now, the pandas?
I don't know if they're naturalized citizens. I think some Republicans, well, yesterday in the debate, right, Vivek Ramaswamy said he wants to get rid of nationalization. You can't just be a citizen if you're born here.
Oh, okay.
So I don't think he was talking about the pandas specifically.
Both sides here, the U.S. and China, both sides deny politics are at play here. So maybe this is just China saying we want our pandas back. But I mean, they seem pretty happy here. So I don't know what's going on.
Do they though?
Do they? That's a good point. I don't know. We're going to have more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
We're still talking about the pandas. All right, coming up in this hour, we're going to get the latest. We got some movement there in the auto strike. We've got the latest reporting there. Plus, we're going to check in with Liz Young, head of investment strategies at SoFi, to get her market call. Wendy Schiller, Taubman Center for American Politics and Policy Director at Brown University, is going to join us and talk about the shutdown and the debate last night, which I did not see, but I'm sure she did, and she'll give us the latest color there. But first, let's kick this whole thing off with John Tucker.
All right, thanks, Paul and Matt. Green on the screen right now. We've been all over the place this morning. The jump in yields on the benchmark 10-year Treasury pulling back somewhat, now up just 3 basis points. And stocks have been tracking those yields, especially tech stocks. So that's where we're in the green right now. Barbara Reinhardt at Voy Investment Management has lowered her outlook on U.S. stocks. She's now neutral.
We leaned into U.S. equities and had been overweight equities really for the lion's share of this year. In late June this year, we started to take that position down, and we're back down to neutral, in part because we think the markets are at a deadlock. Deadlock because bond yields are really at multi-decade highs, highest level we've seen in the past 15 years.
Yeah, right now the S&P 500 up 13 points, 42.88. The Dow up 75 points. The NASDAQ 100 41 points higher. That's up 0.3%. And just across to the Bloomberg a minute ago, Epic Games laying off 16% of their employees. You know, they've been battling Apple, I believe.
Is that right?
In the courts. Anyway.
Are you a gamer, John?
I am not, and I'm amazed that one individual in my household, not just a gamer, but his big thing is watching other people online gaming.
I know somebody.
That's a thing.
I know somebody who's getting a master's in that at Columbia.
You know someone who's getting a master's in watching other people play video games?
Yes, and
the sad thing is, I believe that.
Yes.
Does it pay anything?
I don't know.
Do you make money at this?
I don't know. Esports, it's a thing. I mean, I'm a killer Pong player if you want to go there.
Pong. Paul Sweeney chooses the oldest video game known to mankind.
All right, John
Space
Tucker.
Invaders.
Thank you so much. We appreciate that, John Tucker. It's Matt Miller, Paul Sweeney, live in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. We got some news out just across the tape a little while ago. UAW targets 30% wage bump to satisfy workers, grow members. That's the headline. Let's check in with David Welch, Bloomberg Detroit Bureau Chief. Hey, David, it seems like we're getting closer here. The UAW, I guess they started at 40% pay rise. Now they've come down to 30%. How significant is this?
Well, they're not coming down yet, but what they're internally, what they want is whatever the pay raise is, they want it to start with a 3, because that's sort of the big picture, what they think would work for them to be able to market themselves to other non-union workers down the line. And they will, part of what the union is doing here is that they're trying to reignite the labor movement and make the UAW more relevant again, because really the union has failed in organizing Toyota and Honda plants and Tesla and so forth. And they think of, they have a big number and it starts with a 3. Even if it's 30, maybe it's 32, they're at 36 with their latest offer, that they'll be able to hold it up as a flag of victory and a great marketing message. That's where they are. Now, do they settle at 30? We'll see, because there are a lot of items on the table and they're going to be horse trading going on.
Yeah. I mean, I'll tell you what, 30 sounds fantastic, especially if it comes with pensions and a 4-day work week, plus knowing what Dodge is going to build at Brampton after they cancel the Challenger. But if you don't get those other things, then 30 doesn't sound quite as good.
Well, look, it's that's 7% a year. That's more than most Americans get, probably double what most Americans get on average.
Right, but they've I mean, they're getting paid less than they were in 2008 if you adjust for inflation. So
look, that's a great point, and it's something that gets lost in this a lot. Is a lot of the big raises and for that matter the Teamsters at UPS asked for is kind of making up for the fact that they were locked in these contracts during a period of rampant inflation when everybody else who isn't in a contract, were getting raises because that's what the job market was dictating.
So, all right, the auto workers want to see something starting with a 3. How about the automakers? Can they stomach something starting with a 3?
Probably, and here's why. In the story, it says that's sort of all in with a lot of other pay pieces to it. So if let's say Ford GM are 20% right now, you add cost of living allowance in there, which I don't know that GM has agreed to that. Ford did offer it, and that kind of pegs pay raises in addition to the 20% along with rate of inflation. I don't know if it's 1-to-1 or not. They haven't released the formula on that, but that alone kind of starts to get you closer to 30. So it's doable. I don't think they love it, but it's doable. I mean, look, there's a zero-sum aspect to this. The UAW gets a great contract. I think it's obvious that they're going to get a very good one. Down the line, are companies going to expand in the United States? Probably not. Canada and Mexico look more attractive all the time.
All right, but how about this pension thing that Matt is, rightly focused on? Is pensions even a thing anymore? Is this even on the table?
Dude, if you told me I could have a pension if I agreed to no more raises for the rest of my career, I might say yes.
Our owner just walked by. Maybe you could just,
I wouldn't suggest that. But that's because I'm not in this industry, right? In the automotive industry, a lot of people do. Anyone who was working there before 2008, and correct me if I'm wrong, David, they still have a pension.
Yeah, the workers hired up until I think it was before 07 do have a pension, and there's a big pension fund that pays that out. Yeah, the companies don't want to give that back, and I don't think they will. I think the two sides will work on some sort of creative solution that is a better 401k or
matching. More
matching. Yeah, something that kind of acts like a pension. Right now they get, I think it's 5 or 6% direct contribution. So that's not the match. Like they get 5 or 6% of their pay poured into a fund that will pay pension. So maybe that's how, maybe they handle it by upping that or something.
Yep. All right. Well, it's at least potentially some movement here. That's good news. David Welch, Bloomberg Detroit bureau chief, talking to us about that. Looks like the UAW would consider pay increases somewhere in the 30% range. So maybe that's a little bit of positive movement there. We'll see how, if anything formal comes out of that, and we'll see how the automakers
at least 30%, according to people familiar.
Exactly. So that's a little bit better than where we were, maybe a little bit closer to maybe where the automakers are. So we'll keep an eye on that. Let's switch over back to these markets here. Again, the S&P up about 0.4% near an intraday high. The NASDAQ up about 0.3%. Liz Young joins us. She's head of investment strategies at SoFi. Hey, Liz, when you talk to your clients, when I think of a SoFi client, I think of more of a younger client and maybe have a longer perspective in these markets. A, is that the case? And B, what are you telling them these days?
Yeah, thanks for having me. So generally speaking, our investors or the investors on our platform do skew younger. About 65% of them are between the ages of 20 and 40. So compared to the average investor or the average high net worth investor, they are younger. However, we do have quite a few that are over the age of 40 as well. So it kind of runs the age gamut. I would say, most of our investors do have a longer time horizon. There can be a challenge in convincing them of that, though. And we've got a market and an environment today that really just forces all of us to focus on the short term. And we hang on every data point, every word from the Fed. And it does make us more short term in nature when we're thinking about our investing decisions. And just the individual investor of today is a trader. I mean, they really do enjoy trading individual stocks. And I think that's an important distinction to make. But there are a lot of investors.
I mean,
well,
isn't a retail investor trading stocks just a recipe for losing money?
No, it's a recipe for learning, and it's not necessarily that you would lose
My
money.
brother
and
learned a lot trading stocks as well, like to the tune of losing 200 grand in the first year. What a great lesson.
I do think that it's a wonderful thing that there are so many individual investors today interested in getting engaged in their investment horizons and getting engaged in the process. I think really the risk is more that if the information that you're given is headline worthy, you're probably going to end up concentrated in a certain handful of names or in the names that are just the big ones. And that's not necessarily creating a diversified portfolio. And then there's also this fallacy of familiarity. So investing in companies that you're only familiar with rather than making sure that you're diversifying out across sector, across asset class, across investment type, even and vehicle. So I think it's perfectly fine to invest in individual stocks here and there, but I wouldn't make it necessarily the core of your portfolio, and you want to make sure that you still own a decent number of individual stocks.
Liz, how do your clients use ETFs? I mean, ETFs has just been a phenomenal growth story within financial services really over the last decade plus. My day was mutual funds. Now it's all ETFs. How are they used by your customers?
They're very widely used by our customers, and they're very widely used by individual investors everywhere, largely because, number one, they give you an opportunity to hold a lot of securities for a much lower cost than many of the mutual funds of the past did. So there's better opportunity there, and there's great diversification opportunity in them. I think ETFs are, now that they're such a big part of the market, it is important to still do your research on them, though. And there are a number of different options in each space, even as you get to more niche parts of the market. So, for example, let's say you want to buy a dividend ETF. You want to do the research and make sure that you're buying a dividend ETF that is holding companies with sustainable dividends or growing dividends rather than just currently high dividends, right? So there's still different things that you need to do to make sure that you're not completely passively investing. But I think ETFs are a great tool for investors of all wealth categories to use for exposure to the market.
Do you see investors piling into, treasuries or places where you can get safe return for the first time in a generation?
I don't know if piling in is the right way to think about that, but I think that over the last year or so, many people have moved into treasuries more than they ever expected to, and it has been a tough trade lately, as we've seen a sell-off in treasuries, particularly on the longer end of the curve. But this is also an environment where many investors have not seen yields like this on treasuries ever in their investing lifespan. So it's offering you to get paid to wait. And I don't think that that's a bad idea. I do think that there are plenty of people who have also used money market funds to do that. But there's still a decent amount of appetite for equities. I mean, the S&P is only down about 7% since that local high in July, and that's not even in correction territory yet. So there's obviously still plenty of money in the equity market.
What's your market call here, Liz? What are you telling your customers?
I've been pretty cautious all year, obviously wrongfully so in the beginning of the year. I continue to be cautious. And right now what we're seeing in the market, which I wrote about in my blog today, is some quiet weakness. There's been a pullback, but quietly weakening from a momentum perspective. So if you look at things like the 50-day moving average of the S&P recently rolling over and moving downward, you look at the number of S&P members trading above their 200-day moving average, that percentage is now down to 40%, and that's dropped pretty sharply in the last couple months. Now, not near crisis levels, not near really deep levels of a pullback. Usually you get that number somewhere in the 11% range when things are really bad, but it has dropped. And then you look at things like the relative strength indexes, which usually indicate whether things are oversold yet, and that tells investors, okay, we've had a pullback. Was it enough? Is it time for a bounce? And the relative strength index, the RSI reading on stocks, shows that things have gotten a bit worse, but are not washed out yet. So I do think that there's probably more risk to the downside here, especially as yields keep rising.
Are you concerned about the government shutdown as an investor? I mean, we're all worried that, the Panda Cam could be turned off. But does it matter to the markets?
The markets don't seem overly concerned with it yet. I do think it matters to the markets. This is a story, though, that keeps repeating itself through market cycles. It seems like we're talking about a government shutdown every 6 months to a year, and it's no longer a new or surprising headline or worry for us to climb as market participants. And what I think we've been conditioned to believe is that, yeah, things might get a little dicey into the 11th hour, but eventually they figure it out. So I think the bigger risk here is that there is a shutdown that lasts a longer period of time, and it occurs during a time when we're hanging on all of that data. And what if some of the data is not available as we expect it, even just for a few days? So I do think there's a risk in the market because of that. I think, we're not in a place where we want more uncertainty, that's for sure. So I don't think it's necessarily a good thing to have on the horizon. But so far, markets don't seem that spooked by it.
You did mention in your blog, which I'm pretty sure on the money, right? If I look at SoFi.com.
Yes.
You point out that the VIX has been marching steadily higher. It's not alarming yet, right? But it is starting to creep up and look more and more interesting. Right now, it's trading at 17.9.
Right. Well, it's funny. I mean, as investors lately, we've been conditioned to expect a VIX somewhere between 13 and 14, which, as we know, is historically low. So having it at 17, 18, it's been above 18 for a few days. Having it in that level seems high compared to what we've been experiencing. On average, it's not really that high, and the mental threshold is usually 20. So as long as it's below 20, things are still typically considered subdued or not necessarily unsafe or terribly volatile. But it's worth noting that it has marched up 4 points or so in a pretty short period of time, and that goes along with some of the other things that I mentioned earlier in the interview with number of stocks above the 200-day falling, the RSI, number of stocks that are showing oversold, rising. So there's clearly some breakdown and some weakening happening under the surface in the market. Again, none of this is at alarming levels, but it's happening enough that it's starting to feel like paper cuts, and it's a nagging pain that I don't think we should gloss over.
All right, Liz, thanks so much for joining us. As always, Liz Young, Head of Investment Strategies at SoFi, giving us her market call here. S&P 500 up 0.3%. The NASDAQ up about 0.2%. So a little bit of green in what's been a pretty choppy market, 7% off the high for the S&P 500. Not in correction, Terry, but people are noticing it. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Hey there, Paul. The latest earnings from CarMax aren't exactly exciting investors. The used car dealer's latest results came up short of estimates. More from Bloomberg's Valerie Teitel.
This is the nation's largest used vehicle retailer, reported a fourth consecutive quarter of double-digit revenue declines as high interest rates continue to affect consumer demand.
Now, Teitel says things could turn around if the United Auto Workers strike cuts into output of new cars. Right now, CarMax shares are down about 9%. The virtual and augmented reality industry is heating up. Bloomberg's Gino Cervetti explains.
Facebook parent Meta Platforms has taken the wraps off a new $500 mixed reality headset called the Quest 3. That's more than double the cost of the previous version, but a lot less than the roughly $3,500 price tag that Apple is expected to place on its coming Vision Pro early next year. Meta also rolled out a second version of the smart glasses developed with partner Ray-Ban for around $300.
Now, the Quest 3 features 30% higher resolution, new lenses, and a faster chip from Qualcomm. Shares of Meta right now are up about 1.5%. Meanwhile, Google, Meta, and Apple, they are set to win U.S. approval for their mobile, virtual, and augmented reality devices. Under a proposal that was announced by the Federal Communications Commission, the low-power gadgets would be allowed to tap airwaves used by Wi-Fi-enabled devices. The FCC says the move will benefit consumers and also boost U.S. leadership in advanced wireless technologies. The agency will vote on the proposal next month. Alphabet shares are up 0.5%. I'm Lisa Mateo, and this is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, right now, stocks are higher. Risk on sentiment a bit tentative, we'll say. The 10-year Treasury yield that continues to head higher. So that's keeping a lid on further gains in stocks, especially technology shares. We actually could get a lift in sentiment from a resolution of the strike that's roiling the three big automakers in Detroit. There are hints of a compromise. And the S&P 500 right now, 10 of the 11 major industry groups, they are higher. Materials and financials leading the way. The drag coming from utilities. S&P 500 up about 14 points, 42.88 on the index. The Dow's up 74 points. NASDAQ 100 is up 49 points. 10-year yield 3 basis points higher. That's at 464. Matt sent me some of the research, Paul, that he's been doing on the Panda diplomacy.
Okay.
Did you know it was in 1972 after Nixon's trip, the opening with China, that they sent us the Panda. Do you know we sent them in 1972 to reciprocate their kindness?
Well, I do. But what?
Musk oxen.
Musk oxen. Okay.
In China, if you're listening, we don't want them back. I'm guessing.
I mean, I saw that Nixon sent a couple of Musk oxen, but I don't know what Musk oxen are.
No, I'm not sure.
Just oxen that have deodorant on.
I think we got the better end of that trade. I'll take the pandas any day. So, John Tucker, thank you so much. We appreciate it. As we speak, Matt Miller is watching the Panda Cam. The pandas are there, but that could be at risk, Matt. If this government shuts down, the Panda Cam might.
Well, I think it already is at risk. I mean, there are only 3 zoos in America that have pandas, and they're being brought back. I think Atlanta, Memphis, and Washington, D.C. Okay. I'm talking about giant pandas, not Tucker's little red ones in the Central Park. And I know that, for example, the National Zoo, the Smithsonian's National Zoo, they haven't been able to renew their contract. So when you get a panda from China, unlike Ling Ling and whoever the other one was that came in '72, you don't get to keep those pandas forever. You pay like $400,000 or $500,000 as the zoo, right? Yep. And you keep the panda for a multi-year period. Okay. And then you have to re-up.
You do. Okay.
Anywhere between 500 and $1 million.
Okay.
So apparently the Smithsonian has not been able to re-up.
And they say it's not about politics. But let's check in with somebody who kind of paying attention to the shutdown thing. Wendy Schiller, Taubman Center for American Politics and Policy Director at Brown University. Wendy, we're paying attention to the Panda Cam, but presumably the folks down in Washington are paying attention to the bigger picture here. Are we going to have a shutdown come Saturday night?
Well, I mean, at the moment, it looks like that. I mean, the House summarily rejected the Senate's proposal, the Senate's bill. I think it's really about counting votes. And at the moment, there just simply are not the votes in the House for McCarthy to get something through. It doesn't seem as if the very, very, very right wing of that party wants to compromise. And why should they? If they can shut the government down, it just enhances their power and their bargaining position. It's unclear sort of what they think they're going to get, though, because there's no way Biden's going to go deeper than the debt ceiling agreement. And then Biden says, we made an agreement, we all voted on it, you voted on it, and now you're going back on it, which is politically, I think, in the short term, maybe not that expensive, but in the long term, I think it gets expensive for the Republicans on that position.
Well, I'm sure most of the Republicans, correct me if I'm wrong, Wendy, but most of the Republicans don't want to shut down the government. They've realized, as far as I understand, listening to McCarthy and McConnell, that it's just not a great strategy. It's only a handful of, I guess, like mutineers that are driving this, right?
Yeah, that's true, except that the deal that McCarthy cut to be speaker, it's got 2 sort of self-detonating provisions. One is, it takes one person to call for a vote to oust him, so that's a major problem. But the other is the number of very conservative members of the Rules Committee, and it's very hard to get a bill to the House floor without going through the Rules Committee. It's like 9-4 or something majority, and they have 4 very conservative people and 1 sort of pseudo-swing Republican. And the problem is, if they don't agree to set a rule and send the bill to the floor, you have to discharge it, and that takes at least 216 signatures, and it takes 30 days to get a bill to the floor under that provision. So it's really complicated. If he had just done one or possibly the other, he'd have more room to maneuver. But he cut both deals when he wanted to be speaker, and that just really ties his hands right now.
So, Wendy, if there is a shutdown, who's the public going to blame, do you think?
Well, this always gets really murky, right? The public, divided government, it's really hard. You have a divided Congress, which is hard to pay attention to and keep track of. And, of course, you have, the Republicans versus the Democrat in the White House. So they may blame Biden to begin with because he's the, titular head of the government. That happens sometimes. And, it depends. Presidents typically, ultimately, sometimes they can win, like Bill Clinton in the 90s, but sometimes they lose, like Barack Obama and Donald Trump, where they have to eventually make a deal they don't want to make just to keep the government open, and mostly because so many federal workers are furloughed and key services provided by the federal government cease to exist or get really compromised, and people notice that. And when they notice that, they tend to blame the president. So this is the problem that Biden has. But ultimately, if it goes too long, it costs all this money. And then people, run into people who are furloughed, right? They know people who are experiencing hardship because of the shutdown. And that begins to really affect all the members of Congress, no matter what their party is.
So at what point does it have a really negative effect on the economy? Because as I understand it, furloughed government workers, they get back pay as soon as the whole thing is resolved, right? So it would be bad, obviously. You could miss rent payments, for example, but you're going to eventually make that up. On the other hand, contractors are less likely to be paid back for lost wages.
Yeah, well, both wages, or, you're expecting a payment from the federal government, and who knows if that's a direct payment or not, but that may not come, and that could compromise your business, which means that you can't spend money, your workers can't spend money, you might not be able to pay your workers. Also, if anybody's flying, the TSA, the, air traffic controllers, these are emergency or essential personnel, but they don't get paid. That gets old fast. Food inspectors may not show up for work because they're not getting paid, and we don't know how safe our food is. I mean, it's a ripple effect in terms of actual safety for people as it goes too long, but also people start to anticipate that things will be more difficult, and they pull back on whatever they were going to do, and that means they're pulling back on spending their money. So it really becomes a ripple effect, and it's not just, it becomes exponential, and we can go for a couple of days, maybe a week, but we've seen in 2013 and under Trump, after a couple of weeks, it costs billions of dollars. And then you have to ask yourself, if you're the party that's trying to limit government spending and cut federal spending, why are you causing us to incur a $1 or $2 billion loss to the federal government by shutting it down?
All right, who has leverage here? Does anybody have leverage here? It doesn't appear that Speaker McCarthy has much leverage.
Well, people will probably say this could never happen, but it's potentially possible that some people, the 150 Republicans, give or take, or 170 Republicans that, want to keep the government open, some of them who might be thinking of retiring anyway, may decide, that's it, I'm done, I'm out of here. And not only am I out of here, I'm going to defect. I'm just going to tell the conservative members that I'm going to give the majority to Hakeem Jeffries. I'm actually going to vote with the Democrats. I'm going to call for a vote on the speaker, and 10 of us or whatever.
Wait, hang on a second. Bipartisan activity in Washington, Wendy? That's not likely.
We saw that on the debt ceiling. Right? You had a fair number of Republicans, I think 149, right? If 149, 150 Republicans voted to, for the debt ceiling measure. So you can see it happening. Now people say no, 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 but I think it's not out of the realm of possibility. So I think the leverage that the very right wing has is there is a cap on it. Because at some point, people say, that's it, this is just too much, we have to defang you, and the only way to defang you is to take the majority away from you. It's a long shot, but I do think there's some leverage to that threat, only from retiring members of the House. Right now, we don't have enough retiring members in the Republican side, but, things can change in a week or two.
I understand there was a Republican debate last night. I was watching the Yankees, but did you see it? What'd you take away? Where do we go? Where did the Republican Party go here over the next several months?
Wow, I'm a Yankees fan too, but you must really diehard Yankees fans. You tuned out over the Republican debate. I think Tim Scott really rebounded. He had bad, I would say poor performance in the first debate. He came out firing and he was on point and very aggressive about trying to take time away from Vivek in particular, Ramaswamy, and then going after Nikki Haley. I think Nikki Haley and Tim Scott see themselves as either a potential VP or, the person that the party may turn to if Donald Trump actually ends up faltering. So they didn't attack Ron DeSantis all that much, but they really attacked each other. And I think that's a signal that they're sending about who they think their real competition is. Chris Christie's a sort of one-note wonder, right? No Donald Trump, no Donald Trump. And I don't think he gets very far in the party with that, but he's keeping the other candidates' feet to the fire on embracing Trump or rejecting Trump. So you saw a little bit more of dissing of Trump last night than you did in the first debate. I thought DeSantis was better, maybe not good enough, but better. And Mike Pence, he'd have these lines he would throw out there, and he got no applause. I mean, it's so weird. They just landed dead. And I thought these are pretty sensible Republican policies, but he just got no audience reaction, which I think is a telling sign about sort of the limit to his appeal within the party.
He missed his chance. I mean, he, after a mob went to the Capitol and broke in to try and kill him, he seemed like cool with it. So I don't think anyone cares what he says now.
That seems to be the case. Wendy Schiller, thank you so much. We appreciate it. Wendy Schiller, Taubman Center for American Politics and Policy, and director at Brown University. I watched the Yankee game. They won, which was great, and I think that was...
What's their standing right now?
They're last or close to last, and it's just been a disaster.
So how's that Giants and Yankees thing going?
Oh, it's just not great. It's not great, but we got a lot more to do here on the Giants. All right, coming up, let's head down to Washington, D.C., because Amy Morris has world and national news for us.
All right, thanks, Paul and Matt. With the government shutdown looking more and more likely, lawmakers are starting to point those fingers of blame. Bloomberg's Nancy Lyons with the latest.
House Majority Leader Steve Scalise says it's the Democrats who are to blame for spending proposals that add to the debt.
They want to track another $2 trillion in debt that's going to be sent to our grandchildren.
Democratic Congressman Seth Moulton tells Bloomberg Sound On House Speaker Kevin McCarthy is more concerned with power than avoiding a shutdown.
He's not going to do the right thing for the country. He's going to do the right thing for himself.
Moulton says House Republicans are reneging on a spending agreement that was reached during the debt ceiling debate. In Washington, Nancy Lyons, Bloomberg Radio.
The Office of Management and Budget says the White House initiated a shutdown planning call with agency leaders on Friday. Those leaders are now beginning to lay out the procedures if an appropriations lapse occurs, and it looks like it will. Employees will start facing furloughs this weekend. The United Auto Workers Union wants to emerge from its strike against Detroit's big three automakers with at least a 30% pay raise. They've set another Friday deadline if no major progress is made. Another strike expansion is expected. Bloomberg's David Welch is in Detroit.
This is very crucial, again, because I figured he was going to continue the strike no matter what last time. Now we've been out longer. He scored a big public relations coup getting Joe Biden to come to the picket line this week. So, he can really focus on getting down to negotiating, getting down to brass tacks at this point. So big day tomorrow morning.
Bloomberg's David Welch. Fain is expected to announce the union's next move in a Facebook Live event tomorrow at 10 a.m. Detroit time. NATO chief Jan Stoltenberg made a surprise visit to Ukraine. That's where he met with Ukrainian President Vladimir Zelensky. They talked about how NATO members can supply more air defense systems for Ukraine. Global news 24 hours a day, powered by more than 2,700 journalists and analysts.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Risk assets tracking yields. Stocks gaining right now as the benchmark 10-year yield pulls back just a bit, now just 1 basis point higher. CarMax, some of the individual shares on the move, that's plunging after missing a profit estimate. Micron Technology tumbling following the mixed outlook. Meantime, Janet Henry, global chief economist at HSBC, says the U.S. economy may just muddle along for the foreseeable future.
You know, we are in a very, very different world. You know, it's kind of people are just like, is it recession? Is it not recession? As though we're going to see a bottom, as opposed to lots of different moving parts and have an extended period when growth is a lot lower than people would like. And certainly that's our forecast for the US in the coming year and even in 2025.
Right now, the S&P 500, 30 points higher. That's up 0.7%, 4305 in the index. The Dow's up 173 points. The NASDAQ 100 up 128 points right now. You know, we've had these. Taylor's going to make another NFL appearance. Really? This time at MetLife Stadium across the river here Sunday night when the Jets take on the Chiefs. A lot of her fans apparently are snatching up tickets to the game, so they hope they might catch a glimpse of her. Web traffic from people searching for the game on Vivid Seats was a ticket website. They shot up 173%. So maybe she should bring a panda.
So wait, this is
game.
Taylor Swift that you're talking about.
Taylor's. Who did you think?
You're not a Swiftie? The last time I listened to Taylor Swift was when the song "Shake It Up," I think, was out. Was that on the 1989 album? Yeah. Which I think must have been 2015 or so. But what's the deal? She's dating a football player?
Yeah.
Travis Kelce.
On the Chiefs. And,
Travis Kelce. He's the one with a brother.
And they're on the road to MetLife Stadium in New Jersey this weekend, Sunday night. And I'm just going to tune in, not to see the Jets lose, but to see all the teeny boppers in the stands.
Will it be brother versus brother then in this game? Oh no, his brother plays for the Eagles, right?
Eagles, yeah.
I always confuse them because
you are so quick to dismiss this. This is the Beatlemania of our era. This is rabid fans spending $1 billion on a tour. She is an economic force unto herself. And when she mentions something about voter registration, some ungodly number of new voters signed up.
By the way, this is Barry Ritholtz.
This is Barry Ritholtz.
In case listeners are wondering who that person is.
He darkens the door. He's in our studio here.
So, I would like to, because before you came in here, Barry, they were telling me the Stones don't even do that in sales. Okay, the Stones are like 80 years old. They're literally, I'm not even exaggerating. I know, but I wonder.
Keith is 80, right?
I wonder
he's
how
spry.
much.
He's a spry 80.
They look. I mean, he looks like Angela Lansbury, but he's doing well health-wise. I wonder how much they did in ticket sales in today's dollars, the Beatles or the Stones at their peak.
Totally different world, because back then, you toured in order to sell albums. In the modern world of streaming, you release an album to give you an excuse to go out and make money touring, which your record company doesn't, unless you did a 360 deal, your record company doesn't have access to that. So when Taylor Swift, who brilliantly has been re-releasing all of her earlier albums, which she doesn't own herself, Taylor's version, and they're selling great, this tour did $1 billion. I don't know how much of that nets to her, but it's got to be a couple $100 million.
Easy. Yeah.
It's hard to find anything in history that's comparable to this. Forget whether or not you like Shake It Off, which was 2014, not 2015.
I was guessing.
That's a good guess.
I liked the song.
Yeah. But look at her as a unique economic force. She's an industry unto herself.
I don't want economists citing Taylor Swift's concert in any GDP discussion.
It's been she and a few other tours,
Beyonce
have been cited as regional sources of inflation.
Well, and Messi too, right? It's not all about the ladies.
That's right.
I mean, you see this phenomenon, people willing to pay, which, by the way, blows me away. Like, I'm not debating you know, the talent of Taylor Swift. She's obviously immensely talented. Beyonce as well, and Messi too. The crazy thing to me is that people are willing to spend this much in terms of percentage of disposable income to go out and see events.
So let me bring this back to our jobs, which is stocks and bonds and markets. This is a phenomenon known as the winner-take-all set of circumstances, that you have a handful of outsized winners in sports and entertainment and business that capture the lion's share of the revenue, the lion's share of the eyeballs. And in fact, when we look at studies like the one done by Henry Bessenbinder on what drives market prices, something like 2.5% of all stocks globally, and even less in the United States, are responsible for all the gains. Winner take all applies not just to Taylor Swift, but to the S&P 500 as well.
I paid through the nose to go see the Eagles at the Garden a few weeks ago.
How was that show?
Fantastic.
Minus one of their founding members.
Yes, exactly right. But I mean, it's a bucket list item, and and the place was packed, and Steely Dan was the opening act.
Which by themselves are a huge touring band
for sure
for decades.
And they played the Steely Dan played for probably 90 minutes. I mean,
right.
That's how good they are.
But I will excuse me for saying this, but you're old and rich. I mean, Barry, on your on the Big Picture blog, I saw that the baby boomers, of which Paul is a member, have $140 trillion. The thing is, people who are going to Taylor Swift and Beyonce, I mean, they got popular, 10, 20 years ago. So they haven't built the kind of Wall Street municipal bond pools that Paul is swimming in, and they're still willing to pay $500 or $1,000 or $5,000 to go see these concerts.
Well, it's not the 10 and 15-year-olds that are doing that. It's their parents and grandparents. And secondly, don't forget, Taylor Swift's dad was a broker at Merrill Lynch for decades, and he's been running her investment portfolio, which I suspect has done pretty okay over the past few years.
I saw the Jonas Brothers in San Jose, California. How about that? I took my daughter there, but that's what
I was going to say that had to be you had to drag someone.
They did a great job. We got to hang out in the hockey team's dressing room and not open bar, but they had a bar there, set up food, took care of the parents in a big way. That was awesome.
So that was so in New York, the Jonas Brothers played Yankee Stadium. Just to give you an idea of the sense of size, this isn't the Beacon with 5,000 seats. This is a 50,000 seat.
I see on the ad on the TV now some country star, an older country star, which I'm not aware of. I know kind of the new ones, playing the Meadowlands. I mean,
who? I don't know who.
I have to go Google it while you guys talk
I'm a
stocks.
Sturgill Simpson man myself. Okay. If you're talking
But
older,
it goes to that
I like
issue.
Dwight Yoakam.
Kenny Chesney?
No, it's an older. I'll get it. But the consumer's in good shape, Barry. I'm sorry.
You know what? That's exactly what I wanted to ask you about.
This is what it all comes back to.
It's something that you also had on the Big Picture blog. Very timely blog, by the way. Aggregate excess savings. There's been a debate between the San Francisco Fed and the New York Fed, Washington, about how much money the consumer has left.
Right.
Especially when they're putting more on plastic, they're starting to default on credit card and auto loans.
Tiny increases that we're seeing in that space.
So how's the consumer? How healthy is the U.S. consumer?
All right, so let's make this three-dimensional. Instead of just taking a snapshot of it at an instant, let's look across the longer timeline.
Do it in 1 minute.
For 2 years, everybody's stuck in their house. Finally, we come out of our spidey holes. Everybody goes a little berserk the first 6, 12, 18 months and spend like there's no tomorrow. They travel, they go to Disneyland, they go on cruises. We got that out of our system. Now things are going to normalize. Even if the savings rate has more or less, that excess savings rate has more or less come back to normal. Okay, now we got that out of our system. Back to life as it was. Not quite pre-pandemic, but close.
George Strait, MetLife Stadium.
Oh, George Strait is a monster.
Well, I guess he's going to pack in 70,000 fans, I guess, to the Meadowlands. But that shocked me.
More than the Jets.
It's amazing. So good for them. So the consumer's in good shape. The concert business is in good shape. We're tracking it for you. And Live Nation, LYV, that's the way to play the concert business. They own the venues and they own Ticketmaster, get that. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Micron is predicting a steeper than expected loss in the current quarter, a sign that an industry-wide slump is still weighing on the largest U.S. chip maker. Bloomberg's Ed Ludlow explains.
The commentary from Sanjay Malhotra, the CEO, in an interview with Bloomberg is that those customers in end markets that had big inventories or excessive inventories have now worked through them and they're returning to ordering. It's just that the orders they're placing are relative to the demand for their end product. The consumer electronics market in particular is still weak, and in data centers, that is an exception to the rule for Micron. They're saying that actually data center operators are still working through excess inventory when it comes to memory chips.
Micron right now down about 2%. A major airline is changing up its loyalty program. Again, Bloomberg's Courtney Donahoe has that story.
Delta Airlines is planning a redo after an overhaul of its SkyMiles loyalty program earlier this month triggered an avalanche of negative feedback. The airline says it probably went too far when it shifted to awards based only on cash spent, not miles flown.
Now, Delta plans to announce those new changes in the coming weeks. Shares right now are up about 2%. And another warning from JetBlue. The carrier said revenue this quarter will come in at the low end of its forecast and that its fuel costs are higher than expected. It blames fewer leisure travel bookings in September and flight disruption to the Northeast due to weather and also air traffic control issues. JetBlue right now is up about 6%. Those are the company stories we're following this hour. We'll have more Bloomberg Markets in just a bit. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney, live in the Bloomberg Interactive Broker Studio. We are joined by Barry Ritholtz, chairman of Ritholtz Wealth Management. He's got a podcast thing out there, too, so he's going to hang out for a little while, too. Looking at these markets, S&P 500 up about 0.9%. NASDAQ up over 1%. We'll take that after what's been happening out there, so pretty good news there. Yields, 10-year Treasury. Looking at the yields off about that pretty steady right here, 5.6% to 2 years right at 5.09%. And WTI finally takes a little bit of a break here, off about 0.9%, $92.85 for West Texas Intermediate crude. Right now, let's head down to Washington, D.C. Amy Morris has got world and national news for us.
Thank you, Paul. 3 days till a government shutdown. Looking less likely that a last-minute deal will get done to try to avoid it. Speaker Kevin McCarthy is pushing for President Biden to negotiate on tighter border security. Senate Minority Leader Mitch McConnell says that's actually counterintuitive.
If we shut down the government, for those of us who are concerned about the border and want it to be improved, the Border Patrol and the ICE agencies have to continue to work for nothing.
Senate Republican leader Mitch McConnell said a shutdown would mean 20,000 Border Patrol agents may not get a paycheck at all. Striking actors in Hollywood studios are ready to resume contract negotiations. That story from Bloomberg's Steve Rappaport.
Both parties say they'll get back to the bargaining table on Monday, with several executives from the studios expected to attend. The union, representing about 160,000 performers, is seeking pay increases for base salary and residuals from streaming services. Members also want protection against the unauthorized use of their likenesses by artificial intelligence. Simultaneous strikes by actors and writers paralyzed the industry, halting hundreds of film and TV projects. Writers reached a new labor agreement with the studios this week. Steve Rappaport, Bloomberg Radio.
Back to the Senate now, which is reversing its new casual dress code, returning to its business suit tradition. Democratic Majority Leader Chuck Schumer says it is easier for everyone if the men just stick with dressing formally.
Though we've never had an official dress code, the events over the past week have made us all feel as though formalizing it is the right way forward.
So where's this all coming from? Last week, Schumer quietly relaxed dress requirements in the chamber to accommodate Senator John Fetterman, the 6'8" senator from Pennsylvania. He prefers to wear hoodies and gym shorts in the Senate. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Matt and Paul.
Amy Morris, thank you so much. We appreciate that. I mean, Matt, you've got this killer leather jacket, but you can't wear that if you're going to go, if you're a senator.
Guess what? If I was a U.S. senator, I would not. I would wear a suit and tie.
Right.
You've got to look presentable.
Exactly. But I don't know.
I don't know. Maybe I'm just.
I guess.
Well, we're old. Nonetheless, I think a lot of young people would agree that a hoodie and gym shorts is not acceptable for the U.S. Senate.
I'll agree with you on that, but we also have to recognize how fashions and general formality has changed. I love the old photos of people flying in airplanes and everybody's in suit and ties, or Broadway theater. I mean, there is...
They're all smoking.
Right. There is a... Look, when I see people show up in shorts and flip-flops to the theater, maybe that's a little much. I don't need to see your filthy, disgusting feet when I'm watching a play. But
Dude, likewise, I don't like to get on an airplane with people who are wearing, sweatpants and Crocs.
Well, Crocs are just ugly. But if you want to wear sweats, you're traveling, especially a long flight or an overnight flight where you're going to sleep. I can't fault that. I think, and this is where...
They gave you pajamas.
This is where the whole return to office is raising some interesting issues. People have to learn what's appropriate garb for, I'm meeting a prospective client, I'm doing a presentation, I have an in-house meeting. We've gotten very casual and sometimes to the point where it's potentially problematic for the business.
Yep, absolutely. And back to work, we've been speaking to some experts just this week, and basically the conclusion is it's going to be a split, so that's going to be hybrid.
October 1.
The way of the world.
Big deadline.
Big deadline here for Bloomberg. We go 3 days to 4 days. How about that?
Wow.
I don't think we enforced 3 days, so who knows? We'll have more coming up. This is Bloomberg.
Hey, hey.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Shaheen Contractor. She's an ESG analyst with Bloomberg Intelligence. We just wrapped Climate Week here in New York City, so we'll get some color from Shaheen about what we learned about green investments, ESG, all that good stuff. And then David Rainey, portfolio manager at Hennessy Funds, is going to join us here to talk markets. I think I went to business school with this guy. I don't know, so we're going to have to figure out what's going on there. But I think it's my dude from Duke, so we'll have to check that out. But we're going to kick things off with Charlie Pellet, who's got a Bloomberg Business Fund.
Hi, thank you very much. And here's what's going on. Lots of green on the screen right now. Midday, we've got the Dow, the S&P, NASDAQ all advancing. We begin with the NASDAQ 100 index, full of those big tech names, up now by 1.2%. The NASDAQ Composite Index up 1.1%, higher by 148 points, while the S&P 500 index is up 35, a gain there of 0.8%. Dow Jones Industrial Average up 182 points, now higher by 0.5%. 10-year yield 4.60%, with that 2-year at 5.09%. A retreat for gold. Spot gold down $11 the ounce to $18.64, now lower by 0.6%. And West Texas Intermediate crude 92.92 a barrel, down by about 0.8%. Micron Technology shares are lower now by 2%. Micron retreating after predicting a steeper loss than anticipated in the current quarter, indicating that an industry slump is still weighing on the largest American maker of memory chips. Mandeep Singh is a senior tech analyst at Bloomberg Technology, and he was the guest this morning on Bloomberg Surveillance.
It was an inline quarter, and look, this was a third consecutive quarter of negative gross margins. What that means is they've got, an oversupply situation. They've been cutting CapEx, but look, this industry is a commodity, and we know pricing isn't going their way. So clearly, demand is there in certain pockets like AI, like autos.
And again, Micron down by 2.1%. You can hear more of the conversation with Mandeep Singh on the Surveillance podcast. You can download it wherever you get your podcasts. Nike reports today after the close of trading. Nike shares up now by 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Brokers studio. We are streaming live as well on YouTube, so head over to youtube.com and search Global Markets. Also joined by Barry Ritholtz, Ritholtz Wealth Management. We got him for another segment, so how cool is that? Looking at the markets here, we need to get an update about what's happening out there. We can do that with Abigail Doolittle. She joins us as well here in studio. Abs, what are you looking at?
Well, the reversal that we've had on the day, it's pretty impressive at this point. We have the S&P 500 up 0.8%, the NASDAQ up 1.2%, the chip-heavy index, the SOX, up 2.5%. This is basically the best day for these indexes, 2 to 4 weeks, depending on the index. And to the best of my ability to determine, it has to do with yield. So from about 2 o'clock in the morning to, let's call it 9 o'clock or around the open, the 10-year yield had gone higher, backed up by about almost 8 basis points. And then as eco data came out this morning, especially that pending home sales numbers that were disappointing for the month of August, it has come back down. Now, right now, it's backing up ever so slightly, but we have this narrative right now. And it's not just a narrative, it's the reality. I mean, yields are so high at this point as stocks had been going higher. Now, over the last roughly 2 months, there's been the inverse relationship. I think that the big question coming out of what is the worst month of the year, the worst quarter in a year, is whether or not this type of dynamic continues into October.
It seems like, again, it feels a little bit like a trading range, but Barry, what do you got for us?
Yeah, as we see less and less ambiguity as to the path of the Fed forward, people will start to become more comfortable either overweighting bonds or returning to stocks. Look, we've had a great run off of the lows of October 2022. S&P up about somewhere between, depending on where we close today, 12 and 14%, and the NASDAQ doing much better. The fact that this is a little stumble for a month, not the worst thing in the world. And historically, when we look at the last Fed increase, on average, the cutting cycle begins 8 months later. So we'll start worrying about that sometime mid-2024.
What about rates, Barry? I mean, when you see the Fed funds rate going to 5.5%, maybe even a little bit higher, does that mean that the 10-year follows closely behind?
Yeah, you would think. What are we, about 4.5% on the 10-year?
Right, we're still 100 basis points away from where the Fed funds rate is, so it's got to get there. I would think it always has in the past.
Right, it's not perfectly correlated, because the wild card is, hey, are we going to continue the sort of 2.5–3% GDP growth that we're expecting this quarter, or is that going to soften next year into 1–2%?
Well, it's got to soften with rates at 4.5%, oil at $95.
Does it? Does it have to soften? We were just talking earlier that the U.S. consumer has remained unstoppable. So unless you're going to tell me the consumer is going to throttle back dramatically, 2.5% GDP is not unthinkable. And keep in mind, historically, 5% or so Fed funds rate, that's about average. It just seems tight after 2 decades of zero, but we've gotten off emergency footing. Inflation CPI has fallen from 9 to 3%. As much as the Fed is talking tough, I got to think we're much closer to the end of the cycle than the beginning, right?
Abigail, what do you think the next, I mean, as you talk to folks on the street and talk to traders, what do you think the next catalyst this market might be looking for?
I think right now there's not so much, and this is along the lines of what I was saying yesterday, I'm not so sure that there's an event catalyst. We do, of course, have PCE tomorrow, ISM, both services and manufacturing next week, non-farm payrolls. We have the earnings season coming up, data for the month of October, and then we have the Fed in November. I think, something that folks are talking about right now is this JP Morgan long fund that also has a natural hedge built into it, and that hedge right now for the end of this month is targeted toward 42.10. So there are a lot of people saying that the reason that we have the S&P 500, it had been going close to that level, and it still could, is in part because they're aware of that. Now, the question is, will it act like a slingshot or a magnet from there? Because the street is opposite that being short, long that put, that JP Morgan, the fund is long the put position around 42.10. We all know I like a good chart, and so right now the S&P 500.
Because you can follow you on Twitter and
at the Chartress.
The Chartress, yes. There you go, boom.
Hanging above the 200-day moving average. The Russell 2000, which tends to lead because it's riskier, it's growthier, so people are unloading that a little bit faster, well below its 200-day moving average. It feels like a range, but I would argue right now we're below the range, and if you really were to calculate it from just a pure chart perspective, which brings in all of these factors that we're talking about, it looks like the move is to the downside toward 4,000. I would also point out one other thing on the VIX. Last week, the VIX curve was sharply in contango, which is as it should be. That VIX
means
is going higher. So right now, last week, let's just say the VIX was at 16. It would mean that November would have been at 17, December at 18, going higher as risk is out. Now the VIX curve is basically flat. When the VIX goes into backwardization, which is the opposite, where the current VIX is higher than the future VIX, which says that investors are more certain or less certain about the present moment than they are the future moment, which doesn't obviously make too much sense. That's typically when you see more selling, and then when people talk about the big capitulation moment, that's when potentially the VIX goes into backwardization deeply. Are we there yet? No, but just from these technical standpoints, positioning, flows, I don't know. I would be a little bit cautious going into October. Now, that said, I do not run money like Barry, so he has skin in the game. I'm just not observing.
But I'm cautious about a lot of the same things that you've mentioned. No one wants to see oil stay in the 90s if you want to see more consumer spending. And historically, these temporary government shutdowns tend not to affect the market if they're short term. But this is a different group of politicians driving this.
True.
This is a small caucus within a larger conservative wing of the Republican broader party. I don't get the sense most Republicans want a shutdown. It seems to be 5 or 6 people that are driving this bus. And if this shutdown lasts months, then, all bets are off.
There are a lot of ifs, Barry.
Yeah.
If the shutdown lasts a long time, if the UAW strike goes on, if oil stays this high, if rates continue to rise. I mean, somebody who was T. Rowe Price shorting rates right now.
Oh yeah,
saying that they're going to go to 5.5%. Jamie Dimon was out a couple of days ago floating
7%.
a 7% number for the Fed funds rate.
And that reminds me, how do you feel about cash? Because I was talking to Steve Sosnick of Interactive Brokers today, and he was saying for the first time in decades, we're basically getting paid to wait because you can make 5.25 just for being in cash. So
I know. I'm happy with it.
5% on cash, muni bonds, really substantial returns on a tax-adjusted basis. If you live in New York, Massachusetts, California, there are a lot of attractive alternatives.
You're darn right, New Jersey. Abigail Doolittle, thank you so much. Abigail Doolittle, she follows all the markets for Bloomberg TV, Bloomberg Radio. We're fortunate to get a couple minutes of her time. Again, looking at the markets right here, the S&P up about 0.75%. NASDAQ up over 1%. All right, last week in New York, it was the United Nations General Assembly. That's big. We had traffic jams. That's
Kinda
not so
big.
good.
I mean, not everyone came.
Not everybody came, which is kind of weird. Like, wouldn't he come? I would think he'd want to be here.
Macron didn't come.
I know.
Modi didn't come.
I know. That's kind of.
She obviously.
But I'll tell you,
didn't
all the climate folks were here because it was also Climate Week in New York, so that was good timing. So we wanted to check in with our good buddy on the ESG front, Shaheen Contractor. She's an ESG analyst for Bloomberg Intelligence. She joins us live here in our Bloomberg Interactive Broker studio. So I'm guessing last week was a big week for you guys being kind of folks that think about ESG and ESG investing. What were some of the takeaways?
It was, Paul. So there were a lot of events. I think I had event overload. But I think some interesting things that came out were a little more on the policy side here in the US. So, for example, ESG funds came out with their naming rule by the SEC, which means that, if a fund claims to be ESG, they have to actually disclose how they do it, which is, I think, pivotal.
Seems basic.
It seems, basic is better than pivotal.
Better than what?
Pivotal.
Pivotal.
Political, okay.
Pivotal.
Okay, okay. So, all right. Are we still going to use the name ESG? Because some people are saying you got to change that name here in the U.S.
You got to find a new
It's in
phrase,
my
right?
title. I mean, it's in my title, so I'm
Right.
going to still use it.
And I mean, the most important question, I think, is, did you meet the Crown Prince last week?
I did not.
You didn't?
No.
Prince William was here,
Yeah. Oh.
who is first in line to the throne of the United Kingdom, right?
That's big.
And he was like at the plaza. He was working with Bloomberg.
He did an event here.
I can't remember what it's called, like the what's the name of our the firecrackers or something, where we pick the most important ESG kids that are going to change our world.
Okay.
And he gave a speech. I think,
good.
to them.
Awesome.
Yeah.
Awesome.
So what do we think is going to happen with this political pushback to ESG? It seems like the next generation, women and the generation after the boomers, whether it's X or Y, are very supportive of ESG investing. A lot of the existing Wall Street...
Well, does anybody know what that is? What is ESG investing?
That's a good question.
I think that's the biggest challenge. So, what is really ESG? So, you mentioned that the next generation is where it's at, for lack of better words. I think it's interesting because if you look at ESG fund flows, which I do a lot, especially for ETFs, most of the allocations are institutional. So, these large, huge one-off allocations from institutions, we don't see too much retail interest in this space. So we've heard for a very long time that retail interest, but we're not seeing it yet. And that's where I think the political pushback is going to be a bit of the challenge. So what we need today is a wider investor base. We need to stop being dependent on these couple of investors. And I think that's going to pause or limit that expansion.
That's very
interesting. For the short term.
Because if you go to Europe, ESG investing is as popular, as top of mind as it's ever been, correct?
I think they've doubled down and the U.S. has stepped back.
Yes. And we see that even just from the energy companies, right, Barry? We've had the energy companies say they're not nearly as environmental friendly as maybe the European energy companies.
Didn't Mobil just hit an all-time high in their stock price? I mean,
oil prices.
Whatever your green aspirations are, that doesn't mean we're not going to be consuming petroleum or oil-based products for, if not decades, certainly the next 10 years. And that's before we think about oil as a material science product.
I think that's fair. And just, coming back to Europe, if we think of ESG ETF flows, just for the first half of this year, they were almost entirely Europe because the US actually saw negative flows.
Interesting.
For one of the first times.
So here in the U.S., what do you think will be the theme or themes over the next 1 or 2 years as it relates to ESG investing?
I think climate is going to be one of them because I find that people tend to gravitate more or they tend to understand the themes. If I say, here's a gender fund or a climate fund, people understand that. But if it's ESG, I think it's a little harder to understand. Though that being said, I think ESG, people still recognize that analyzing such indicators is still pivotal to any fundamental strategy. It's just, how it comes together, the transparency, all that is
Well, it's also easier to
rightfully
make money on the green transition when the government's passing out trillions of dollars.
But to be fair, the government has subsidized fracking and all sorts of carbon-based R&D
I'm not
for
dissing it.
decades.
I'm just saying it's easy to get behind. If somebody's handing out bags full of money, I'm pretty likely to line up.
Well, now you get to choose. Do you want to line up on the fracking side or the solar and wind side or the electric vehicle side?
But it's easier to build a solar farm than it is a refinery.
Much easier.
Yeah.
And in fact, if you look at some of the farmland funds, what used to be a negligible percentage of their gains and revenues has now become a substantial portion, namely heartland farms putting cell towers on their farms, putting wind spaces, and on the more challenging to farm, less fertile areas, putting up solar arrays. And it's genuine revenues to these landowners.
Sheen, what is just 30 seconds here? What's the appetite when you talk to clients about ESG? What's the feeling these days?
It's a bit mixed. I think if you talk to Europeans, it's all, again, the doubling down. In the US, it's more around the lines of let's pause and see where the regulation takes us. I think a lot of people recognize that it's a very concentrated market and we need to see that widening of the investor base in the US.
But that means mutual funds, is that kind of what you're thinking about, or just institutional allocations from pension funds and endowments and things like that?
The latter.
Right, very good. Okay, Shaheen Contractor, thanks very much for joining us. Shaheen Contractor is our lead ESG analyst here in the United States. And again, ESG investing, it's big. Now it's just, it seems like in the U.S. it's become more politicized than it was several years ago. So that's kind of leading to, as Shaheen was just mentioning, an outflow of funds to ETFs, whereas in Europe, it is still very much in the forefront. S&P 500 up 0.8%, NASDAQ up 1.2%. Gold, that's off about 0.6%, $1,863 an ounce for gold. We stay on top of it all for you. We're going to have more coming up. This is Bloomberg. Good morning. Got some company news right now with Lisa Mateo.
You got it, Paul. Some of the first owners of Apple's iPhone 15 Pro and Pro Max are complaining that the new devices get too hot during use or while charging. Bloomberg's Mark Gurman offers his explanation.
It could be compounded or caused by the iPhone setup process. When users get a new phone, re-downloading all of their apps, their data, their photos, that can be a long and processor-intensive procedure. So it's possible that is either compounding the issue or creating it. It's also possible it's triggered by certain apps with bad code in the background, Instagram, Uber, you name it.
Apple shares right now up about 0.8%. The virtual and augmented reality industry is heating up. Bloomberg's Gina Cervetti explains.
Facebook parent Meta Platforms has taken the wraps off a new $500 mixed reality headset called the Quest 3. That's more than double the cost of the previous version, but a lot less than the roughly $3,500 price tag that Apple is expected to place on its coming Vision Pro early next year. Meta also rolled out a second version of the smart glasses developed with partner Ray-Ban for around $300.
Shares of Meta are up about 2.5%. Meanwhile, Alphabet's Google, Meta, and Apple are set to win U.S. approval for their mobile, virtual, and augmented reality devices. Under a proposal announced by the Federal Communications Commission, the low-power gadgets would be allowed to tap airwaves that are used by Wi-Fi-enabled devices. The FCC says the move will benefit consumers and also boost U.S. leadership in advanced wireless technologies. The agency will vote on that proposal next month. Alphabet shares up nearly 2%. Those are the company stories we're watching. I'm Lisa Mateo. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ solidly in the green. A 35-point advance right now for the S&P 500 index, up by about 0.8%. The Dow up 177, up 0.5%. NASDAQ, the composite index, up 153, up 1.2%. The NASDAQ 100 index also higher by 1.2%. 10-year yield 4.61%, with a 2-year now yielding 5.09%. Spot gold down $12 the ounce to $18.62. That is a drop right now of just about 0.7%. West Texas Intermediate crude down 0.9%, 92.84 for a barrel of WTI. A global bond sell-off deepened today amid speculation that central banks from the U.S. to Europe are poised to keep interest rates elevated. So what about the messaging from the Federal Reserve? Tom Porcelli is chief U.S. economist at PGIM Fixed Income, and he was a guest on Bloomberg Surveillance.
I think they did everything right? I think that, sort of yanking 2 cuts from next year, all of the adjustments they made to their economic projections. I mean, it all basically thrusted higher for longer into this spotlight that I think is still shining pretty bright on it.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcast. Nike, after the bell, is set to offer a crucial look at the financial health of American households as Wall Street frets over a growing list of headwinds to spending and consumer-linked stocks languish. Ahead of that earnings report, Nike shares up now by 0.3%. Recapping, stocks are higher. S&P up 35 right now, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. As always, Matt Miller and Paul Sweeney here in the Bloomberg Radio studio. Let's continue our discussion on the ecosystem, ESG, the green outlook, if you will. We can do that with Dr. Lise Castillo-Nealis. She is with the firm Ramboll, and she joins us via Zoom. Hey, Lise, can you just tell us, let's start off real quick, what does Ramboll do? What are you guys doing over there?
Yeah, thanks for inviting me. Ramboll is a consulting company and engineering company as well, and we do a lot of environmental health sciences and other types of sciences.
So what is that? I mean, you measure the hole in the ozone, or what kind of sciences are we talking about?
So we do a lot of different things, but I personally work heavily on biodiversity and ecosystem services. So we help our clients meet their sustainability goals in a variety of different ways and help them increase biodiversity on their sites and, form the goals that will help them reach the points they want to get to.
And so what is the kind of the business case for this? When you go talk to your clients, how do you frame it? How do they think about it?
Well, the business case is that, unfortunately, nature isn't an unlimited resource, even though our financial markets have treated it that way in the past. For example, if pollinators disappear, most humans are going to starve because 75% of our crops rely on pollinators. So, the business case is that our businesses and our societies depend upon natural resources, and when those resources disappear, businesses are affected. So we can already see this happening with the increase in extreme weather events and the resulting increase in insurance premiums.
Who are your? I think we all agree with you there.
Yep.
I think about the bees a lot, for example. But what can we do about it? Who are, for example, your clients? Are they small, medium-sized businesses, bigger businesses? Do they have a lot of land? Is it? Can they plant things? Can they, hunt? What's the idea?
Well, the idea is that, all businesses can contribute whatever their size. My clients are small businesses to very large businesses. The larger ones do tend to own a lot of land, and some of that land has been contaminated in the past, often from historical events before people knew that they were doing this contamination, before there were laws to control it. And they're trying to clean that up, and they're trying to improve biodiversity on those sites. In other cases, there are clients that just want to contribute more and want to like build their image and, you know, their social license. And so then they want to increase nature on their properties as well. But you don't have to have large properties to do that.
Right.
You can do that on your small building too.
How do you make a distinction between nature and climate change and climate action?
Nature and climate are really intertwined. Basically, there's pretty good agreement that we're not going to reach our climate goals unless we're also striving for nature goals. So plants and algae, they pull greenhouse gases out of the air. And if we're just trying to reduce greenhouse gases without, you know, increasing the area of habitat for these species, then we're not going to really have great success.
So what are the types of companies that you think are doing a good job, not by industry, but just kind of, what kind of success stories do you find, and maybe what are some of the frustrations that you have when you go out and talk to different types of companies?
I mean, the successes that I find are typically it's individuals within companies that are just really motivated and are really being a force for change within their company to make like the small decisions that add up over time. And, you know, as they're having successful projects, then others in their company are seeing that and getting on the bandwagon. So, for example, companies that are using nature-based solutions instead of standard environmental solutions. And that often comes down to individual project managers making those decisions.
How much of a concern is greenwashing? You know, I think we have the same concerns, and so I will do what I can to recycle, for example, or to buy recycled materials. But I don't ever know what's happening once I put my cans in the aluminum bin and my paper in that box. You know, it's kind of hard to see what happens when it moves down the line.
Yeah, I mean, there's some concern for greenwashing. There are frameworks out now, like the TNFD, which just opened, which was just launched last week. That's a task force on nature-related financial disclosures. These kind of frameworks can help companies really systematically look at what their dependencies and their impacts are to nature, and to report those in really clear ways. And so the uptake of this kind of disclosure method is going to help a lot with greenwashing.
That's kind of where I wanted to go. Here at Bloomberg, at least, we're big on data. And I know there's been, when I talk to investors that want to maybe invest in an ethical way, focusing on ESG, just broadly defined, one of their concerns is they just don't have as much data as they would like. The disclosure is not consistent across companies and industries. It differs even from the U.S. versus non-U.S. Where are we just in terms of kind of getting companies to think about, good disclosure?
Well, some disclosure is required now, especially in Europe. There's the Corporate Sustainability Reporting Directive is going to be requiring disclosures. And that's not just for European companies, that's also for large companies typically that have a presence in Europe. So that is going to be required soon. There are also these voluntary disclosing measures like TNFD or science-based targets for nature that companies are taking up. I mean, I think basically this is just getting to that investors want to know what the risks are, that their investments are actually, taking into consideration what their dependencies are in nature, and they're preparing for that so that investors are not making a bad investment or taking a big risk.
You mentioned that we won't meet our, temperature goals if we don't have the kind of biodiversity that's necessary in our ecosystems. Are you confident that we're making real progress here?
I mean, I think we are making real progress. I don't think we're making enough progress, unfortunately.
All right, Lise, thanks so much for joining us. This is a big issue for a lot of companies and a lot of investors and for the markets in general. Dr. Lise Castillo-Nealis, she's a biodiversity and ecosystems senior manager at Ramboll, trying to work with companies to, a lot of things, but just kind of interact better with nature, reduce the carbon footprint, all those things that a lot of
Have you seen The Biggest Little Farm, by the way?
No.
A fantastic documentary.
Biggest Little Farm.
I can't recommend it enough. I've seen it like four times now. It's about a journalist and a scientist who are living in the city, and the urban sprawl gets too much for them. I think the real catalyst is that they get a dog who won't stop barking in their apartment, so they have to move out, and they end up buying a farm in California that has had no biodiversity for decades.
Okay.
So the land has essentially been destroyed, and the film documents, I think maybe over an entire decade, how they reintroduce the diversity into the ecosystem. They solve one problem with another. For example, they have way too many snails for some reason in like an orchard, and they don't know how to deal with it. And they find that what they need to do is get ducks to come to their farm, and the ducks then end up eating all the snails, so they have all of these issues. I mean, it's really good for kids to watch as well as adults. I showed my daughter and my parents this movie. It's really, I think, encouraging,
right,
in terms of what can be done if you just make the right moves.
And the question is, how much, as it typically is, how much government, I'm going to say, how much government should be involved in all those things? Is that something that the markets will drive, or is this something that the governments need to have a hand
those
in?
are the questions that we discuss. In this movie, there isn't really any kind of government intervention or a regulation.
Yep. All right.
They just go about their business because they want to make the farm produce.
Yep.
And at first it isn't, and by the end of the film, well, I'll ruin it for you. It is.
A happy ending. All right, let's head down to Washington, D.C. We'll get World and National News with Nancy Lyons.
Hey, Matt and Paul, Leslie Lotto here. As we get ever so close to a government shutdown, federal workers are starting to get noticed. The shutdown appears imminent. Messages recognize that there is a growing risk for millions of employees and military service members who could stop getting paid this weekend unless Congress can stitch together a last-minute deal to extend government funding beyond Saturday. COVID's toll is often measured by hospitalizations and deaths, but there are other debilitating symptoms that are bound to linger on, including increased rates of fatigue, dementia, and heart disease that may surface years or decades later, as we hear from Bloomberg's Amy Morris.
COVID's impact has extended beyond the direct effects of the coronavirus. Stay-at-home orders and other measures aimed at slowing the contagion spread led to postponed medical care for other diseases. The National Institutes of Health says new cancer diagnoses fell abruptly early in the pandemic. Plus, there were disruptions to education, jobs, and incomes of people around the world. Even though COVID is no longer a global public health emergency, its legacy will be felt for a long time. In Washington, I'm Amy Morris, Bloomberg Radio.
Thank you, Amy. Striking actors and Hollywood studios are ready to resume contract negotiations. Bloomberg's Steve Rappaport has that story.
Both parties say they'll get back to the bargaining table on Monday, with several executives from the studios expected to attend. The union, representing about 160,000 performers, is seeking pay increases for base salary and residuals from streaming services. Members also want protection against the unauthorized use of their likenesses by artificial intelligence. Simultaneous strikes by actors and writers paralyzed the industry, halting hundreds of film and TV projects. Writers reached a new labor agreement with the studios this week. Steve Rappaport, Bloomberg Radio.
In New York, this is Leslie Lotto, Bloomberg Radio.
Profits, headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, and NASDAQ are all advancing. We've got the S&P just about at the best level of the day right now, up 40 points. That is a gain of 0.9%. Stocks are rebounding ahead of an afternoon speech from Fed Chair Jay Powell. Tech giants, including NVIDIA, Meta Platforms, and Tesla, all driving the NASDAQ 100 index up by more than 1%, up 1.3% right now. The NASDAQ Composite Index also higher by 1.3%, and the Dow Jones Industrial Average up now by 0.6%. 10-year yield right now, 4.60% on the 10-year. We've got the 2-year at 5.08%. Spot gold down $10 the ounce to $18.65, down 0.5%. And West Texas Intermediate crude at $92.65 a barrel, down 1.1%. Sources tell Bloomberg the United Auto Workers Union wants to emerge from its strike against Detroit's three major automakers with at least a 30% pay raise. That's the level, which is lower than the around 40% hike initially proposed to Ford, GM, and Stellantis that the union believes will allow it to satisfy existing members and organize non-union plans. David Welch is following the talks for Bloomberg News, and he was a guest this morning right here on Bloomberg Markets.
So part of what the union is doing here is they're trying to reignite the labor movement and make the UAW more relevant again. Because really, the union has failed in organizing Toyota and Honda plants and Tesla and so forth. And they think of, they have a big number and it starts with a 3. Even if it's 30, maybe it's 32, they're at 36 with their latest offer, that they'll be able to hold it up as a flag of victory and a great marketing message. That's where they are. Now, do they settle at 30? We'll see.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Shares of the automakers, they are higher right now. Ford up 1.8%, General Motors up 3%, Stellantis up by 2.6%. Nike reports after the close of trading today, again recapping S&P up now by 1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. Let's check in with a player out there in the business. David Rainey, he's a portfolio manager at Hennessy Focus Funds. He's been in the business a while, but of course, the absolute highlight of his resume is his MBA from the Fuqua School of Business at Duke University, part of the great class of 1991. David Rainey, how you doing, my friend?
Good to talk to you, Paul.
David, let's step back here a little bit here. What's your market call here? There's a lot of crosswinds for investors to deal with, a lot of headwinds, quite frankly. How are you guys just kind of viewing this market here?
Well, we're long-term oriented investors, and we've always taken a business owner's perspective and invest in public equities. And, we approach every investment, whether it's in the fund or on our watch list, as if we're going to own it indefinitely. I mean, clearly what has the market all shook up today and over the past year or two is inflation, the rising rates, and what's that doing to low and moderate income Americans. And it's doing a lot. And so we're sensitive to that. We don't think we have a lot of exposure to businesses and product and services companies that have a ton of low and moderate income exposure, but we're aware of it. And, traditionally, that's the class of Americans that tends to take it on the chin more so than others. But if I step back and I have a little bit of gray hair, I look back at the Fed funds rate 15, 20, 25, 30 years ago, 2, 3, 4%, and I'll look at a 10-year treasury and it would have had a 4, 5, or 6 handle as well. And so what's going on with the yield curve, the level and the shape of the curve isn't surprising as we normalize. I guess we're kind of back to the new normal, and that's what the market's waking up to.
So when you think about long-term investing, I would think that management quality, really getting a good handle on management, their ability to redeploy capital, grow the business, generate returns. That would be top of the list of the things you look at. How do you assess management quality?
Yeah, we actually take a criteria-driven approach. We have 5 key criteria, and you hit it on the head. Management is one of those 5. We look at the business model, its ability to generate attractive returns on invested capital. We look at management, and you can't screen for management quality. This isn't something that pops up on a screen and tells you to take a better look, but we look for managers that are good at running the business day to day and investing the business's free cash flow back into it to grow the firm's economic value. We also look at the reinvestment opportunities that are out there. We look at valuation, and then finally tail risk. What's the likelihood that this compounder gets upset because of a balance sheet issue, fad or fashion, this type of thing? But you're absolutely right. If you're going to own a stock for more than a quarter or two, management is one of the key considerations to make before you put money at risk.
I look at some of the names that you guys own, and a couple jump out at me, most notably because they're both in the from Richmond, Virginia, a place very near and dear to my heart here. Let's start with CarMax, because that's in the news here today. Talk to us about what you heard from CarMax and how that may impact your thesis of this name.
Well, I mean, again, you kind of step back and you look at what happened with COVID. I mean, there was a time when CarMax was trading, I think back in February or March of 2020 at very distressed levels, almost as if there was an existential threat and the business was going to evaporate. Fast forward to today, they've made enormous progress with their omni-channel initiative. They're the country's largest used car dealer or retailer, and its differentiated business model is based on providing a better customer experience by having a large selection of high quality, low mileage cars across a nationwide network and no haggle prices. And what we've seen during our holding period in CarMax, we've owned it for over a decade, is that they've steadily taken market share because of their better customer experience. And so we think that they're doing all the things today as the market, as they're kind of bumping along at the bottom, so to speak, at growing a better customer experience, particularly through omni-channel, which is the ability to seamlessly connect what happens at a store with what a customer wants to do online, and bringing that all together. And so, CarMax is a name that we think will recover nicely as used car sales pick up. Typically in the U.S., in any given year, about 40 million used cars are sold. We're probably bumping around at about 35 million this year because of the pull forward over COVID. And we think that as CarMax works its way out of this macro environment, that there's $2 to $4 of hidden earnings power in the stock. So I think consensus is about $3.20 this year. There's another $2 to $4 as the market recovers, and they see very good incrementals on the growing sales.
30 seconds, Dave, real quick. Markel Corporation, another Richmond company.
Yeah, Richmond-based property casualty, specialty property casualty insurance company with important holdings in public equities and control positions in private businesses. Many people talk about it in terms of Berkshire Hathaway, describe it as a baby Berkshire. We're very excited about Markel's opportunity going forward. Look, property casualty insurance is a high single-digit return on equity business, but they've consistently generated low double-digit to mid-teens because of their equity positions in both the public markets and now a growing private portfolio. So we're very, very excited there.
It's kind of got a Berkshire kind of stock price, $1,500 a share here. Very interesting. David Rainey, thanks so much for joining us. Dave Rainey, he's our portfolio manager at Hennessy Focus Fund. I'll see you hopefully down at Duke sometime very soon. We're going to have more coming up. This is Bloomberg. Let's go to Lisa Mateo for some company news.
You got it, Paul. GameStop has a new chief executive. The video game retail chain has appointed the founder of online pet food retailer Chewy as its new CEO. Abigail Doolittle says Ryan Cohen's RC Venture acquired a stake in GameStop in 2020.
And it was a wild ride because at that time it started off with a one handle and then very quickly in months went up basically 9,000% to $120. It was one of the poster childs for the whole meme stock moment. So he, of course, is already the chairman. Now he's the CEO, replacing the second CEO to leave in just 3 years. He's starting immediately. No compensation will be received.
Now, not doing much for shares right now. It's down about 1.5%. The maker of Fortnite is cutting its staff. Sources tell Bloomberg that Epic Games is laying off about 900 employees, or 16% of its workforce. And Nike is expected to open its books after today's close. Bloomberg's Simone Foxman has more on what investors will be looking out for.
Slowing of the American consumer. Are they actually slowing down? That's the same question we've had for a long time. China, how is demand holding up there? China is a decently large part of their market, 14% as of last year. And then also, they're still managing some overruns in terms of inventory. They've had some success at bringing that down. Can they continue to show that success?
Now, shares of Nike right now, they're up just a fraction. And Nestle's CFO says the total amount of food and drink sold globally has been falling since the start of the year, suggesting consumers are eating less or eating more from home. Francois Xavier Rogers said he doesn't think it'll last. Nestle shares are down just a fraction. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney live here in the Bloomberg Interactive Broker Studio. Nice pickup here in the markets. S&P up almost 0.7%, 28 points. NASDAQ up over 1% here, so we're up about 130 points on the NASDAQ. So good moves here as we start the early part of the afternoon trading here. Yields, looking at the 10-year Treasury, 4.61%. It had traded as high as 4.68%, so we've had the yields steady down a little bit there. Crude oil also pulling back about 1.3% now, $92.44 here. So a little bit of a better look to this market right here. Right now, let's get world and national news. We'll go to Leslie Lotto from the Bloomberg Newsroom in New York.
Thank you, Paul. We could find out tomorrow whether United Auto Workers' strike against Ford, GM, and Stellantis will expand further, but we're getting a better sense of the union's goals. Sources are telling Bloomberg News the union wants at least a 30% wage hike to come out of this work stoppage. We get more from our Detroit bureau chief, David Welch.
You know, they have a big number and it starts with a 3. You know, even if it's 30, maybe it's 32, they're at 36 with their latest offer. You know, that they'll be able to hold it up as a flag of victory and a great marketing message. That's where they are. Now, do they settle at 30? Yeah, we'll see, because there are a lot of items on the table and they're going to be horse trading going on.
That's Bloomberg's David Welch, who joined us on Bloomberg Markets from Detroit. House Republicans have launched their first formal impeachment hearing against President Biden, saying that there should be accountability in their case to the public, their colleagues, and skeptics in the Senate. They're trying to show links to his son Hunter's overseas businesses, though key witnesses say they do not yet see hard evidence of any impeachable offenses. Lawmakers claiming the president, quote, abused his public office for his family's financial gain. And Baltimore police say a man has been arrested in connection to the murder of a Baltimore tech entrepreneur who had built a successful startup which earned her national recognition. Police already announcing they were looking for Jason Billingsley after the death of 26-year-old Pavel Lepere. Her father and friends gathered for a vigil last night. Here's her dad, Frank. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leslie Lotto, and this is Bloomberg. Back to you, Paul.
Leslie, thank you so much. We appreciate that. Leslie Lotto with our look at world and national news. Well, Matt and I, we've been following very closely this growth in private credit. It is just extraordinary, really, over the last decade plus how much capital has flown to the private credit space, and now Blackstone kind of increasing its bet there. Blackstone is looking to raise over $10 billion across 2 private loan funds in Europe and the U.S. That's according to people with knowledge of the matter, as the firm seeks to further capitalize on the growth of private credit. The direct lending funds, one in euros and the other in dollars, are targeting capital from institutional investors for a fixed term, said the people, who aren't authorized to speak publicly on private matters. A spokesperson for Blackstone declined to comment. Blackstone Credit and other major private debt managers such as Ares Management and HPS Investment Partners are increasingly able to write larger checks for borrowers as their coffers swell. Private funds with more than $5 billion took the largest share of capital raised in the first half of the year. That's according to a report by PitchBook this week. Deals in the $1.5 trillion private credit market, which has burgeoned into a competitive funding tool for private equity firms, are coming thick and fast. This week alone, Bloomberg News reported on direct lending firms working on plans for potential multi-billion-dollar buyouts of Adevinta, Keras, and Iris Software. Blackstone, meanwhile, is helping fund the combination of New Mountain Capital's Health Comp Holding Company, LLC, and Marlin Equities Partners, Virgin Plus. The industry growth is being driven by investment bank caution around underwriting leverage loans given volatile market conditions. Blackstone has about $295 billion in its newly formed credit and insurance unit, so the money continues to flow there. Quick check of the market here. S&P up 0.7%, NASDAQ up 1% as well, and yields are steady. 10-year Treasury 4.61%. Sound On with Joe Matthew from Washington, D.C. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? Is the economy stupid? Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the 8 ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Thank you for speaking while I'm interrupting. Welcome to the fastest show in politics, this day after the big Republican presidential debate that showed the desperate race for second on the campaign trail with now, 2-3 days to a government shutdown? Does it matter? We'll be joined next by a man in the middle of the debate over spending, Congressman Dusty Johnson. The Republican from South Dakota helped negotiate the debt ceiling deal. We'll share insights in a moment. Analysis on the debate and the politics of shutdown from our panel today. Jeannie Shanzano is with us, Democratic analyst, Bloomberg Politics contributor, joined by Republican strategist Chapin Fay. So let's get started. As always, with a look at Wall Street, we go to New York. An update now from Charlie Pelton.
Hi, thank you very much, Joe Matthew. Happy Thursday. We have got the Dow, the S&P, and NASDAQ all advancing right now. We're holding close to session highs. Midday trading with the Dow up 140 now. That is a gain of just about 0.4%. Stocks are rebounding ahead of an afternoon speech from Fed Chair Jay Powell. S&P up 32, a gain there of 0.8%. The NASDAQ Composite Index up 142 now, higher by 1.1%. 10-year yield 4.61% on the 10-year, with a 2-year that's yielding 5.09%. Spot gold down $11.50 the ounce to $18.63, down 0.6%. And West Texas Intermediate crude is down 1.5%, $92.31 a barrel on WTI. Jobless claims rose last week by 2,000 to 204,000. Estimates were forecast to come in at 215,000, according to Bloomberg estimates. Matt Lazzetti is chief U.S. economist at Deutsche Bank.
When you look at the labor market, the consistent story is one in which labor demand is coming down materially, and that is leading to a labor market that is no longer extraordinarily tight, it's no longer very tight, but it just looks historically tight. But at the same time, there's not much evidence of layoffs taking place. That's true in the JOLTS data. It's true in how people are perceiving their job opportunities. It's true in the unemployment claims data so far.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcast. Philip Morris International says the Marlboro maker's target to get most of its revenue from smoke-free products by 2025 is probably out of reach after growth has been dented in Russia and Ukraine, two of its key markets. Shares of Philip Morris International, they are trading lower right now, actually trading higher. We've got Philip Morris up now by 2.9%. Trading lower, shares of Workday, that stock down 9%, down the most in 3.5 years after trimming its long-term forecast for annual subscription revenue growth. I'm Charlie Pelton. That is a Bloomberg Business Flash.
All right, Charlie, thank you, and welcome to the Thursday edition of Bloomberg Sound On. You made it to Little Friday, and we still do not have a breakthrough on spending. The reality check we begin with on the terminal, the headline, last-minute U.S. shutdown deal unlikely as McCarthy lacks leverage. And if you've been listening to this program at all lately, none of this should come as a surprise. We're going to bring you up to date on the most recent wrinkles here. But Congressman Matt Gaetz is still a major sticking point. ABC News caught up with him on the idea of warming up to a stopgap, a continuing resolution that is emerging, at least from the U.S. Senate. They're also talking about one in the House. Maybe we'll see it today. But the gentleman from Florida is a no-go.
Right now, we're working to get these individual single-subject spending bills passed. That's my principal goal.
You're still firm no on the short-term spending bill?
Yeah, I'm not for a continuing resolution.
Not for a continuing resolution. Perplexing evermore. Mitch McConnell, of course, the Republican leader in the Senate next door, has been working on a continuing resolution and brought his case to the floor.
So, Mr. President, a vote against a standard short-term funding measure is a vote against paying over $1 billion in salary for Border Patrol and ICE agents, working to track down lethal fentanyl and tame our open borders. Letting FEMA's disaster relief fund dry up is not a productive way to advocate for victims of disasters. Letting small businesses' loan applications collect dust is not a productive way to help working Americans contend with Washington Democrats' historic inflation. Shutting down the government isn't an effective way to make a point.
Not an effective way to make a point, but of course, a few are making that point. And we get to talk about it now with Dusty Johnson, the congressman from South Dakota's at-large district. The Republican who is in the throes of the debt ceiling debate is back with us now in the throes of a potential shutdown here. Congressman, welcome back. I've got some specific questions for you about what you're hearing, about what mechanism might be worth investing in and where your head is. But I just wonder if you've kind of given up the ghost on this. The government going to shut down this weekend?
Well, the government should not shut down. That would be an exceptionally stupid thing for us to do. But listen, things look a little bleak. I'm not going to try to put too smiley a face on it, but I'm not giving up. We still have time. Cooler heads need to prevail. Let's get our work done.
Are we going to see a continuing resolution in the House today or when?
I expect that tomorrow we will vote on a continuing resolution. It is something that I authored along with 5 of my colleagues, generally conservatives, 3 members of the Freedom Caucus and 3 members, including myself, of the conservative Main Street Caucus. It would be a stopgap funding measure for another 30 days. At the same time, though, it would secure the border with policies that we know work.
Your role on the Republican Main Street Caucus as chair is vital here. There are a lot of folks waiting for the noise to die down so the center can come to the rescue here. I wonder your view on that and what your message is for those members holding things up, like Matt Gaetz, who we just heard from.
I do think Matt's involvement, particularly regarding a stopgap funding measure, it's been really problematic. It's not been helpful. No one, including Matt Gaetz, thinks that we're going to get all of our work done in the House and in the Senate by the day after tomorrow, and then magically under that same timeline be able to meet with a Senate who wants to spend in general more money and a House that in general, including me, wants to spend a lot less money. It's going to take some time to work that out. So the only question is whether or not we will do that work while federal employees continue to get paid and while federal taxpayers continue to be able to access services at the IRS and Indian Health and the federal the Farm Service Agency and others, or whether or not we will demand that those agencies shut down while we continue our work. Listen, I think shutdowns are stupid.
Once it happens, we could be looking at a weekend, a blip on the radar. Some, including Goldman Sachs, are saying 2 to 3 weeks. Congressman, I'm sure you don't want to go there because you're holding out hope for a solution, but what should people be bracing for here? This looks like a full shutdown, not a partial one, and it could take some time if it actually happens to reopen.
Well, I'm glad you mentioned the partial versus full shutdown because I do think that really matters. The shutdown during 2018 and in 2019 was a partial shutdown. Sometimes people will say, as they're beating their chest, shut it all down. You know, government doesn't really do anything anyway. Shut it all down. And I would just tell you that if this thing goes on for 2 weeks, you're going to have soldiers, sailors, airmen, Marines who will have worked during that time, and then we're going to refuse to pay them. We will have TSA agents who will be reporting to duty even though they're not getting paid. We are going to have these frontline men and women keeping us safe who will be absolutely let down by their government. And anybody who wants to be cavalier about that, anybody who want to act like that doesn't matter, the government doesn't add any value in anybody's life, they are playing games. I have a constitutional duty to get my work done. All of my colleagues do too. I wish they took that constitutional duty as seriously as I think they should.
That said, I'd like to talk to you about some of the sticking points here, including funding for Ukraine. Interesting to see members vote on an amendment to remove Ukraine aid from the defense spending bill yesterday. Most Republicans supported leaving that in, and I wonder your thoughts on this and if the leadership is at odds with the rank and file on helping to fund the war effort in Ukraine.
You're right insofar as a majority of Republicans and a majority of Democrats continue to be supportive in both chambers of helping Ukraine, making sure that not that American men and women die on Ukrainian battlefields, but that the Ukrainians have the ammunition and the supplies they need to hold the line against this illegal invasion by Vladimir Putin. To me, it's a little hard to imagine the party of Ronald Reagan no longer interested in pushing back against communism and tyranny and dictatorships. Ukraine is trying to hold the line. We should continue to help them. Now, that doesn't mean there should be blank checks. We do need additional accountability, but a majority of the House and the Senate are supportive of that. But this gets back to all these red lines everybody's got. Nobody ever gets everything they want in a negotiation. So when you have people who say Republicans or Democrats need to hold out until they get every single thing they demand, that is a profoundly unserious person. That's a person who has never apparently actually had a successful marriage or business or been on a nonprofit board. Nobody gets everything they want ever. There's some give and take. And so maybe the Ukrainian package might not look exactly like I would design it. Maybe a stopgap funding measure might not look exactly like I would design it. But we have got to stop letting perfect be the enemy of the good.
Well, you just said a lot there, Congressman. I wonder, from your perch at the helm of the Main Street Republican Caucus, what your thought is as you look around and see a lot of people in your conference who might be described as not serious.
I understand where they're coming from. One underreported fact is the extent to which the Republican conference is really and truly unified on big picture questions of governance. We're $33 trillion in debt, and we've been talking about debt for so long that I think a lot of us assume that it's only as bad today as it ever was. It's not. It's much worse. We're reaching a tipping point. That's why Fitch downgraded us. In the next 10 years, we won't spend $3 trillion just on interest on the debt as we did in the last decade. We'll spend $10 trillion. That is going to crowd out all of the other virtuous spending. Now, the reason I mention that is I understand why some of my colleagues believe that this is a battle worth fighting for. It absolutely positively is. We should not agree to appropriations measures that continue business as usual. It is totally unacceptable. And yet, you've got to be able to fight and win with smart strategy and with a tactical plan that moves us in the right direction. The people who are screaming that we should shut the whole thing down do not have a plan for victory.
You were one of the folks who helped to craft the debt ceiling deal, a deal that was made to avoid all of the drama that we're experiencing right now. How do you trust Speaker McCarthy to shake hands on the next deal as we relitigate the last one?
I don't think it's a relitigation. The debt ceiling deal was really about our country avoiding default and setting some top line numbers for spending. It didn't go into specifics. It didn't say how much was going to be in that appropriations bill versus this appropriations bill. It didn't say how much money was going to go for border security or for Ukraine.
But even the top line numbers didn't hold.
No, that's true. The Senate wants to go above the top lines and the House wants to go below. And I think Kevin McCarthy understands that at some point when we get into conference, when the House and the Senate come together, we're going to spend, unfortunately, more money than the House wants, and we will probably spend a little less money than the Senate wants. I still think that debt ceiling deal was really important, though, because it gave us those top line numbers that we're centering around. And those top line numbers are a $2 trillion spending cut in the next 5 years. That is a larger victory than conservatives have ever been able to deliver in any other spending package in modern history. And I think that's a pretty big win on top of the welfare reform wins and the energy siting wins that we got.
Well, you helped us avoid a default, Congressman, and that's a big deal.
That's a big win.
I know you're out of time here. Will we avoid a downgrade from Moody's after getting that warning?
Well, of the three, Standard & Poor's, Moody's, and Fitch, two of the three have already downgraded us, one years ago, 1 month ago. And we have got to get our act together. We have an opportunity in the next 4 days to show the world that American debt instruments are indeed zero risk, that it may be messy, it may be noisy, but in the end of the day, America will have its financial house in order. We fail to do that, there will be negative repercussions.
I appreciate your coming back to talk to us, Congressman. I appreciate your candor. Dusty Johnson, Republican from South Dakota, chairs the Republican Main Street Caucus. Good luck in the fight here. We'll be following, of course, all of this as we assemble our panel now for their take. Jeannie Sheehan Zaino is with us, Democratic analyst, of course, a member of the family, Bloomberg Politics contributor, joined today by Chapin Fay, the Republican strategist, is back with us, former press secretary for Governor George Pataki. Great to have you both with us here. Chapin, what do you think from what we just heard from the chair of the Main Street Caucus, trying to salvage a continuing resolution here at odds with members of his own Republican conference girding for a shutdown? Will the Dusty Johnsons of the House be the ones to save this?
You know, he certainly sounded like he had some clear thoughts, but I'm not sure we have a clear answer on whether the Dusty Johnsons or the others will win out here. We do have sort of an unruly Republican caucus these days, but the reason for that, and I've said this before, is a lot of his colleagues further to the right of him feel like they were sent to Congress to rein in spending and try and control some of the out of control Biden administration agencies and actions by, through the House, which of course their power is the power of the purse. So it's going to be very hard to placate them when we're talking about, billions upon billions of dollars. I was struck by the way he described making sure that Ukrainian soldiers had all the resources they need to stave off the invasion. Right. I mean, municipalities in the United States don't have the resources they need to stave off, the incoming migrants into their areas. Social services under strain. So I think the priorities are a little out of whack, and I think the more rightward leaning members of Congress, those are the kinds of things they're thinking about.
Well, we're going to have more time for this, Jeannie. We've got less than a minute. Dusty Johnson says shutdowns are stupid. Are we going to have one anyway?
We are going to have one anyway. He is absolutely right. They are stupid. And he is absolutely right. The analogies he gave about marriages and business, you don't get everything you want. You won't get it in this. It's about negotiation. And everybody should listen to that. And I hope conservative Republicans in the caucus do.
Isn't that something? Is this why people want their candidates to be married? I never thought about it that way before, but there's a lesson in there. Jeannie Sheehan Zaino, Chapin Fay, we've got a lot to cover with our panel on the fastest show in politics. And much more next. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story, a headline off the Bloomberg Professional Service. Uber, DoorDash, and Grubhub have lost an attempt to block a New York City rule setting minimum pay for food delivery workers, handing the city a victory in its attempts to rein in the now ubiquitous services. That decision coming moments ago. It is an update for the U.S. stock market. In fact, stocks are rebounding ahead of an afternoon speech from Fed Chair Jay Powell. S&P up 31 right now, up 0.7%. The Dow up 124, higher by 0.4%. NASDAQ up 141. That is a gain of 1.1%. 10-year yield 4.61% with a 2-year 5.09% on the 2-year. Gold down $10 the ounce, dropped there of 0.6%. West Texas Intermediate crude down 2%, 91.77 a barrel. So what about the prospects for a government shutdown and the potential for a U.S. downgrade? South Dakota Republican Congressman Dusty Johnson was a guest moments ago right here on Sound On.
We have got to get our act together. We have an opportunity in the next 4 days to show the world that American debt instruments are indeed zero risk, that it may be messy, it may be noisy, but in the end of the day, America will have its financial house in order. We fail to do that, there will be negative repercussions.
Peloton Interactive shares rallying after agreeing to a deal with Lululemon to tap its online workouts and team up on apparel. Peloton shares up 6.1%, Lululemon up by 0.3%. I'm Charlie Peloton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
I want to invite you to join us for an important conversation a bit later on in the broadcast, a global simulcast of our conversation with former Vice President Mike Pence, of course, just hours off of the big debate in Simi Valley. Pence is going to be here roughly an hour from now. Anne-Marie Hordern will join, and we'll bring that to you live here on Bloomberg. Of course, conversations that you won't hear anywhere else, not the way we do them. As we reassemble our panel, Jeannie Sheehan Zaino, Bloomberg Politics contributor, Democratic analyst, is here, along with Chapin Fay, Republican strategist, former press secretary for Governor George Pataki. Remembering the night that was, I'm not even sure how to describe it. But before we indulge our panel here, did you actually watch this thing? I don't know what the ratings are going to look like. Of course, Donald Trump was counter-programming. It was on Fox Business out at the Reagan Library, Simi Valley. 7 on the stage. Again, Donald Trump, not one of them. And things went off the rails pretty quickly here. I mean, you talk about interrupting. I'll just drop the needle on this. Vivek Ramaswamy talking with Ron DeSantis, Tim Scott. And it got pretty wacky here. Let me just find this for you. Give you a little taste.
These are good people who are tainted by a broken system, and it's not the fault of anybody who's involved.
Some of us are tainted, but the bottom line is
excuse me. Thank you for speaking while I'm interrupting. While I'm speaking.
Well, you said thankful.
If I may finish,
You can't be on both sides.
Gentlemen, you'll have your turn.
One of the challenges
So listen up.
we should have a debate between debate and debate.
This in China. Everybody knows that. If I may address,
focus on holding Joe Biden accountable.
Okay, I could keep going, but I'd like to hear from Jeannie and Chapin. Chapin Fay, to what extent was this conversation last night, this exercise, in the spirit of Ronald Reagan? It was at the Reagan Library. His name was invoked repeatedly. Was this a good look for the Republican Party? Never mind who won or lost.
I don't think so. I think Ronald Reagan's turning over in his grave. We are a long ways away, generations from when Ronald Reagan was running and was president. The clip you played, listen, the gloves are off. So to a certain extent, it was probably always going to devolve at some point. But, like you sort of alluded to, the big winner is always Donald Trump. I mean, you have a bunch of people failing to separate themselves from the crowd, and even worse, just all talking at the same time. Right. So, meanwhile, Donald Trump is laughing all the way to, having better poll numbers than all of them combined. So, I don't know if any of them move the needle forward, and I think some of them probably move the needle backwards.
I'll ask you about Donald Trump's visit to Detroit in a moment. Jeannie, Chris Christie really tried to go after Trump, as we all expected, to call him out for not being there. Here's what he said.
You're not here tonight because you're afraid of being on the stage and defending your record. You're ducking these things. And let me tell you what's going to happen. You keep doing that, no one up here is going to call you Donald Trump anymore. We're going to call you Donald Duck.
Donald Duck. So we got a nickname. Jeannie, is it going to stick?
No, it was one of the very bad one-liners, and we heard a few of them last night from Chris Christie. What started out as a potentially strong statement just fell flat. Nobody in the audience responded. Mike Pence obviously had a very strange comment that, you heard they sort of tried, the moderators, to chuckle a little bit after that one, but it was so bizarre. Nobody really responded. And that really epitomized the night last night. It was not substantive and it wasn't entertaining. I mean, it was like, not only to Nikki Haley's point, did you feel dumber, but you just wanted to turn off the TV because it wasn't even entertaining. So bad night for Republicans. The winners clearly Donald Trump, and also by extension Joe Biden, who fears running against anybody but Donald Trump. So God bless the two of them. The American public has to be very unhappy at this point.
Well, Ginny refers to a moment that Nikki Haley was clearly preparing for as she faced off with the aforementioned Vivek Ramaswamy.
This is infuriating because TikTok is one of the most dangerous social media apps that we could have. And what you've got, I honestly, every time I hear you, I feel a little bit dumber for what you say.
Okay. But, then there was the approach from the network and the moderators, Chapin. When we got to this point, when Dana Perino decided to turn this into a reality TV show, I mean, I don't know, maybe everybody deserved that. Maybe that's actually what it was. But this seemed like, well, just a different level than you might expect in a presidential debate. Here we go.
Which one of you on stage tonight should be voted off the island? Please use your marker to write your choice on the notepad in front of you. 15 seconds starting now. Of the people on the stage, who should be? I'm absolutely serious.
With all due respect, I mean, we're here, we're happy to debate, but I think that's disrespectful to my fellow competitors.
Nobody wants to participate.
Let's do some questions. Let's talk about the future of the country.
Okay. Yeah, so kind of like the show of hands, I guess, last time. But I mean, Chapin, are you kidding me? I don't try to criticize other media organizations, but if we've cheapened this to the point of being an episode of Survivor, I mean, what's the point?
Well, to be fair to Dana and the moderators and the organizers, I mean, I think the people on the stage, brought it to that point. I mean, I wasn't shocked at all to hear her say something like that. I mean, they're all out there, and they're all out there trying to out Donald Trump. And I want to revisit that about the Donald Trump comment. I think Jeannie is 100% right about it being a bad one-liner among many one-liners. But this is what always happens when people try and fight Donald Trump. They try and be Donald Trump to fight him. It has never worked in history. He has an innate ability to be himself and be successful at campaigns and elections and reality TV and everything. When candidates try and mimic him or try and use his own tactics against him, it always fails, just like Donald Duck.
Oh, true.
Right? And that's what you're seeing on stage, I think.
Donald Duck. Well, Donald Trump was in Michigan, of course. This is what he did. Instead of attending the debate, went to Michigan to speak to UAW members in the throes of an historic auto strike at a non-union shop. And he told them, essentially, he kind of knows more than they do about this.
Massive percentages of your industry went to other countries like Mexico, like China, like South Korea, like Japan. In other words, your current negotiations don't mean as much as you think. I mean, I watch you out there with the pickets, but I don't think you're picketing for the right thing.
You're picketing the wrong thing. Your protest isn't worth what you think it is, Jeannie. Is that how you get an endorsement from the UAW?
Yeah, it was another part of the very bizarre night, which the debate was half of, and then these statements. I mean, essentially what Donald Trump told these at this non-union shop, as you mentioned, these workers, was forget the picketing, not worth the protest, not worth the strike. All you have to do is vote for me and convince your leadership to endorse me, and all will be great. You know, that's his argument. And it is head scratching. It is mind numbing. I mean, one big question to ask Donald Trump among many is, what about the EV plants unionizing? Why is that such a bad idea, right? Why do we have to stop producing EV cars? Why can't we unionize those plants? I mean, there's so many substantive questions to be asked. But of course, all he wanted to do was attack Joe Biden, because for Biden and Trump, we are now in a general. He was, you know, just dismissed the debate as people trying to run for secretary. And I can't say he's wrong about that. And said, you know, look, vote for me and all will be good. Forget this picket line. Go home and wait until I'm in the White House, and I will restore whatever you need in terms of money.
We're going to talk a lot more about the UAW because we have news. If you haven't heard about this, it's important, actually. And we have a headline on the terminal that the UAW is targeting 30% wage increases, a 30% pay raise by the time this negotiation is done. Remembering they came down to 36% most recently, and the big three are still balking. But we're going to get into this now that Donald Trump and Joe Biden have visited UAW members in two very different events. We'll get into this coming up next with our panel, Jeannie and Chapin Fay. I'm Joe Matthew in Washington. Let's bring you up to date now on world and national news. Leslie Lotto has that in the Bloomberg newsroom in New York. Hey, Leslie.
Thank you, Joe. House Republicans have their first hearing for their impeachment investigation into President Biden. Republicans looking into whether the president improperly profited off of his son Hunter's foreign business dealings while he was vice president. Oversight Committee Chair James Comer claiming that the investigations revealed how the president abused public office for his family's financial gain.
Joe Biden lied to the American people that he never spoke to his family about their business dealings. He lied by telling the American people that there was an absolute wall between his official government duties and his personal life.
Maryland Democrat Jamie Raskin says Republicans launching the inquiry on a long-debunked, discredited lie, also slamming them for the impeachment hearing days before the government shutdown could take place this weekend. House Republicans, fueled by hard-right demands for deep cuts, force a confrontation over federal spending. We shall see over the next couple of days. Some of the first owners of Apple's iPhone 15 Pro and Pro Max complain the new devices get too hot while they charge. We hear more from Bloomberg's Mark Gurman.
When users get a new phone, re-downloading all of their apps, their data, their photos, that can be a long and processor-intensive procedure. So it's possible that is either compounding the issue or creating it. It's also possible it's triggered by certain apps with bad code in the background, Instagram, Uber, you name it.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leslie Lotto, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 1:40 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, NASDAQ all holding on to gains. We are off session highs, but right now the S&P is up 21 points to 42.95, up 0.5%. Stocks are rebounding ahead of an afternoon speech from Fed Chair Jay Powell. The Dow's up 64 points, up by about 0.2%, while NASDAQ, the composite index, is up now by 97 points, up 0.7%. 10-year yield 4.62%. With a 2-year, 5.09%. Gold down $13 the ounce to $18.62, down 0.7%, while West Texas Intermediate crude is down 2.1%, 91.68 for a barrel of WTI. Certainly one of the big questions for investors has been the outlook for rate cuts by the Federal Reserve. John Stoltzfus is chief investment strategist at Oppenheimer, and he says they are coming, but just not soon.
We think probably you'll get cuts towards the end of next year, mostly because we would expect that the Fed will have been more successful than not at curbing inflation, putting it in check, and it will be time to probably bring it down some, because we think there's one more hike to the end of this year likely, and then probably a hike next year, maybe even two.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Sources tell Bloomberg the UAW wants to emerge from its strike against Detroit's 3 major automakers with at least a 30% pay raise. And again, recapping, stocks are advancing. The automakers, by the way, are all driving higher. Ford shares up 1.3%, GM up 2.2%, Stellantis up now by 2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
A day after Donald Trump visits Michigan to court unionized auto workers at a non-union shop, and 2 days after President Biden actually joins the picket line, megaphone in hand, making history all the while. We do have news from the UAW. This is according to people familiar with the matter. This is why, of course, you listen to, watch, and read Bloomberg. The UAW wants to emerge from its strike against the Big Three with at least a 30% pay raise. This is what is on the back of the napkin in Sean Fain's office here. Of course, they came in above 40%. They've come down to 36%, and we're getting maybe a sense here of where this negotiation might end, whether the automakers feel on this about this the same way. Stocks in all three are rising today for what it's worth. Let's reassemble the panel to get into this for a bit. Jeannie Sheehan Zaino, Democratic analyst and Bloomberg Politics contributor, is here with Chapin Fay, Republican strategist, former press secretary to George Pataki. What do you think here, Jeannie? I don't know if we're going to formally hear something like this from the union anytime soon, but do we see light at the end of the tunnel with a headline like this?
Yeah, I think it is good news all around. I mean, as your first guest talked about, the representative, when you're negotiating, you have to be willing to compromise. And if this headline holds true, and this is what the union is indeed saying, it is a good sign. I think for many people, myself included, 40% was probably not a realistic number, but a number to start off with. To hear that they are down to 10, down to 30 rather, down 10, makes sense, and they're going to have to find some middle ground. So I think it is good news, although I'm not sure we're going to see a light at the end of the tunnel very soon. It is the right direction for sure.
A lot of questions about what this might mean for other workers already emboldened by the UPS deal. This would be another one, Chapin. You can weigh in on this latest update, but I wonder if you think the visits by Donald Trump and Joe Biden actually might help to unlock some progress here to lead to a breakthrough.
I don't know if those particular visits will lead to a breakthrough. I'm sure, or I hope, the president's team, President Biden's team, is involved, or at least helping the two sides come to an agreement. But I have to say, the labor movement, the momentum of the labor movement over recent months and years has been incredible. I mean, the Writers Guild out in Hollywood just got everything they asked for, or at least claimed that they got everything they asked for. It looks like the UAW is going to get some pretty significant salary increases and other benefits, regardless of where management comes down on. So I do think labor is becoming. It's always been a force to be reckoned with, but I think it's having its second moment here over the past couple of decades with the momentum that they're getting.
Quite a contrast between the two presidential visits, if I can call them that. Of course, Donald Trump is a former president, Jeannie, but we've never seen anything quite like this. And the amount of attention that was thrown on the UAW here because of those two visits is noteworthy. Here's what Trump said last night in Michigan.
I side with the auto workers of America and with those who want to make America great again, and I always will. And I don't get one thing. I don't get why Ford and GM, why these car makers aren't fighting to make cars that are going to sell, to make cars that are going to be able to go on long distances. They immediately give up. I see it with the oil companies too. They're promoting windmills, which don't work, by the way, but they don't work. They want windmills all over the place.
As much as I'd love to go into the whole windmills thing right now, Chapin, it does say something about the current state of the Republican Party. When Donald Trump stands there and says, I side with the auto workers. I know he was at a non-union shop, but he's effectively endorsing a unionized labor action, right?
Yeah, I think, he is the leader of the current populist movement. I mean, there is sort of, I wouldn't say it rises to the level of a civil war, but there is certainly some tension within the Republican Party among sort of the establishments, the ideological conservatives, and the populists, which I think Donald Trump represents here. There are new demographics and types of people in America that feel that Donald Trump is speaking for them. If you look at, just in New York City, sort of the young up-and-coming Republicans, very populist, right? Very populism-driven, and are supporting things like unions, of all things, in 2023. So, politics is cyclical. Of course, and I think you're seeing, Donald Trump and Republicans, at least his wing of the Republican Party, looking out and at least paying lip service to some of these people in America who feel like they've been left behind. So I do think it's a little stunning, but it has been building, and I think that's what Donald Trump represents currently.
I don't know how many eyeballs he got last night, Jeannie. We made the point yesterday that this was not a Tucker Carlson interview, and it wasn't a novelty act to the point that it was the first time, because, well, it's not the first time, even though he plans to skip all of these primary debates and I guess counter-program to some extent. You said earlier that Joe Biden and Donald Trump essentially won the debate last night, those two men who were not there. Who won the visit to Detroit?
I think it's, still probably an even draw, I have to say. I think substantively it was the president, but we cannot deny that Donald Trump has a lot of support among people on the line. And while the leadership has tended towards the Democrats and Joe Biden has been a, union stalwart, he has been the president of labor, many people on the line feel that they have been forgotten by the Democratic Party. This has been a long-term problem for the Democrats. That's why Michigan is going to be so much up for grabs when we get to 2024. But Joe, if you talk to Donald Trump, he's going to tell you it was the biggest event last night. He got tons of eyeballs. Don't you worry. Nothing. This is probably Super Bowl big. So, the numbers, you can just count on him to say they were bigly.
They were bigly. He said 10,000 people were stuck outside, Chapin. Are we going to really do this crowd size thing again for another year?
Boy, I hope not. But, it's Donald Trump. He's, he's a marketer. I mean, I wouldn't call them lies, but certainly, New York real estate developer embellishments, is his style. And I think Jeannie was right about the state of labor. It has long been discussed among Republican circles that union leadership is Democratic solidly, but the rank and file is starting to vote their pocketbooks.
Yeah, this is something that we've been watching very closely and will continue to. It really plays into this presidential election cycle in a unique way. Chapin Fay, Jeannie Shanzano, great analysis and some final thoughts straight ahead as the Secretary of State gives us a lesson in the blues. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pallador. Uber, DoorDash, and Grubhub have all lost an attempt to block a New York City rule setting minimum pay of $18 an hour for food delivery workers, handing the city a big victory in its attempts to rein in the now ubiquitous services. Uber shares, though, they're higher by 2.3%, DoorDash up by 0.4%. Among the names reporting after the close of trading today will be Nike. Nike is set to offer a crucial look at the financial health of American households as Wall Street worries about a growing list of headwinds to spending and consumer-linked stocks languish. Some of the first owners of Apple's iPhone 15 Pro and Pro Max are complaining that the new devices get too hot during use or while charging. And with more on that story, here's Bloomberg's Kimberly Adams.
Charlie, it's a potential setback for the company's flagship product. The gripes have spread across Apple online forums and social media networks, including Reddit and X. Customers say the backside of the phone becomes hot to touch while gaming or when conducting a phone call or face video chat. For some users, the issue is more prominent while the device is plugged in to charge. The iPhone accounts for about half of Apple's revenue, and new models are closely scrutinized for any potential flaws. Charlie.
And that's Kimberly Adams reporting. JetBlue Airways is issuing its second warning in as many months, saying revenue this quarter will come in at the low end of its forecast. JetBlue shares, they're up along with other airlines today, up 3.7%. And those are some of our top company stories at this hour. I'm Charlie Pelleton. This is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington on the fastest show in politics. Next hour, our conversation with former Vice President Mike Pence. You'll definitely want to be with us on Bloomberg Radio, Bloomberg TV, or YouTube, as that occurs less than a half an hour from now. Let's get you up to date, I should say, on the news. Leslie Lotto has world and national news from the Bloomberg newsroom in New York. Hi, Leslie.
Thank you, Joe. Federal agencies prepping for that possible government shutdown. Bloomberg's Amy Morris reports from Washington.
The Office of Management and Budget tells GovExec the White House initiated a shutdown planning call with agency leaders on Friday. A government executive analysis based on the most recent data finds the Biden administration plans to furlough about 737,000 or 34% of civilian federal employees. The rest, about 1.4 million workers, would continue to report for duty, but only on the promise of getting back pay. Workers are learning over the next couple of days who will be furloughed. In Washington, I'm Amy Morris, Bloomberg Radio.
7 of the Republican contenders for the presidential nomination hammered each other at the debate last night, talking about the absent frontrunner. Here's more from Bloomberg's Jill Desis.
I think a lot of this just comes down to domestic issues within the U.S., what's happening along the U.S.-Mexico border. You had some candidates that were talking about, absent former President Donald Trump's inability to build a wall across the entire border, talking about what they would do there. A lot of the times, these types of things really come down to those domestic policies, how that's going to shape up.
Yeah, and former President Trump visited Detroit last night talking about the potential auto workers spreading into a further strike, and of course rallied against Joe Biden and EVs and the EV industry. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leslie Lotto, and this is Bloomberg. Now back to you, Joe.
All right, Leslie, I do appreciate it. Who says the Secretary of State is stuffy? At least the job doesn't have to be. As we learned last evening, have you seen this? Antony Blinken, the Secretary of State, stepping up at the Global Music Diplomacy Initiative. We knew he was an amateur guitar player, but he really went for it last night, had the whole band in place. Takes some nerve to do this, particularly when you're playing Muddy Waters. Give this a listen here. Let's get started. Assemble the band.
Great Muddy Waters. And if this doesn't clear the house, I don't know what.
All right, but we're going to do this for real. That's Antony Blinken. He's got the Stratocaster out. Another guitar player with him. All right, that's getting somewhere. Now he's got to sing like Muddy Waters. Here we go, Antony Blinken.
Gypsy woman told my mother before I was born, gonna be a man-child coming, gonna be a son of a gun, gonna make pretty women's jump and shout, and the world will know what it's all about. You know I'm here.
All right, pretty good. I mean, honestly, now granted, as I mentioned, we can bring it down here a little bit. There's another guitar player there, so, it's really the singing that we're focusing on. Sounded like his guitar might have been playing a little low there, but I have to get our judge panel here together. Fox wanted to make the debate a reality show last night. We can do the same right here. Jeannie Shanzano and Chapin Fay, what do you think? How do you rate the Secretary of State, Jeannie? Did he get it done for you?
He did. Some people said he sounded like Chris Isaacs. Remember him? And I think he does a little bit. Yeah. But gosh, that took some guts. I give him so much credit for doing that. And it was better watching than the debate. I'll tell you that. Or Donald Trump.
That's quite a compliment. Maybe he'll play Muddy Waters for President Xi next time he's overseas, Chapin. Is this a good look for the Secretary?
I was a jazz musician. I'm a staunch Republican, but gets a 10 in my book.
Excellent. How about it? What instrument, Chapin?
I played the saxophone, and the blues is the way to my heart. So, you know, if you want to get
Nice.
bipartisan, maybe play some blues.
The stuff you learn here on Sound On. Chapin Fay, Jeannie Shanzano, great conversation. Mike Pence coming up next. This is Sound On.
Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? Is the economy stupid? Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the 8 ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
But did anything actually change? Welcome to Hour 2 of Sound On. On this day after the big Republican debate, candidates vying for second came out swinging in their second primary debate. We'll walk you through the moments that mattered, and we're going to talk about the issues with a man who stood on that stage last evening. Former Vice President Mike Pence will be with us soon for an important conversation with myself and Bloomberg's Anne-Marie Hordern. Kaylee Lines joins with insights. We have an important hour ahead, and glad you're with us. We start, as always, with a look at Wall Street, an update on trading now. Charlie Pellet in New York.
I thank you very much. Nobody's got the blues on Wall Street today with the Dow, the S&P, NASDAQ very much in the green. A rebound for U.S. stocks with the S&P up 21 right now at 42.95. That is a gain of 0.5%. The Dow up 73, up 0.2%. NASDAQ higher by 97, up by about 0.7%. Tech giants including NVIDIA, Meta Platforms, and Tesla driving the NASDAQ 100 index up more than 1%, shaking off a choppy morning session. 10-year yield right now at 4.62% with a 2-year 5.09%. With the spot gold, price of gold down $13 the ounce to $18.61, down by about 0.7%. And West Texas Intermediate crude retreating by 2% now, $91.67 a barrel. Well, as for the broader economic outlook, Ian Shepherdson is chief economist at Pantheon Macroeconomics, and he told our Tom Keene on surveillance this morning there are no doubt plenty of headwinds.
So I just wonder whether there's a turning point happening now, which isn't visible yet in some of the official hard data, but is visible in some of the real-time stuff. And if that's the case, then Q4 is going to be very interesting. You've got the strike, the UAW strike, you've got the shutdown, the student loan chaos. It's very messy.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. He mentioned the auto workers strike. We do have automakers trading higher today. Ford shares, case in point, up 1% now. GM up 2.4%. Stellantis, that stock up by 2%. So again, recapping, stocks higher. S&P up 22, up by about 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington, joined by my colleagues, Kaylee Lines and Anne-Marie Hordern. You know something special must be going on, and we are waiting for a conversation that we're going to bring you with former Vice President Mike Pence. Great to see you both here this day after the big debate. Yeah. You like our headline, Trump rivals attack each other but fail to shake his dominance, which I guess is a fair synopsis of what happened last night.
Yeah, I think so. Also, when I joined Surveillance this morning, we went through the Senator Tommy Tuberville interview that has really landed with a lot of people and a ton of pickups. So they want to talk about that. Then we talked about the UAW, what's the latest on that, and the former president was there. And then I was like, oh, there was a debate last night. It's almost like people forgot it happened.
Isn't that something? I wonder how many folks got to watch Donald Trump's speech in Michigan, Kaylee. It wasn't a Tucker Carlson interview promoted on X.
Yeah.
It could have really just looked like another Trump rally to most people.
Well, and in many ways it kind of was, right? This wasn't a union event that he was invited to and was organized with the UAW. It was a rally that happened to be at an auto parts manufacturer that is non-union. But it was a weird degree of split screens, right? Because on the one hand, he also was very much present on that debate stage, even if he wasn't there physically. Pretty much every candidate took their chance to take a shot at him. Even Vivek Ramaswamy, who, while simultaneously saying, yes, he was a great president, said the America First agenda doesn't belong to him exclusively, essentially.
Yeah, we heard from Donald Trump, an interesting approach, as he essentially told them that they were doing this whole protest thing all wrong. Here he is.
Massive percentages of your industry went to other countries like Mexico, like China, like South Korea, like Japan. In other words, your current negotiations don't mean as much as you think. I mean, I watch you out there with the pickets, but I don't think you're picketing for the right thing.
You're not picketing for the right thing.
No.
I'm not sure that leads to an endorsement from the UAW, Anne-Marie.
Oh, it's not going to be a UAW endorsement for the former president. They actually call him from the billionaire class.
Not the working class.
Yeah, not the working class. But he's trying to invoke some emotion that he was able to in Michigan in 2016. He won that state by 10,704 votes. He wants to appeal to blue-collar, working-class people, and he did that by bashing the Biden administration. He says that they're trying to do is a, quote, EV mandate. There's not an EV mandate, but he's trying to act like there is an EV mandate, and all these jobs are going to evaporate because of that.
Meanwhile, Elon Musk is watching saying, EV mandate? Are you guys serious? I'm just going to drop the needle in the middle of the debate last night, when if anyone tuned in at this moment, you would think that this whole race was over, or at least had gone completely off the rails. Let's just dive right in.
From one admirer of Ronald Reagan to another. From one admirer of Reagan to another. We cannot see violate
Vivek Ramaswamy, Tim Scott, Ron DeSantis, maybe
Let us have
a policy debate. And the right answer is we need to declare independence from China.
Thank you very much. A little moderating in there somewhere.
I mean, I could have kept that going for 2-3 minutes. Are you kidding me?
It was chaotic.
Yeah.
At times.
Yeah, it was chaotic, and also I just noticed this now, which I didn't notice last night. Are they all trying to out-hawk each other with China? It also seems that they're trying to out-love Reagan each other. Well, I love
Reagan.
They
were at his library.
I love Reagan more than you love Reagan.
Absolutely,
From one Reagan lover to another Reagan lover. No one loves him more than me.
Not
I was
speaking
inspired
too
by
much
this.
Reagan policy.
No.
I don't think Ronald Reagan would have had much to do on that stage, actually. Chapin Fay, our Republican strategist last hour, said Ronald Reagan was rolling in his grave last night.
Not exactly what you think the Republican.
Here's what I want to hear from you guys. By the way, if you're just joining us, we're going to talk to Mike Pence about all of this in just a few minutes. He'll be with us on Bloomberg TV and radio. Dana Perino, I felt, brought the whole exercise maybe to a lower level with this question.
Which one of you on stage tonight should be voted off the island? Please use your marker to write your choice on the notepad in front of you. 15 seconds, starting now. Of the people on the stage, who should be? I'm absolutely serious.
With all due respect, I mean, we're here, we're happy to debate. I think that's disrespectful to my fellow competitors.
Nobody wants to. Nobody wants
we're
to.
not pawns.
Presidential survivor. Imagine we chose our commander-in-chief that way. I mean, I actually wonder, watching some of these debates, is this the right venue to actually understand what people's policies are?
Well, it wasn't last night.
No, Kaylee and I were just talking in the newsroom. The most viral moment from the former president, Mike Pence, who we're about to speak to, is when he talked about sleeping with his wife, who's a teacher for 38 years. And all morning, everyone's talking about that it's cringe, but he talked about China. He talked about mass murders in the United States.
Ukraine.
Reagan. He mentioned Trump, yet that didn't really catch fire. You have to almost be willing to say something a little bit edgy or outlandish to get press.
So, Kaylee, there is no policy on Survivor Island.
It really was like Survivor, right?
Yes.
I was like, where's the tiki torches and the snuffer? Is that what that's called? No, but to Anne-Marie's point about things that are going viral within this campaign, I feel like this was the point Vivek Ramaswamy was making when he was talking about why he's on TikTok. He was like, if you want to reach the younger voters, you have to meet them where we are, which is what set Nikki Haley off on TikTok, which is what cued her one-liner probably of the night of every time I hear you, I feel dumber for what you say. But that was his whole idea. If you want to win a campaign, this is how you got to do it. It's 2023 turning into 2024.
I'd be curious to ask Vice President Pence coming up what he thought of some of the commercials. Because while TikTok is being argued on stage, lots of slamming China, This debate was brought to you in part by ByteDance. There were 2 TikTok commercials in the middle of it. I'm sure they didn't know that standing on the stage.
To go get snacks.
Okay, see what you missed.
Missed this.
I feel like that, and that was the same case in the first debate.
It was.
They ran TikTok ads while the candidates are discussing how quickly they can ban it.
Their parent company, yeah. Well, that's
country.
Yeah, that's pretty interesting. Clearly, ByteDance wants those viewers' eyeballs.
Well, and I think ByteDance understands the political moment, right? They know there was a whole conversation that I guess is still ongoing, even if it's kind of simmered down a bit on Capitol Hill about how they can get TikTok banned in the U.S., and that's when you saw them rolling out the commercials about how it helps service members and small farmers who make soaps, and there is kind of that PR push on the part of the company.
But didn't Mike Pence tell us last time that he will ban TikTok if he becomes president?
Yes, absolutely, and he was critical of Vivek Ramaswamy for getting on TikTok.
Right, Vivek had called it fentanyl for social media, and then he decided to join it when he was hanging out with an influencer, and then he was like, listen, it's true, I am on TikTok, but it's only to reach voters.
And he doesn't think anyone under 16 should be on it or any other social media platform. He also made that clear last night.
So we've got some things to ask Mike Pence about. You heard his remark about expediting the death penalty. You mentioned mass shootings, I think, Anne-Marie, or the gun issue. He was actually asked about Obamacare, whether Obamacare was here to stay. This is how he answered it.
As a father of 3, as a grandfather of 3 beautiful little girls, I am sick and tired of these mass shootings happening in the United States of America. And if I'm president of the United States, I'm going to go to the Congress of the United States, and we're going to pass a federal expedited death penalty for anyone involved in a mass shooting so that they will meet their fate in months, not years.
Okay. I'm not sure. I'd like to ask him about this because I'm not sure what that means for due process if we're expediting the death penalty.
Well, that moment was awkward because as he was giving this answer, he also looked at Ron DeSantis and said, what's going on with Parkland?
That's correct.
And Ron DeSantis looked at him and said, we're abiding by the law.
Right.
These individuals will
due process,
and also they will rot in prison. But I think I was more struck by the fact that I couldn't understand if Mike Pence didn't hear the question or just wanted to take this moment and talk about whatever he wanted to.
Well, that's right, and both are entirely possible. It's something we can certainly ask him about. Let me get your take on this. Chris Christie, we knew would come out swinging. He's got a nickname for Donald Trump. Now, they must have been spitballing on this for weeks.
Did you see the best was the tweets after? Those were the GIFs after of a Donald Duck animation. Maybe you sent that to me, actually. I'm not sure.
So you just said it.
Sorry.
We're going with Donald ducking the debate.
She stole the punchline, Joe.
Okay, well, let's give it to
I didn't do it as good as Chris
Governor
did.
Christie.
You're not here tonight because you're afraid of being on the stage and defending your record. You're ducking these things. And let me tell you what's going to happen. You keep doing that, no one up here is going to call you Donald Trump anymore. We're going to call you Donald Duck.
Donald Duck. Will anyone remember that tomorrow?
Probably.
I mean, Donald Trump is pretty talented at the... Ron DeSanctimonious is still echoing. Will Donald Duck be?
I don't know. Maybe.
Christie might keep hitting it.
The thing is, Christie didn't say, we're calling you that. He was like, you keep doing this. People are going to start calling you that.
What I thought was interesting, though, was Christie isn't the only one that took that swing. Sure, he came up with the fun nickname, but Ron DeSantis said pretty much the same thing, that Trump should have been on that stage talking about his record, talking about the trillions that were added in spending under his administration. DeSantis was much more vocal about criticizing the former president last night than, frankly, I feel like we've heard in some time. Given where his campaign is now, I wonder how that's fitting into his strategy, because clearly, with the poll numbers where they are, he's not having much success in pulling in that Trump base of supporters right now.
I hate to say it, I don't think we've heard his voice yet on this program. Here's the governor of Florida.
Where's Joe Biden? He's completely missing in action from leadership. And you know who else is missing in action? Donald Trump is missing in action. He should be on this stage tonight. He owes it to you to defend his record, where they added $7.8 trillion to the debt. That set the stage for the inflation that we have.
Ron DeSantis, I don't know that this matters, and I'll be curious to see where the polls stand going into the third debate. I think it was Lonnie Chen on Balance of Power who said yesterday, Anne-Marie, that the RNC is trying to squeeze criteria so they lose one candidate per debate. Presumably that would be Doug Burgum, and we would have 6 for debate number 3.
Yeah, well, it could be Doug Burgum because of the polling factor.
Correct.
But he's been able to bring in the money. I mean, he comes from, he's a man of some means, as maybe is a polite way of saying it.
No doubt.
He's very wealthy, and potentially he'll be able to get the fundraising part of it. But the polling looks like it's going to be tough for him. Who did we lose at this debate? Governor Asa Hutchinson.
Asa Hutchinson,
Yeah, I
yes,
think he was
indeed.
quite sad. Didn't
And
he
Will
say
Hurd
he did his own
didn't qualify
counter-programming last night?
He did. He was
went
in
to Michigan.
Detroit
Yeah.
counter-programming, Trump's counter-programming.
I'm sure that got a lot of attention. I'm not sure Donald Trump's did either. I think it's going to take a minute for us to realize if this strategy is actually working.
Yeah.
Does he actually show up at any of these?
I think he would
He's
have
not
to
going
show up
to
at a
Miami, right?
presidential if he does become, in fact, the nominee. I think he's pretty much said there's no point. There's no point of him showing up. Why would he need to do that?
Yeah, absolutely right. Well, I'll tell you what. I'm glad that you're both here because we've got an important conversation. I want to welcome everyone, our TV and radio audiences worldwide, for a special conversation with the former Vice President Mike Pence. I'm Joe Matthew in Washington, here on Bloomberg, alongside Anne-Marie Hordern. And Anne-Marie, we're just hours off of the Republican debate, as we've been discussing in Simi Valley last evening. That was a debate that could end up being critical for the future of any campaign, including Mike Pence's.
Yep, that's absolutely right. The former vice president was at that debate, and we'll see what comes next for him, right? There's a few people who are saying potentially with his poll numbers, he might have to drop out.
That's right. Well, he joins us from California now. Mr. Vice President, it's great to have you back on Bloomberg. We welcome you, and I wonder your thoughts about that exercise last night. We were just playing clips of 3-4 people talking over each other for minutes on end, a lot of zingers, a lot of one-liners. One of the moderators even wanted to play a game of Survivor with you. I just wonder, to the extent that Ronald Reagan's legacy was invoked last evening in Simi Valley, did Republicans live up to the standard set by Ronald Reagan in that exercise last night?
Well, I'm standing here at the Reagan Library still, and, it was very special for me to be a part of the debate last night in here, because Ronald Reagan is the reason I became a Republican, and it was his conservative agenda, it was his optimism, and it was his civility that really defined the man and defined his administration. And last night's debate was at times chaotic, but I really welcomed the opportunity to make my case that I believe that while the former president and some others who were on that stage are steering our party away from Ronald Reagan's agenda of American leadership in the world, fiscal responsibility, even the right to life, that I'm the most consistent and tested conservative in this field. The opportunity to make that case here at the Reagan Library to the American people was a great privilege for me.
Mr. Vice President, you spoke a lot about what you're speaking about now, the fact that populism has taken control of the Republican Party. But if you look back to what Trump was saying in 2015 when he announced his campaign to become president, it reeked of populism. He was calling politicians dumb in his first speech. He was talking about draining the swamp. He was talking about the United States not beating anyone ever. He said, when was the last time we beat Japan? Do you feel responsible for giving credibility to populism in this Republican Party that we're seeing today?
You know, when Donald Trump came down that escalator, he told the American people he was going to make America great again. The first person to say make America great again was Ronald Reagan. And in that campaign, whether it was a commitment to conservatives on our courts, a commitment to cut taxes, a commitment to rebuild our military, Donald Trump promised to govern as a conservative, and I believe when he chose me to be his running mate, there was evidence of his seriousness about that. And for 4 years, we did govern as conservatives. We kept our word. On the world stage, we stood with our allies. We stood up to our enemies. We advanced the largest tax cuts in American history, and of course appointed conservatives to our courts at every level, including 3 of the justices that gave us a new beginning for life. But what I want people to understand is that Donald Trump makes no such promise today. Whatever his rhetoric was back in the day, and his rhetoric has remained the same, the policies that he's advancing now, which include a 10% tax on all imports into the United States that the Tax Foundation said would cost 500,000 jobs, is directly opposite of our administration and the Reagan legacy of cutting taxes for individuals and businesses. The way the president is joining a chorus in the party of embracing appeasement and isolationism and from supporting Ukraine in their battle against the unconscionable Russian invasion, that's not consistent with the way that we stood strong with our allies. We stood up to our enemies, turned our armed forces loose to take down ISIS. We actually, armed forces of the United States, took out 100 Wagner Group Russian military personnel in 2018 in Syria. We stood strong on the world stage, embraced our role as leader of the free world. Of course, lastly, just on the right to life, just in recent days, the American people have heard the president literally criticize states that enacted strong pro-life protections from the moment that an unborn child experiences a heartbeat, and he's made no commitment to support protections for the unborn at the national level. That coming from the leader of the most pro-life administration in history. That's what I mean when I talk about the president and some of his imitators walking away from that timeless conservative agenda. But if I'm president of the United States, the American people can be confident. I'll lead as America on the world stage, being the leader of the free world. We'll lead pro-growth policies, and we'll balance our budget and stand for life.
Your former running mate was, of course, not there last night, and some believe that he will win the Republican nomination without answering a single question in a forum like the one that you endured last evening. What should Donald Trump answer to? Would it be the trillions in debt that he added to the nation and left behind? Would it be his legal challenges right now? What is it?
Well, look, I think he ought to be there. He should have been there last night. He should have been there at the first debate. Look, no one is entitled to the nomination of their party. And frankly, Donald Trump continues to campaign as though he were the incumbent president. But think about this. He's campaigning as an incumbent, but he has less than 50% support of Republicans. That means half of Republicans are looking somewhere else. I think he owes it to our party to step forward and answer the questions. And they can be on those issues. But for my part, I think the president ought to explain, while having passed the largest tax cuts and tax reform in history, he now advocates what would be the largest proposal of tariffs, a 10% tariff on all imports, literally since the Herbert Hoover administration. And why the president, after we rebuild our military, stood strong on the world stage, is now joining a chorus of isolationists in the party, saying that support for the Ukrainian military is not sustainable, and joining others who were on that stage last night who would be fully prepared just to let Vladimir Putin overrun Ukraine. And of course, as I said last night, I think if Putin grabs Ukraine, that just gives a green light to Xi Jinping to move against Taiwan. So I think we achieve peace through strength, and I think the president ought to be willing to step up and explain why he's changed his mind about America's obligations, about leader of the free world, and why he's changed his mind on such a fundamental issue as taxation.
Well, you've talked a lot about your commitment to strong defense. We had on Senator Tommy Tuberville on this week, who said this. This was his quote. He said, "The U.S. military is not an equal opportunity employer. You are the father, you are the stepfather of men who have given their lives to this country, to our military." What does this have to say about the state of the Republican Party?
Well, I don't know the context of that remark. I think the armed forces of the United States throughout our history, from the founding of the country, have been an incredible meeting ground for people of every race and every background who've put on the uniform and served our country.
Mr. Vice President, I feel like we should put a finer point on that. We were asking him about his decision to vote against C.Q. Brown, the new chairman of the Joint Chiefs. He called him woke and said he wants to mix race into the military, and made that comment that Anne Marie just referred to. Is that the wrong view for this country?
Well, look, I believe, and I have great respect for General Brown, but I'm very frustrated when I see the political correctness in the woke politics that's taken hold at the Pentagon under the Biden administration. But I do know how it works. I've worked in a White House. I know how Pentagon works. I mean, we have civilian control of the military. I'm confident that that this woke politics is emanating out of the Biden administration. But look, that Senator Tuberville has every right to vote to confirm or not to confirm. But for my part, I've made it very clear that if I'm president of the United States, we're going to build a military fitted to the widening challenges of the 21st century. We're going to get this woke politics out of the Pentagon on day one. And that includes, we're going to reinstitute the ban on transgender personnel in the United States military. I truly do believe that is not in the interest of having a military that is that reflects unit cohesion, preparedness, is deployable. We'll put that common sense back into effect.
Vice President Mike Pence, thank you so much for joining us. That's all the time we have today. Thank you again. We hope you come back soon. Of course, the former vice president there, Mike Pence, he was on the debate stage yesterday.
Yeah.
He really is trying to do two things, I feel. One is to own the wins of the Trump administration that he views as conservative policy wins, but really put a very large gap between him and the former president when it comes to that populist rhetoric.
Straddling. What did you make of his answer there on the Tommy Tuberville question? He supported C.Q. Brown, but he wouldn't denounce the comments from the senator from Alabama. Try to give him a chance.
What's troubling about some of these comments is the fact that Harry Truman in 1948 issued an executive order that the military was an equal opportunity employer, and it desegregated the military. So,
and it has led the way in culturally in that sense in our country ever since.
Right. And when you hear things like this, and you also see what's going on with the blockade, the people I talk to in the defense world say, how do you attract top talent to these kinds of jobs which are so taxing? They don't pay as well as you could potentially get, say, if you worked for a defense contractor.
Right.
And if you want to have a family, they're very challenging because you're moving them potentially not just all over the United States, but all over the entire world. How do you attract top talent?
Recruitment and retention.
When this is the kind of rhetoric you hear.
Absolutely. Rhetoric's not cool enough here. I'm Joe Matthew in Washington, joined by Anne-Marie Hordern, following our conversation with former Vice President Mike Pence. Kaylee Lyons is with us in studio as well. Kaylee, he seemed to be feeling pretty good. He's still at the Simi Valley Reagan Library, making the rounds, trying to talk to folks like us to put a good spin on this. The narrative this morning, though, and I guess be curious to hear from both of you on this, is that it didn't move the needle. And I don't know if that's fair or not. It's pretty hard to tell when you're in the middle of things, but Donald Trump doesn't seem too worried.
Well, we'll find out in the coming days, right? If anyone got the kind of boost that, say, Nikki Haley got after her performance in the first debate. But the fact of the matter remains, we aren't talking about a narrow margin of point spread here between the front runner and all of these other 7 candidates. We're talking dozens of points, 40 points plus. So even progress toward narrowing that gap only goes so far, right? No one was going to have jumped 30-something points after last night's performance. And also, given that there are so many of them, which you were talking earlier, Joe, about Dana Perino asking everybody to do the Survivor thing and write someone's name down. I think her point, though, was this field is going to have to get smaller.
Sure, yeah.
So who is
going
to make that happen?
Or you ensure Donald Trump's nomination.
Exactly.
Obviously, nobody on the stage wants to play that game, although Chris Christie wrote down a name, it looked like.
Right.
Was it Trump?
He
said it was Trump.
It had to be Trump.
He said that. So hold up your paper.
He's very on brand with what his message is, where others, I feel like, try to talk about things that they think Trump voters want to hear, but then come back to what they think might win them a general, actually where their policy beliefs are.
Sure.
Chris Christie doesn't mess around in terms of his lane. He has a very specific lane. So I imagine he wrote Donald Trump.
He's also got a thing for Vivek, though.
But
That's what I
maybe
thought.
he wrote
Maybe there was a
Donald
V
Duck.
on the beginning of that. Donald Duck. Yeah, he could have had a moment if he held up the paper. Second time Ron DeSantis pushed back on an idea like that from a moderator. He wouldn't dance in I guess, a similar opportunity in the first debate. Will he be in the center of the stage in debate number 3? What do you think?
I don't know. I think Nikki Haley's looking pretty hot right now.
Well, and that would mean that someone did move the needle.
Yes.
a bit.
Well, believe it was the Biden campaign that came out immediately against someone right after, or was the Trump campaign? Because I've gotten too many flurries of emails and headlines. But someone came out immediately again on the opposition.
Yeah.
They're almost running against two oppositions, right? It's the person you might debate. You might have to debate in the general, and the person you have to debate to get to the general.
That's right,
But one of those camps came out immediately about Nikki Haley. So that says to me that's the person they're most worried about.
Well, and I wonder if when we're saying nothing really moved the needle, it's more that nothing changed the trajectory that already was underway heading into this, right? Because the trajectory was Ron DeSantis was going down in polls consistently. Nikki Haley was ascendant.
That's right.
So I wonder if we just see that pattern continue, even if no one dramatically closes the gap with the front runner, that if no one changed any real minds in the opposite direction from which they were heading. I wonder if that's how we should be thinking about it.
It's a great point. We've heard repeatedly by political analysts, some pretty smart people at this very table, that, the Biden administration, the Biden campaign, I should say, just really wants to run against Donald Trump again, that anyone else on that stage might be considered a greater threat, and the greatest among them would be Nikki Haley. That is, in fact, what's keeping people up at night at Biden campaign headquarters. What if she were the nominee? It would be quite a matchup.
Well, if Nikki Haley was to match up against Biden, the polls just show she would dominate. She would really
The
dominate this
hypotheticals
field.
would favor her, depending on the poll that you're looking at. And of course, we don't know where we're going to be then.
Exactly. We don't know where we're going to be November of next year.
Yep.
Most people don't know what they're eating for dinner next
Exactly.
week, let alone what they're going to be next November. Will we be in a recession?
2 months November, we
What
don't.
will gasoline prices be?
Exactly right.
Where will we be in terms of the fragility of the global order? What's going on with Russia's invasion of Ukraine, China? These decisions for most Americans are made that week.
Absolutely correct. And, we've talked about the cumulative effect, the peak impact, the lag effect of all these rate hikes. Kaylee, they could fall right in the middle of next year, dragging us into a recession, just as voters on Super Tuesday are pulling the lever.
Yeah, well, when you think about all of the potential threats to the American consumer and therefore American voter coming up, some of them were mentioned on the stage last night. The idea of childcare being an issue, the idea of potentially a government shutdown, not being able to sort out spending and keep federal employees paid. Gasoline prices and energy, of course, came up as well. The threat from China, potentially talking about cutting off trade from China, which could create all sorts of supply chain issues. That could potentially be inflationary. It could raise prices at home. I mean, there's so many different wild card factors to consider when we know that voters primarily are going to be voting on the health of the economy.
Yeah.
And we don't know what this economy is going to look like.
You have, as we've discussed, you add student loan payments to the picture, the impact of the shutdown. Anne-Marie, we were talking $95 a barrel just in the last 24 hours, right? I mean, hundreds in the cards, according to many analysts.
Well, potentially only $5 away.
That's
so
right.
it's
We're
very
basically
close.
there
And
now.
Brent's higher anyway. And that's
What does that mean
the
for
global
gas
benchmark.
while people are voting?
Well, it just trickles down at some point.
$4 plus, right?
Well, I think we're already there in some places, but national
the
average
average
is just under $4 a gallon. Remember when it was $5 a gallon
do.
that summer?
Not good for
And that
business.
was also peak driving season. What's so concerning, I imagine, for this White House is we're actually past peak driving season.
Sure.
Prices should be descending. So to see them come up, especially heading into winter, is very concerning.
We've been seeing
absolutely.
seasonal records because it is September, to your point.
Sure, yeah. We always think about the folks in the Northeast with heating oil as well. How'd you like to be buying diesel on a regular basis?
That's very difficult.
Yep.
But last night, everyone was trying to invoke on the debate stage that I'm going to make America energy independent. Well, we already are.
Gavin Newsom was dispatched to make that point.
We are almost going to pump this year alone 13 million barrels a day. Saudis are under 10 million barrels a day.
How about that? Yeah.
So we are very much so ahead of the world when it comes to that. But
facts are
it
stubborn on this one.
Yeah, it
but
doesn't.
Nobody wants to acknowledge them. Anne-Marie's covered the oil patch for years. Take it from her.
Gavin Newsom and Sean
or check
Hannity
your
really
terminal.
went at it, actually.
They did.
And Gavin Newsom said, no, I'm not going to stop until I tell your viewers this fact.
Yes, right.
I'm
Which
not
is
taking
why-
a side with Gavin Newsom or Sean Hannity, but the fact of the matter is it's going to be a record year of production. And I like to look at the barrels of oil that are hitting the market.
It's just in the numbers. I don't know. That's why I'm looking forward to the Gavin Newsom Ron DeSantis debate more than most of these primary debates. But maybe that's just me.
They probably saw each other yesterday.
I'm sure they
with
did.
Sean there.
I'm
You
sure
could
they
have had like a little
did.
mini preview of
Let's
the
see what
debate.
you can dig up for us on that. Anne-Marie, great to see you. I'll meet you a little later on Balance of Power. Kaylee Lyons stays with us. Let's bring you up to date on world and national news now. Leslie Lotto has that in the newsroom in New York. Hi, Leslie.
Thanks Thanks, Joe. House spending bills drifting further into the domain of hardline conservatives and away from swing district members, highlighting the threat of a shutdown Sunday. Bloomberg's Amy Morris explains.
House Republicans on the Rules Committee advanced a measure to remove $300 million in aid to Ukraine from the defense spending bill, even after members rejected a similar measure in a floor vote. And House Republicans added a series of conservative amendments, including a measure that would effectively eliminate the salary of Defense Secretary Lloyd Austin. The increasingly conservative spending bills are now getting pushback from moderate Republicans. In Washington, I'm Amy Morris, Bloomberg Radio.
And Joe, y'all been talking about Gavin Newsom. He was invited last night to the debate, as you said, as a pundit. He was asked which celebrity holds political power, and guess who he chose? Taylor Swift.
She was able to accomplish just getting.
I'm Leslie Lotto, Bloomberg Radio.
Profits, headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are holding on to gains, shaking off a choppy morning session. Stocks rebounded, led by the tech sector, ahead of an afternoon speech from Fed Chair Jay Powell. Treasuries mixed. Right now we've got the S&P up 19, holding on to a gain of 0.5%. The Dow's up 63 points, up by about 0.2%. NASDAQ, the composite index, up 90 points now, higher by 0.7%. 10-year yield at 4.60%. We do have the 2-year now yielding 5.07%. Spot gold down $10.50 the ounce to $18.64, down by about 0.5%. Crude, which has been on a tear lately, retreating today. West Texas Intermediate crude at $91.69 a barrel. It is lower now by 2.1%. The rising price of oil and energy policy certainly a concern in last night's Republican presidential debate. It is also a concern for economists and what it means for consumer spending. David Leibovitz is global market strategist at J.P. Morgan Asset Management.
The reality here is that higher energy prices are a direct tax on the consumer, but the labor market is still relatively tight, and year-over-year wage growth at 4.5% should allow the consumer to play a little bit more defense there. On the other hand, you think about energy stocks, you think about the capital discipline that these companies have adopted over the past couple of years, you think about what they've done with their margin, and I think you're just going to have more of a direct pass-through from those higher oil prices through those companies to their bottom line.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. ExxonMobil shares down along with the price of crude, down 1.3% right now. ADRs of BP, they are down by 0.3%. Chevron down 0.7%. Again, to be clear, we've got West Texas Intermediate crude down 2.1% right now, 91.72 a barrel. So again, recapping here, green on the screen with the S&P up 20, up by about 0.5%. I'm Charlie Pellet. And that is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
So we've got no comments from the big three on this important Bloomberg story that gives us a peek, maybe behind the curtain, into negotiations here. Kaylee Lines, the UAW now, according to sources, has 30% in mind. As once we're done with all the negotiations, this could be today or I guess weeks from now, that a 30% pay raise is the magic number for them to be happy and continue to attract union members. Their last check, 36%, if I remember.
Right, and they started at 46%.
Yeah.
Which kind of calls into question, is this just the art of the negotiation,
Absolutely,
right? You go
yes.
for something that Sean Fain described himself as audacious, 46% wage increase, knowing maybe, perhaps, what you really would settle for was a lower 30%. Or maybe it's just that they hadn't made adequate progress. They realize they're not necessarily going to get what they want from these automakers, and 30% is their new number that they think might be realistic. My question, though, Joe, is the wages are one thing. There's so many other different components to this negotiation.
Exactly.
Related to pensions, job security, et cetera.
Sean Fain said you could double our pay right now, we still wouldn't have a deal.
Right.
Because it was about retirement and benefits.
Yep.
Maybe that's also part of the theatrics of negotiating. Keith Naughton joins with more on this. In fact, he shares the byline on our story on the terminal. Bloomberg News auto reporter. Keith, it's good to see you. What do you make of this based on all the language we've heard until now? Is Sean Fain just talking tough, or does this union still want a pension plan?
As our scoop shows, the union is really into the horse trading phase now of negotiations. The 30% number is one they feel would satisfy the existing membership. It would be the largest raise in history for them, and also hopefully entice non-union auto manufacturers like Tesla and the Japanese and European automakers in the United States. So that's the goal. There are, as you say, many components to negotiations. Wages are just one of them. It's a very complex puzzle. There's a lot of other pieces that have to fit with this in order for them to get a deal.
Well, we just had, Keith, a headline crossing the terminal here that the UAW says it submitted a counter offer to Stellantis Thursday, which of course is today. I guess we'll see if Stellantis then returns that. To this idea, though, about 30% being something that they are willing to settle for, it really ultimately at the end of the day is a question of whether that is something the automakers are going to stand for. Considering Mary Barra, the CEO of GM, was saying it costs too much what they are asking for. Can GM take the cost of a 30% wage hike?
So the way they will get here is with the restoration of cost of living adjustments, known as COLA. Ford has already said they're willing to bring back COLA, something the union lost back in 2008. And with the way inflation is going at over 3% a year, or 3.7%, that goes into base wages. So that closes the gap quite a bit. It doesn't make them as far apart. The union's last offer was 36%. Ford and GM are offering 20%. You start baking in cost of living adjustments over 4.5 years, and suddenly that 30% number seems more achievable.
Well, the next deadline is tomorrow, much like we saw last week. Keith, what are the odds here that the UAW, in fact, expands the strike further? Of course, there's likely not going to be a breakthrough overnight. And if that's the case, is Ford back on the list? They were spared expanded strikes last week. Is it all three of the big three this weekend?
I think that all three could have an expanded strike as of tomorrow. Ford was making very good progress. We hear that slowed a bit, but they're still very active. The union is still very actively talking to all three companies. As you said, there's the new offer the union just made, or counter offer the union just made to Stellantis. So there's a lot going on. It's hard to know exactly, how things will turn out tomorrow with Sean Fain, but they do seem to like to ratchet up the pressure each week with additional plants.
You say there's a lot going on, Keith, and obviously this is all coming against the backdrop of an ongoing 2024 presidential election cycle, and the two leading candidates for each party each made their own respective trips to Detroit this week. President Biden, of course, invited by the UAW, greeted by Sean Fain, former President Trump not so. Did either of them move the needle with the union, with these workers that they were trying to express support for?
Well, I was out on the picket line the day that President Biden was visiting, and the workers seemed very impressed with that visit. It was historic, the first time a sitting president has joined a picket line. But, the union vote in Michigan is really kind of up for grabs. Right now, polls show Trump is winning more union households than Biden. That has changed over the summertime. Trump has hit a very resonant note by warning that the switch to electric vehicles will be a job killer. That's something UAW workers are very worried about.
What did we not see in the president's visit, Keith? If you were there, was he signing union signs and placards, signing hats and T-shirts, taking pictures? How long did he stay after the cameras turned off?
It was a very brief visit, but he was fist bumping the workers. He was walking among them. When asked if he supported the union's initial request for a 40% raise, he said he did. That was the first time he'd ever said that. He was very engaged with the workers. He wasn't up on a rostrum. He was down standing on a packing pallet, speaking through a bullhorn.
And finally, we only have about a minute left, Keith, but do we have an understanding at this point of how much money the union is working with here in this strike fund, given how many relatively restricted members are striking at this point?
Yeah, so they started this with $825 million in the strike fund. Each worker gets $500 a week, but they also get benefits, so it really adds up to $750 a week for each worker. But they've kept the number of workers relatively low. So yeah, they're very judiciously handling the strike fund.
Thanks for joining again, Keith Naughton, Bloomberg News auto reporter. Great reporting today. An important scoop on the terminal: 30% pay raise, at least on the back of the napkin at the UAW. I'm Joe Matthew, along with Kaylee Lines. Still deeply curious to see what happens to Tesla if they pull this off, Kaylee, but that'll be the story for another day.
Yeah.
The fastest show in politics, live from Washington. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. We're keeping an eye on shares of Workday. It is now down the most in 3.5 years, tumbling 9% after trimming its long-term forecast for annual subscription revenue growth. Workday is a maker of human resource management software, and its forecast came during an investor presentation. Apple shares are trading lower. Some of the first owners of Apple's iPhone 15 Pro and Pro Max are complaining that the new devices get too hot during use or while charging, a potential setback for the company's flagship product. Dan Ives is a senior analyst at Wedbush Securities. He's got an outperform rating on the stock along with a $240 price target.
And it's typical Cupertino. They're going to fix it. And if you look ultimately at the demand for this iPhone, it continues to be, I think, much better than expected.
Johnson Controls International, a multinational maker of fire, heating and cooling and security equipment for buildings, has been hit by a cyber attack. And with more on that story, here's Bloomberg's Steve Rappaport.
Charlie, Johnson Controls said in a filing that its internal information technology system was struck by an attack and that it's still assessing what might be affected. It says many of the company's applications were largely unaffected and remain operational, but other parts of the business have been disrupted. The Milwaukee-based company says it's still assessing whether the attack will affect its finances or the release of its results for the fourth quarter and the full fiscal year. Charlie?
And that's Steve Rappaport reporting. We do have Johnson Controls down today on an update for the rest of the market. Johnson down now by just about 2.4%. And those are some of the top company stories that we're following at this hour, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Live from Washington, where we keep you up to date, of course, on the regular. Bloomberg Business Week is only a few minutes away. Let's get to New York right now for world and national news with Leslie Lotto in the Bloomberg newsroom. Hi, Leslie.
Hi there. As we get ever so close to a government shutdown, federal workers starting to get notice. The shutdown appears imminent. Messages recognizing there's a growing risk for millions of employees and military service members who could stop getting paid this weekend unless Congress can stitch together a last-minute deal to extend government funding beyond Saturday. COVID's toll often measured by hospitalizations and deaths, but there are other debilitating symptoms bound to linger, including increased rates of fatigue, dementia, and heart disease, which could surface years or decades later, as we hear from Bloomberg's Amy Morris.
COVID's impact has extended beyond the direct effects of the coronavirus. Stay-at-home orders and other measures aimed at slowing the contagion spread led to postponed medical care for other diseases. The National Institutes of Health says new cancer diagnoses fell abruptly early in the pandemic. Plus, there were disruptions to education, jobs, and incomes of people around the world. Even though COVID is no longer a global public health emergency, its legacy will be felt for a long time. In Washington, I'm Amy Morris, Bloomberg Radio.
California Governor Gavin Newsom invited to last night's Republican debate as a pundit apparently considers himself a Swiftie. He was asked which celebrity holds political power. He chose Taylor Swift.
What she was able to accomplish just in getting young people activated to consider that they have a voice and they should have a choice in the next election, I think is profoundly powerful. And I think she's using her celebrity for good.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leslie Lotto, and that was for you, Joe. This is Bloomberg.
Thank you very much. I do appreciate that, Leslie. We think we see you on the other side of the room there somewhere. A distant Leslie Lotto. Kaylee, we've still got a government shutdown to deal with. Are we 2 days away?
Yeah.
I'm losing track.
By my calculation, we're like 57 hours out.
Oh, very well. So we have a countdown clock at Bloomberg.
Is that math right? 51 hours?
I was told thered be no math. I spoke earlier with Dusty Johnson, the congressman, Republican congressman, South Dakota, forgive me, is the chair of the Main Street Republican caucus and was perplexed by everything going on right now. And in fact said shutdowns are stupid, but also decried the level of government spending that he thinks helped to bring us here.
We have got to get our act together. We have an opportunity in the next 4 days to show the world that American debt instruments are indeed zero risk, that it may be messy, it may be noisy, but in the end of the day, America will have its financial house in order. We fail to do that, there will be negative repercussions.
Negative repercussions. He wasn't pulling punches there. He's pretty upset with Matt Gaetz by name and doesn't see a path that he can articulate, Kaylee, but is still holding out hope that we won't shut down.
There are a number of Republicans who are mad at Matt Gaetz by name. Congressman Mike Lawler, who's one of the ones who said he would be open to signing on to a discharge petition if necessary, also said this is about one individual and we will not be governed by him. Interestingly, a headline just crossing the terminal here, Joe, the Freedom Caucus demanding that McCarthy publicly reject the Senate's stopgap measure.
Yeah.
This isn't getting any easier.
He's going to get pulled into a room with Mitch McConnell. That's going to be interesting.
But he doesn't want to be in a room with McConnell. He wants to be in a room with President Biden.
Well, it's interesting because he got a deal with President Biden.
Right.
To avoid a default several months ago, yet we're still doing this. You know who helped to pull that deal together in the end was Dusty Johnson.
Indeed.
And he remembers, by the way. But he authored the CR in the House that's coming up. Let's see if that goes anywhere. That'll give us a good sense of really what's going to be happening in the next 24 to, what did you say, 50
60-something hours, less than 60.
Okay.
Midnight Saturday, people.
With
That's
Kaylee
the deadline
Lines,
we're working
I'm
with.
Joe Matthew. That's true. Midnight Saturday, Saturday Night Live. We'll see you on Balance of Power later. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
A very good afternoon, everybody. It is Thursday, September 28th, 2023, live in our Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. Carol Masser, Tim Stenivek, and yes, we have a flurry of headlines crossing, and I feel like, where should we begin? Where should we begin? But let's go to NVIDIA, because the Wall Street Journal reporting that its French offices have been raided in a cloud computing competition inquiry. France's competition authority raiding NVIDIA's local offices this week on suspicion the company engaged in anti-competitive practices, the first significant regulatory scrutiny that the company has faced since its rise to be the paramount supplier of artificial intelligence chips. You think of AI, you think of NVIDIA this year.
Shares actually not taking much of a hit on this news, Carol. They did dip down a little bit when this journal report came out, just a little bit before 3 p.m. New York time. Still higher right now by 1.2%. Not the only story we're keeping an eye on right now. Endeavor, Fenway have been said to explore a PGA deal to rival Saudi Arabia's. That's Ari Emanuel's Endeavor Group Holdings, Fenway Sports Group as well, which owns the Boston Red Sox and Liverpool Football Club. They're among the U.S. investors exploring investing in the PGA Tour, providing a possible alternative transaction to a pending deal with Saudi Arabia's public investment fund. That's according to people with knowledge.
Yeah, remember in June, the PGA Tour agreed to that kind of shock merger with
Live Golf.
With golf, and
Live Golf, yeah.
It's like, it was pretty shocking, certainly to the sports industry, the golf industry. So this is an interesting little twist, if you will. We're going to talk about that and so much more. And we've also going to mention there's a Tesla story that just crossed the Bloomberg as well. Tesla sued by the U.S. Equal Employment Opportunity Commission, which alleges it created a hostile work environment for racial minorities at its California factory. All of this just breaking in the last few minutes. So we've got a lot to talk about. We do also want to mention that front and center is the economy. We got some weak U.S. personal consumption data, its weakest advance in over a year. And on that, Richmond Fed President Tom Barkin will be live on Bloomberg in less than 30 minutes. So we have a lot to talk. That is one of our big macro stories, kind of where we go from here in terms of monetary policy and the economy and the rate environment. Tim.
Plus, in the magazine, Google's user data, how it's become a favorite shortcut, Carol, of police.
Man, this is an incredible story. We're also going to talk a little bit about Nike. We've got earnings after the close, what it means when a country stops being the world's leading food supplier. And oh, by the way, that country, it's the United States. So add that to your list of worries. All right, everybody, we are going to talk the markets and some of that breaking news. We're going to head over to our TV colleagues, Romaine Bostick and Katie Greifeld. Countdown to the close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostick alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Tim Stenivek. Welcome to our audiences across our Bloomberg platforms here on a Thursday afternoon. Markets in the green pretty much across the screen here, but a lot of volatility in between.
Yeah, absolutely. A lot of volatility seems to be the name of the game over the last couple of weeks. We're going to hear, of course, from the Richmond Fed president in a simulcast, Mr. Tom Barkin. So we'll be able to talk about, maybe we'll get some clarity in terms of monetary policy. But guys, the explosion of news in the last couple of minutes. NVIDIA still up on the day, up about 1.25%. But you're talking about that inquiry, right? A French raid of NVIDIA offices, the concern about competitive practices, which is pretty interesting. This has been the year, it feels like, for NVIDIA, right? On a tear, top performer. You think of AI, you think of this company. This is an interesting twist, perhaps.
It is, and we don't know, too many details about this yet, but one thing we do know is that regulators in Europe traditionally have been harder on big tech companies and big American tech companies, so that's important to keep in mind. In fact, the reason we saw Apple's new USB-C connector for its iPhone 15, Romaine, is a result of legislation in the European Union.
Yeah, they've certainly been leading the way here, and Carol, you mentioned sort of the fire hose of news. We were just talking on the television program here about this potential Endeavor deal, of course, the company controlled by Emmanuel, which is kind of a serial deal maker. But according to Bloomberg reporters, that Endeavor is teaming up with Fenway Sports Group and exploring a possible bid into the PGA Tour. And of course, we know there's a big reason why. Of course, all the sort of hullabaloo of the Saudis starting their own league and then having sort of that backdoor acquisition effectively of the PGA Tour, and then everybody saying we can't let the Saudis control this, so we need some American investors, and well, here are two that apparently might be willing to step up to the plate.
It is a fascinating development in that story, which was already really interesting. And Endeavor, I find fascinating as well, because this company has been pretty aggressive in the sports world, not just with golf, but also with wrestling, a sport I have to admit I don't follow too closely, but apparently there's a lot of money in it.
You did call it a sport.
You seem like
you did call it a sport.
I did. I mean, it requires athleticism. You can't
jump off the
You
top
seem
rope.
like such a wrestling
There's
kind
also,
of
don't
gal.
forget about UFC also, Katie.
Love to get in the ring and just
UFC
like
is huge.
Jimmy Superfly Snuka. Am I the only old person here who remembers him?
Anyway.
Can we talk about this for a little while longer?
What? Snookums?
I mean, I think this is most interesting for the players, you know, the PGA players who were upset about, you know, some of their former colleagues leaving the PGA and going and playing for LIV and getting those huge paydays.
Can we just admit, though, this was kind of a mess, like the way this was handled at the start. Yeah, well, it still is.
Yeah.
Yes, thank you. But I mean, it was just kind of a mess the way it was handled. So maybe, I don't know, maybe they find a way to sort of right this ship.
Yeah, I don't know. We'll wait and see, right? It ain't done yet. And could they end up ultimately, you know, being just another partner with Saudi Arabia and their public investment fund? Could they just be another partner in all of this? And does that make it more, I don't know, comfortable for everybody involved in the sport, you know, in terms of kind of getting it done and getting it through? Can we also talk about Tesla? I don't know. I think I heard you guys talking about
Yeah,
they're
we mentioned
sued
this. Yeah, go ahead.
for racial discrimination by the U.S. Equal Employment Opportunity Commission. They are talking about a hostile work environment for racial minorities at its California factory. Not the first time that I think that factory.
Yeah, when I saw the headline, I was like, oh, okay, which case?
Perhaps.
Thanks for catching up.
I mean, yeah, there was. We should point out there was a state case that California had brought, but this is a federal case.
Yeah, I mean, perhaps that's why we're not seeing the stock move. Tesla first revealed that it faced an investigation by the EEOC back in April of 2022. That was in a regulatory filing, so this has been a long time in the making.
Hey, and if you want another headline, the Freedom Caucus down in Washington, they've actually told Kevin McCarthy, the House leader, they're not going to accept any kind of stopgap spending measure. They want it full.
What?
So there you go.
What?
Yeah. There you go.
Oh my God! Just never
Working
ceases
hard.
to amaze us.
535 members of Congress, 535 clowns.
Actually, and they're, I think, working.
How do you really feel,
I think
Romaine?
they're working for all of us, right? Don't we think?
I don't think so. I think they're working.
Do
for
they get paid if the government
lobbyists that
shuts
put them in
down?
Yeah,
office.
well, that's
Do
true.
they
That's a
get paid
given.
if the government shuts down?
I think
Probably
they
not.
get paid under the table, Tim. You know that.
Oh, again, another Bloomberg opinion piece.
Romaine, I really like your suit.
All right.
Thank you. This might be the last day to see.
I really like that suit. That is
All
a
right,
good-looking
guys,
suit.
we will be back in less than an hour's time. Lots happening on this Thursday. We'll count you down to the close. Beyond the Bell. Join us at 4 p.m. Wall Street time. We are watching a late deal to avert a U.S. government shutdown beginning this week, and not likely House Speaker Kevin McCarthy making big demands of President Joe Biden, bringing little leverage to the class. We heard also, you know, Romaine just mentioning about the Freedom Caucus. I mean, it just feels like, why are we always here again?
I mean, I don't know what you were doing last night, Carol, but 7 of the Republican contenders for the presidential nomination spent 2 hours hammering each other. I actually saw about an hour of it.
I saw about an hour. I think you saw probably the first hour. I saw the second hour.
Yeah, I saw the first hour, and then I was asleep. They hammered President Joe Biden. They hammered the absent frontrunner in a debate that often felt close to chaos. There were indeed some sparks.
Yeah, there were. And what I heard from the commentators, since I missed the first one, is that the second hour was a lot more, I think, calmer and controlled. The first one was a little crazy. Let's get to it, though, with Eric Wasson, congressional reporter for Bloomberg News, joining us from Washington, D.C. Stephanie Lai is national politics reporter for Bloomberg News. Stephanie Lai. She joins us from Simi Valley, California. Let's start with the debate. And Stephanie, let me take you. Take us there. Tell us about the environment in the room and what the takeaway was from those that were up on stage.
Certainly. Well, the second debate was definitely a much smaller venue and event than the first debate. But what we saw here was essentially the candidates all recognizing their underdog status and trying to take whatever chance they could to make an attack towards Biden or Trump and to really make that standout moment for themselves to appear as the alternative Trump candidate. And, as we saw, that had varying levels of success. A lot of times it ended up causing just crosstalk and chaos and, unintelligible speech as everyone tried to talk over each other. But there were some standout moments. And in fact, Nikki Haley did a really good job at trying to establish her platform in ways that I think the national stage hasn't heard from her before.
I will say once again, just like in the first debate, I think the real winner was Ronald Reagan. Like, I can't believe this. It's like every debate that happens, it's like, the ghost of Ronald Reagan is present. I mean, they're showing clips of him.
Kinder, gentler Republican?
Well, here's the thing that surprises me, Stephanie, is the Republican Party of today is not the party of Reagan in the 1980s. It's completely different. Can you talk a little bit just about, not necessarily the history here, but sort of the positions and how these different candidates are trying to differentiate from one another in a pretty crowded field?
Certainly. And I think you raise a really good point. They're very quick to invoke Reagan's, history and his legacy as a president, especially just knowing his popularity. But when it comes to their actual policies, I think where the Republican Party is now is very different than where it was back then in terms of how we view foreign policy. In terms of just our economic outlook, it's a very different world. And I don't think that, they can really compare it apples to apples, but they are very quick to make that comparison.
All right, I do want to, Eric, I want to bring you also into this discussion because I'm assuming that what's going on in the halls of Congress right now is, I don't know, I'm assuming they're not talking a lot about the debate and they're assuming about getting some kind of deal done, but where are we when it comes to this government shutdown?
Yeah, well, it's very interesting. We just saw the Freedom Caucus, the 27 members of the House who are really on the forefront of this shutdown question, writing a pressure letter to Kevin McCarthy saying you've got to publicly renounce the Senate stopgap bill. The Senate's trying to, pass a bill, by the weekend, probably by Sunday hours after the shutdown's begun. They'll keep the government open for 47 days and provide some Ukraine aid. There's a nascent effort over in the Senate to add some border security money in there by Republicans, maybe Kirsten Sinema, maybe Joe Manchin get on board. That may make it easier for Kevin McCarthy to put that on the floor, but it's all very early days. And at this point, there's still too many never CRs, as we call them, never stopgap people in the House, hardcore conservatives who just will not vote for a stopgap. So we're still seeing a shutdown as a virtual certainty up here.
So, Eric, since the shutdown is a virtual certainty, it's probably about time we talk about what that means for not just your own schedule, but also what it means for economic data, because that's something we follow so closely here at Bloomberg. It's something that our clients and customers really care about. What can you tell us about what data we will and will not get if the government does indeed shut down?
Yeah, it's much worse than the 2019 shutdown. During that time, the Labor Department was at least kept open, so we saw BLS data coming through. This time, it would be a complete shutdown of all the agencies, so we won't see BLS, we won't see Commerce Department data. We just heard that the CBO, which sometimes gives us some deficit numbers, will close October 10th without its own appropriation. We're just seeing a lot of lack of data, and this is a crucial time. The Fed is going to look in November whether it's going to raise rates or not. They'll be flying blind, essentially. So just adding to the risk and general, uncertainty that's going to hit the economy under a shutdown.
Hey, Eric, before we go back to Stephanie for more on the debate, are members of Congress talking at all about the Republican presidential debate, the second one? It is pretty shocking, Stephanie. I mean, that, the one who is really leading in the polls hasn't been up on that debate stage. And I think, I know Chris Christie tried to press the idea that, the guy who wasn't up on the stage. I think there was, when they played the game of Survivor, like who should be voted off. I think that's when nobody wanted to answer. It was kind of funny. And then one of the questioners noted that Christie had written something, and that's when Christie went into, well, the guy who should be voted off, right, is the guy who's kind of not here.
You called him Donald Duck.
Donald Duck. Yeah, right. I think they should all stop being comedians or trying to and just deal with policy. Did we get more substance in terms of policy? Was that kind of the feeling at all last night, Stephanie? I watched it. I felt like I got a little bit of feeling, but I don't know.
Yeah, I mean, I think from my perspective, it didn't seem like anyone had introduced any new policies. I think they all took the opportunity to try to highlight their biggest talking points, things that we've already heard them say in their stump speeches and just, reiterated on this national stage. I mean, it did seem like Haley did reiterate her different stance, her more hawkish stance on foreign policy compared to the other candidates. And that kind of led to the little squabble between her and Ramaswamy over TikTok. But beyond that, I don't really think that I really caught any really different policies.
Well, I just have to say, we do, though, know who's sleeping with who in terms of their wives.
What?
Yes, we do know that.
You missed a good one. No, I mean, there were some awkward moments, but anyway.
Wow.
Google it. Pence, teacher, wife.
Carol, maybe this is just my own observation, and Stephanie, Eric, jump in here if you noticed this too. You probably didn't, Stephanie, because you were there in person. But the first part of the debate, they spent a lot of time talking about China and really in an aggressive voice. I was watching it on Fox or Fox Business. I don't remember where I was watching it. On YouTube TV, the first ad in the first break for TikTok. ByteDance is a Chinese-owned company that is spending lots of money advertising during the debate. I thought that was kind of an interesting juxtaposition.
Yeah, I mean, certainly. It is definitely still something, and I think Ramaswamy's position on this is quite different than the other candidates, and it seems a little off base from where the Republican Party is at, just based off the response that he got. But that I did not realize that happened. That's really interesting.
Yeah, and then they also spent some time later in that hour talking about TikTok as well, which again, it's like these are pervasive things in a lot of lives, and they talked about it in relation to kids using their phones too much and fentanyl. It was the kind of wild drugs.
Yeah, they do. So Eric, are you working through the weekend? Are you expecting to?
Yeah, I'm expecting to. Yeah, I mean, I think we're going to see a lot of imagination. If we get into a shutdown environment, the Senate group may, hold a lot of backdoor talks that we've kind of things we've covered during the debt ceiling. So, yeah, I think it's going to be, an all hands on deck situation once we get into the shutdown.
Is this whole process, we've been here before, we've had shutdowns before, but is it really hampered by not having a House Speaker who really has the backing of his party? And just got about 30 seconds left here. I've just been kind of wild and curious about the role of Kevin McCarthy in all of this, or lack thereof.
Yeah, I think so. I think he's dealt a very tough hand. The country's very divided, and he has a tiny, majority. He can only afford to lose 4 votes. I think if he had a 20-seat majority, that would be a different story. He could probably pass the conservative offer, put it out there, put pressure on Biden to do something on the border. Maybe Biden feels some kind of pressure, does something. Sends more migrants back by plane. Does remain in Mexico. I don't know what. He can't even make an offer. Because these guys, he can't corral these last few members. So he's really dealt a tough hand.
In Congress, on the debate stage, politics, unusual. That is our world. Guys, thank you so much. I know we went back and forth a little bit, but we so appreciate getting both of your views on all of this. Eric Wasson, busy guy, congressional reporter at Bloomberg News. Stephanie Lai, also busy national politics reporter at Bloomberg News out there in California. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a developing story and a headline from the Bloomberg Professional Service. Former President Donald Trump has lost a bid to delay his October 2nd asset value fraud trial in New York. Meanwhile, sources tell Bloomberg Ari Emanuel's Endeavor Group Holdings and Fenway Sports Group, which owns the Boston Red Sox and Liverpool FC, are among American investors exploring investing in the PGA Tour, providing a possible alternative transaction to a pending deal with Saudi Arabia's public investment fund. Stocks do remain higher. 38 minutes to go ahead of the closing bell. The S&P now up 34, a gain of 0.8%. Dow Jones Industrial Average up 173, up 0.5%. Stocks are rebounding, being led higher by the technology sector. NASDAQ up 1.1%. The NASDAQ 100 index also up 1.1%. 10-year yield right now, 4.58%, with a 2-year, 5.06%. Spot gold at $18.65 the ounce, a drop there of 0.5%, while West Texas Intermediate crude oil is down 2%, 91.79 a barrel. Monica DeCenzo is head of global investment opportunities at J.P. Morgan Chase Bank, and on surveillance today, she said she sees the S&P 500 index up 14% by the middle of next year.
I don't want to pretend there's no risk here, because there is, and what we've seen the last few days has been choppy, has been challenging. People are definitely nervous. What I think is interesting about that call is on the bear case, we're looking for maybe 5, 6, 7% downside. There's significantly more upside. That's the kind of skew and risk reward that I find interesting when you look at equities here.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Uber, DoorDash, and Grubhub have lost an attempt to block a New York City rule setting minimum pay of $18 an hour for food delivery workers, handing the city a victory in its attempts to rein in the now ubiquitous services. Uber up 2.9%, DoorDash up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glennmead.com to learn more.